All right, looks like it is streaming now. Okay, hi, good afternoon, good evening one more time. How's everyone doing? Uh, YouTube, please confirm if the audio video seems all right. Sure, we'll start with Yo-Yo. Hi, Anirudh, Akash. Hi, Jezil, TR, Rudrawala01. Good, it is working. Everything is set up, right? So we're good to start. All right, fantastic. Good, happy to have you. Happy to have all of you here. Thank you for coming on a weekday afternoon. Welcome to Crash Course CFA Level 1 2026. Last time I did this was in 2021. And we did 5 really, really long sessions. I think each session was about 10 to 12 hours. We streamed them live on YouTube. I had great time. I think students also found it all right. This time, I'm trying to do it in 6 half-day sessions. So I've condensed the time by about 30%. But I'm not reducing the content. Right? I've just figured out a better way to deliver some of the content which is more time efficient. So, which means in less amount of time, my job is to give you as much value as we can, so that in the least amount of time you absorb the material. However, there is a chance that I'll not be able to finish it in 6 sessions. Okay, there's a possibility it might not happen. I'm making an attempt. If it doesn't happen, then I'll have 2 choices. One, just squeeze in the 6 sessions, or second, extend the time. You can imagine my choice would be option 2, right? So right now the plan is to do 6 sessions. In case if I feel I need more, then I'll let you know after the 4th session. So in the final week, instead of 2, we might do 3 or maybe even do 4 sessions. That's the plan. It's a crash course, but I plan to cover almost everything that I feel is testable. Which means even some of the minute details like disclosure or theoretical concepts. The focus is purely exams, right? So the idea is that you go through this material multiple times and it helps you capture as many points on the exam as possible. Throughout the session, I'll be giving you 5-star, 4-star, 3-star concept, which is my perception of how important that concept is, right? Now, no one really knows what actually shows on the CFA exam except the students who are taking the exams. They're obviously not allowed to go and talk to other people. That's a violation. However, as a teacher or an instructor for last 14, 15 years, the areas that I think are important, I'll be highlighting them for you. I'll be giving them a 3-star or a 2-star or a 5-star, different star ratings, 5-star being the most important. Now, how to use this crash course? I'll start using my screen here. Some general rules with respect to how it's going to work. As I said before, we're planning roughly, I'm guessing my screen, is my screen visible here? No? Okay. There's going to be a little lag because what screen you have on the projector is coming from YouTube. So there's going to be, I think it should be there now. Okay. So we have, as I said, total of 6 sessions. That's the plan as of now. I plan to cover almost everything in these sessions, in the 9 subjects that I'm covering comprehensively. I'll give you a hierarchy of what I plan to do. Today happens to be session 1. Session 1 will be doing FRA. Session 2, which will happen day after tomorrow. So we have 2 sessions per week, one on Tuesday, one on Thursday. Timing would be 4 to 10 p.m. IST, India time. Session 2, we are looking at doing corporate issuers, plus we'll be doing equity. These 3 subjects, I generally feel like they go really well together. Like it's a little bit like pairing. Some of the concepts from FRA you can pull in CI or equity. Then in session 3, one entire session for quant, since it's a large subject. A lot of people have difficulty with certain sections. For example, hypothesis testing is one area people are worried of, regression. So I'll be giving you certain points, even if you're not good with hypothesis as a whole, but certain important points that you can remember or understand and at least get through the exams. Then session 4 will be doing portfolio management, plus we'll be doing economics. It's going to be a longer session since we have to cover a lot that day. Then one entire dedicated session for fixed income. As you might know, that fixed income is a very large subject, right? Almost 18 to 19 elements. And then session 6 will be knocking off remaining assets, derivatives plus AI. What I'll not be doing in this crash course this season is ethics. However, whenever we take a small break, we can discuss on how to prepare for ethics, right? So we can have that conversation from an exam perspective. So that's roughly the plan. Now, the second thing I told you, how to use this crash course. So there will be these 6 videos or 6 live sessions, depending on whether you're attending it live on YouTube or you're attending it on, you're watching it later on. So you'll have a pack of total 6 videos. These videos will remain on YouTube. These videos will remain on YouTube free forever. Okay, so which means if someone is preparing for exams in May, August, in the future, they want to come and revisit these videos, they can, of course, come and revisit them. Third, what I will be doing is making use of FinTree juice notes primarily, and some of the screenshots from juice notes which I think are important or the areas that I've decided to discuss, I'll be converting to my class notes here, what I'll be using. Now these class notes will be shared with you. Juice notes will not be, of course you can purchase them on the FinTree website. However, a lot of important pieces from juice notes I'll be extracting. I'll be putting that on my PDF, which would be called as a class note. So for every video, there would be a companion PDF available at a later stage. We'll put that in the, sorry, क्या बोलते हैं उसको video के नीचे? Description. So we'll put that in the description, so you can download, use those class notes whenever you want, right? And I think this will be a fantastic resource for you to revise multiple times. Okay, the strategy will be everything that requires some level of calculation, we'll cover that in the class. I'll do 1 or 2 examples. Sections where I feel same concept can be covered in 3 different ways. We'll do 1 in the class, and I'll tell you which are the 2 different ways in which it can be discussed, right? So calculation wise, it will be comprehensive, and then theory wise, I'll put in all the relevant screenshots for you. So when you're revising, you can either revisit these videos multiple times, or you can reread the class notes again and again. That's generally the framework. Fourth, I would really appreciate for everyone on YouTube and live classroom to participate in the session. Okay, it's easy, it's okay to talk, it's okay to ask me questions. If I'm in a flow and I cannot interrupt myself, I'll tell you to ask a little later, right? But please stop me, please ask questions. If you're attending classroom, absolutely no yawning in these sessions. I find it extremely disrespectful for the other people also, right? So you're just destroying the environment. So be super careful. If you're online and if you want to tell me that if I ask you something and you want to say yes, the command word for substitute for yes is going to be I pass. All right, so you type in I pass, and hopefully we type in I pass 1,000 times over the period of next 6 sessions, and hopefully for most of us that turns out to be true. So let's do a quick trial. Sure, Anirudh is asking, can we online? Do whatever the F you want to do online. I don't care. Jai BBA ki. Come on, let's have one super loud I pass for everyone who's listening on YouTube. Good. Okay. So with the basic hygiene rules out of our way, I think we are ready to start the session. Today's session is FRA. It's a beautiful subject, very easy to score points on the exam, right? You just need to be good with some like basic structure, concept, and then need to memorize some US GAAP, IFRS. I'll be highlighting those sections for you. This is your juice notes. Of course, if you're in the FinTree ecosystem, you've already seen them multiple times. If you're not, it's okay. This is how a juice note looks like. We'll not be using any other material. We'll simply be using juice notes for our preparation and then some additional stuff that I'll be giving you, right? So the challenge we have at hand today, this is about 4:15. We've roughly about 6 hours to finish this session. We have to do this 12 LMs, starting with LM1 to LM12. LM1 is mostly theory. That's where we start. So if all of you are ready, then we can start off with the session. Should we?
Yes.
Okay. So here we go. Let us start. The way we've broken down juice notes is now we have this new thing called FinTree Fruits, which is just an organized way of breaking down CFA material into equal size parts per se. So you notice that in every LM we have a few FFs or FinTree Fruits. Okay, so I'll be focusing on some important ones. So we'll start with LM1. Introduction to Financial Statement Analysis. This reading is mostly theory. There's nothing technical. If you've done subsequent studies of FRA, you'd notice that there's not much that you can learn out of this, right? It's fairly basic. What I think is important in this particular LM from an exam perspective, which happens to be my first 5-star for today, is this chart that you see on the screen, which talks about financial analysis statement analysis framework. Okay, which is what? Which tells you if I have to analyze financial statement of some company, what are the steps I follow? Bas, utna hi hai. Now, first we have to define why are we doing it. Okay? Second, we have to collect input data. Third, we have to process that input data. Then we have to analyze. Then we communicate our conclusion and then we follow up. Now you would ask me, Utkarsh, okay, fine, looks very obvious. How is this important from an exam perspective? So there are a lot of questions in the CFA curriculum that will give you a step and then ask you, that will give you a process and ask you, is it a part of collection of data or processing of data or analyzing the data? Okay, for example, let's assume I have financial statements, but certain items were misclassified in the original financial statement. I'm reclassifying them. Which step is that?
Processing.
Is it collection of data or is it processing the data or is it analyzing the data?
Processing.
So this is processing the data, right? If I'm preparing something called as, look at me, don't look at the screen. If I'm doing something called as preparation of common size statement, do you know what common size is? Converting everything to a same denomination. Okay, that's called common size statement. And if you don't know, I'll show you a little later. But if I'm preparing common size statement, which step is that?
Processing.
Look at the chart carefully. Which step is that? Processing the data. Then finally, if I'm doing my valuation, then that comes out to be the last step, which is analysis or interpretation, and then we communicate, right? So that's it. That's your first step. That's straightforward. Then towards the end of the reading in FF4, I'm skipping the rest of the part because that will be covered elsewhere. But in this reading, my next 5-star for you is this thing called ISCO. Okay, now what is this ISCO? It's an organization of Securities Commission. Okay, so maybe parallelly I should start capturing all the screenshots as well. Okay, just give me a minute. All right, here we go. This is your reading 1, screenshot 1. Reading 1, screenshot 2 on ISCO. Does anyone know what this organization does? Okay. So the way you think of these guys is, I'll give you a very easy memory technique. Think of this as if SEBI had to join some group. Okay, so SEBI in India or SEC in the US. If they had to join some club or some group, then which group will they join? They will join IOSCO. Okay, so it's some sort of a group of whom? Market regulators. Which type of regulators? Financial market regulators. Now, what is the job of this IOSCO? Protect investors, ensure fair, efficient, transparent markets, reduce systemic risk. Which risk? Systemic. Not systematic risk. Systematic is a term we will later come across in portfolio management. That means something else. Systemic means the whole system collapsing. Okay? And full, accurate and timely disclosure. Now, why did I choose this as a 5-star? I've seen a lot of questions in the CF learning ecosystem where they will give you a bunch of objective, okay, and then say which of the following is not an objective. Now, if you just remember that IOSCO is basically a group for SEBI and not for RBI or not for US Fed. They are not a banking regulator. Okay, so for example, an objective that says printing money or ensuring monetary health of the country is good, then it is not an objective of IOSCO. So everything that you think would SEBI will do in India, right? So what would SEBI do, right? So SEBI would want to protect investors. They would want to ensure efficient and transparent markets. They would want to reduce risk that exists in the whole system. That means, I don't know if you know this, but this National Stock Exchange, Bombay Stock Exchange, they have 99.99% SLA. That means they are not allowed to fail. If they fail, there is a contingency backup site that will immediately be live within a fraction of few seconds. Dictated by whom? Dictated by SEBI. Getting hang of it? And finally, fully timely and accurate disclosures. So that's your second point that we pick up from first reading. Now in the same reading, you'd see that there are a lot of these regulatory form numbers. Okay. Now, I don't really think you need to memorize all these form numbers. Not really required. What you need to know in general, that this is the data that a company supports or gives to the regulator on a timely basis. Okay. Now, within this, what you need to know basic, you need to know what is a 10K. Now, K itself means annual, right? So, whatever data that company would want to present to the regulator on an annual basis, that's your 10K. Then look at 10Q. 10Q is what? Quarterly. So remember the second one. Now only one more important piece here, which is your DEF 14A, also called as a proxy statement. Now most of you are in college attending session here. You guys know proxy really well. Tell me, what do you mean by proxy? Huh? Fake attendance, right? Or attendance for somebody else, right? Now in financial market, that's legally allowed. In financial market, it's legally allowed whenever company is invited you to vote on something. Okay? So company invited me that, hey, we are taking this important decision, please vote on it. I will go and allow someone else to vote on behalf of me, typically through this particular form, or the whole voting process will be under this form, which means this document will tell you all the important decisions that the company is taking on which vote is being called for. So when you want to study the company, this becomes an important document. Is it making sense? So that's it. Apart from this, we don't have anything else in this reading. The remaining sections we'll see somewhere else. Okay, there's one more piece I've missed on. This is another 5-star I have here. This is also extremely testable. And I think a lot of non-commerce background students get this thing wrong. There are 4 types of audit reports. Okay, primarily 2. there is an unqualified and qualified audit report. You tell me, do you want audit report to be unqualified or qualified?
Unqualified.
Huh?
Unqualified.
Unqualified. So now what do you mean by unqualified and qualified? This is a 5-star, so make sure you know this for the exam. Qualified means it has some qualification. Okay? And here qualification is not a good thing. It's not like it's a degree, like a CFA charter. Here qualification means everything is good. Everything is good except, right? So this is subject to or except. Okay, from prepared financial statements, everything is good, except inventory is not done okay. Except fixed assets are not accounting okay. Except they did not follow this policy or that policy. So this generally is not a good audit report, right? You don't want qualified. What you want is you want a clean or unqualified audit report. Now the worse than that, okay, in rare cases is what? You get adverse opinion. Adverse means pura kharab hai. So everything is not okay. Looks like something is completely wrong in the financial statements, right? So it's an adverse opinion. And then in rare cases, auditors will actually give you a report which will be called disclaimer of opinion. Disclaimer of opinion means we cannot give an opinion. Why is that?
Books are seized by.
Because and it happens by the way, at times there would be cases where auditors will say, hey listen, I want to go and visit factory. Management will say no. Okay, for whatever reason. Or the books of accounts themselves are not available. Why are they not available? Especially back in the day when the books of accounts were physical, a lot of these time auditors will give this report because there would be an income tax rate, some India though also, a lot of rates, right? CBR rate, this rate, that rate, and then these raiders have taken the books of account with them. So in that situation, we are unable to audit. That's referred to as disclaimer of opinion. That's it, done. Reading number 1 is over. Remaining part we'll see a little later. Okay. Sure. Can we pass on the mic? We have first question coming in for the day.
So non-commerce background, so.
Just wait a minute. Yeah, I'll have to get used to this thing. Huh? Hanji, go ahead. You're not on the screen.
All right, cool.
He's still on the screen.
Okay, cool. So I'm from non-commerce background. So, I mean, it sounds a little bit convoluted. I mean, why would clean audit be called unqualified? Is there any reason for it?
Yeah. A qualification means I'm identifying this or highlighting this. Qualification as a word in English actually means I'm qualifying this. That means everything is okay, but this I need to keep it separate. That's called as a qualified. Qualified doesn't only mean degree, but it means just keeping it separate.
So like classification?
No, removing it out of the stack. Because it has certain special features. So that's called qualification. Therefore, a report which has everything okay except this gets qualified.
So maybe can I think of it as an exception?
Exceptional.
Probably.
Yeah. A qualification, and generally in audit report, it's a negative qualification. It's always negative. So when you have qualification means everything is good. Ek cheez kharab, one thing is not good, 2 things are not good.
Thank you.
All right. Is everyone online? Are you with me? Can you give me a I-pass? Is the speed comfortable? This is just the trailer. Reading number 1 is done. Now we'll go to reading number 2. This is where the main thing starts now, which is analyzing income statement. All right, very nice. Keep the tempo going. We'll see how long the online audience lasts. All right, so what do we have as a main core in this area? Now I made some quick notes for myself. Just give me a minute. Okay. Now we have to focus on 6 items in this reading. So first I'll cover my own 6 items and then I'll take you through the juice notes. The first thing, how do we prepare? So I've kind of prepared an outline for myself here, right? So just gives me a structure on how I want to do the session. First, how do we prepare an income statement? What is the format? Okay, how does a income statement look like? So the first item on an income statement, help me out, is what? Sales. Sales is also called revenue. Also called top line. Why? Huh? Because it's the top. It's the first line on the income statement, so it's your top line. This is your sales. Now from sales, we'll start deducting various costs. Okay, which is the first cost that we deduct. Sorry? That's right. We will deduct cost of goods sold. Okay. Now when I deduct cost of goods sold, what do I get? I get gross profit. Okay, so here's a question for you from an exam perspective. If I were writing a question on the exam, I will put in this question and probably your answer to this question will tell me more or less if you understand accounting or not. Okay, so if I were grading it, if you answer this question right, probably for me you're already done. Or maybe a negative qualification, if you answer this one wrong, then you're out of the game. Okay, so here's a question to you, listen to carefully. Let's assume you have a ice cream store. Okay. At the beginning of the year, you had 5 ice creams in your refrigerator. During the year, you spent some 50 rupees and you bought 3 more. Okay, so your inventory purchase is how much? 50 rupees. No, purchase. You purchased 50 rupees and you bought 3 more. So now how many ice creams do you have? 8. Let's assume you sold 2. You sold 2 of them. So how much is in your closing? 6. Right? So when I calculate my COGS, should I consider the 3 ice creams that I purchased? Or should I consider the 2 ice creams that I sold? Did you understand the question? Let me write it for you. My opening number of ice creams, inventory with me, is 5 units. Okay? Let's assume everything is at 10 rupees just for simplicity. Just for simplicity, 5 units at 10 rupees. Then, I purchased, let's say 3 units, let's say at 10 rupees. Now I'm left with 8. I sold, let's assume 2 units at 10 rupees. And I'm left with how much closing inventory? 6 units at 10 rupees. Is everyone with me on this? Now, I want to calculate COGS. Now, remember this. If you think from a cash flow perspective, I have purchased 3, right? I have paid how much amount? 30 rupees. 3 into 10, 30 rupees, right? But I want to calculate my COGS. मतलब inventory में कितना खर्चा हुआ है? What is the expense I've incurred on inventory? So tell me, is that going to be my cost of goods sold this year? Is it going to be 30 rupees? Is it going to be 20 rupees? Is it going to be 60 rupees? Is it going to be 50 rupees? I'm so confused with this. You tell me what should be the COGS. 20 rupees. How many of you think it's 20 rupees? Give me a me on the chat box or give me hand raise. How many of you think it's 30 rupees? Okay. Anyone else has a different number? 50 rupees, 60 rupees? No. So, this is a trick. The trick is, look at the word cost of goods sold. Whatever items I have sold this year, unka kya cost tha? What was the cost there, right? So I have sold how many items? Only 2. And at 10, and therefore the COGS here is going to be how much? 20. Even though to my vendor I have paid 30 rupees in cash for purchases. But I have sold only 2, so technically only that should be my cost. Now this is very difficult for commerce background students because some of you might have been taught that trading account and P, and how many of you have learned that trading account? Okay, if you've not learned, good for you. That's pure nonsense. But those of you who've learned trading account, your accounts teacher must have told you, opening inventory on which side? Debit. Purchases on which side? Debit, right? So if your purchases are on that side, to pura kharcha ho gaya. It should be expense. But what you need to know is that, for those of you who know it, where did you put your closing account? Closing inventory? On credit. So opening debit, purchases debit, closing credit, net debit is basically the difference of the two, which is nothing but sold. Which means if you were to do your trading account, on the debit side you will have 5 units and 3 units. But on the credit side you will have 6 units. So net debit will be how much? Only 2 units. So always remember this, only the inventory which is sold this year is going to be COGS. This is extremely important because in some businesses, especially where aging is required, give me some example, where is aging required? Okay, of course, wine, whiskey, maza aa gaya, huh? But even basmati rice requires aging, right? So if I buy inventory now, I'm spending money in cash. I'm going to sell my inventory next year. This year, I will not have a COGS if I'm not selling it. सिर्फ बेचने पे ही खर्चा आता है. Only when I sell inventory, then only I recognize COGS. That's extremely important for you to understand. Is this clear? Okay, good. So COGS 20. Then what do you get here? You get gross profit, which is sales minus COGS. This, when you look at income statement only up to this point and compare different companies, okay, it's a good thing to do because it tells you the manufacturing efficiency of different competitors. So take Coke and take Pepsi and compare who has better COGS, right? Now, of course, you want COGS to be lower. So it will tell you that, okay, this company looks like it has a more efficient manufacturing process. So some companies build competitive advantage just being really good at manufacturing, right? But some companies will build competitive advantage a little below gross profit. So let's see what we have below this. So help me out. Which item should I have after gross profit? Correct. I will have selling, general and administrative expenses. Can you tell me what does it include? Salaries? Yes. Salary of employees? Yes. Does the salary that I pay or wages that I pay to my manufacturing employees is included in SG&A? No. That's called labor cost or wages. Where do we include that? COGS. How about packaging material cost? COGS. Packaging material cost, COGS. How about electricity? So electricity of your head office, marketing office in SG&A. But electricity of your factory, COGS. Are you getting hang of it? So anything that's generally spent at the factory level is COGS, raw material, packaging, your wages, electricity, and anything that happens at the head office is typically your SG&A. Okay. How about my advertisement expenses? SG&A. So less. One more item I need to deduct here, which will be depreciation. Okay. In fact, let's stop at SG&A for a bit. And once I deduct my SG&A from gross profit, can you tell me what do I get? I get EBITDA number. EBITDA. Okay. Now, what does EBITDA tell you about the business? When I'm comparing EBITDA of two businesses, what do I learn? Which one is good more or less with core operational business? Okay, and I'll tell you how to think about this. Think of maybe two different companies. One company is very, very good at having low cost of manufacturing. Okay. The other company might have higher cost of manufacturing, but they're very good at selling it without spending much money on sales team. There's a trade-off, no? So when you want to compare those type of business models, you want to compare them at the EBITDA level. EBITDA is also called the operating profit before depreciation, earning before interest, tax, depreciation, amortization. Less. What next? Depreciation, amortization. Depreciation on tangible assets, amortization on intangible assets. And what do we get after that? We get EBIT, earning before interest and taxes. This is referred to as operating profit. Okay. EBITDA generally is called cash operating profit. Okay. Why is that? Because depreciation is a non-cash expense. So this will give me EBIT. And then where is EBIT very important? Okay. So think about you're comparing two shops. One person is owning the shop and selling, let's coffee shop maybe. One person owns the coffee shop, the other person has rented the coffee shop. Think about how their P&L will look different. The one who's rented, that rent expense will go where? Rent expense goes where? SG&A, right? So the one who's rented, the comparable rent expense will go in SG&A. But the ones who owns the shop, they don't pay the rent, but they will have what? Depreciation. Depreciation will go here. So if you want to do apple to apple comparison, bring them at the EBIT level. Are you getting? That's why these different components exist. After EBIT, we will typically have two items. We'll say less. Tell me. Interest/finance cost. And typically here, these days in a lot of Indian financial statements, you would find this item called other income. Okay, why is that? So a lot of Indian companies realize that markets were very buoyant, good IPO market. So let's raise money even if you don't need them. There are many of them who've just raised unnecessary money. Now they're sitting on large amount of cash. Now that cash is going to generate them some interest, some profit that's coming in other income. So after EBIT, less interest, add other income. What do you get then? You get earning before taxes. Okay. Lot of times on the exam, instead of E, they might use the word P. They're interchangeable. Instead of earning, they might use the word profit. So EBT at times is also called PBT, profit before taxes. Same stuff. Okay. And then finally what we'll have? We will have less the taxes. Okay. Now the taxes that I have here, are those taxes paid or tax expense? They are tax expense. Towards the end of the session today, somewhere around 8:30, we'll learn the difference between the two. Tax expense. And finally, the net item I'll have here is profit after tax or earning after tax, also called as what? The bottom line. Okay. And once company has certain amount of profit, let's say 100 rupees maybe, they have to take two decisions on that profit. What are the two decisions? Some part of the profit, can anyone tell me? What do you do with profit? Some part of the profit will go to dividend, maybe let's say 30 rupees. Then remaining profit will be retained earnings, 70 rupees. Where do you transfer that retained earnings? To equity section of the balance sheet. So that's your general format of the income statement. Everyone comfortable here? Okay. The second item we want to learn is accrual concept. Accrual concept. Extremely critical. We've covered this accrual concept in depth in the level 0 course itself. The whole accounting is based on accrual system of accounting. Opposite of accrual system, the old system was cash system, right? We don't use cash system anymore, we use accrual system. Now very loosely, how do you think of accrual? So On the revenue side, Anirudh, you're right, some companies do that. Anirudh on YouTube is asking you a question. Indian companies add other income right at the top, not after EBIT. If you look at Indian financial statements, other income is actually added at the revenue level. So whenever I'm modeling the companies, I remove that and I put that after EBIT because that's the right way to do it. Okay. So revenue and expenses. Vishwas will deal with minority interest a little later. Let's kind of follow the flow. Now, a simple logic of accounting for revenue is record when it is earned, not necessarily received in cash. Not necessarily received in cash. Okay, so correct word is earning. Okay, and on expenses, record when it is incurred. It's not necessary that it is not necessarily paid in cash. So we'll do some calculation based example here. This example that I'm showing you, it's on revenue recognition practice as well, highly testable. I'll give you a live example. Let us say Mahindra Holidays in India. Has anyone studied this story? It's kind of a hospitality business, a resort business, but they operate on a different model where they sell you a lifetime membership. Okay, so let's keep it simple. Let us say that an individual goes to Mahindra Holidays and they say, listen, you pay us 250 rupees today, upfront at time zero. Okay, and every year you get one vacation of 7 days. In any of our resorts, subject to availability, you need to book in advance, right? Now, think of it's such a beautiful business model because in most of the businesses, the challenge is that you need to take money from customers. Here, you're selling vacation for next 25 years. You know, you're offering resort access for next 25 years, but the entire money you're taking when? Time zero itself. 250 you received. Okay. Now, year one, assuming that and if you don't take vacation in a particular year, it expires. We'll keep simple rules. Okay. Year one, or in fact time zero, tell me what is my revenue. At time zero, 250 I have received. What is my revenue? Zero. This is the thinking I want you to develop, right? And if you get this thinking, then you can answer any of the CFA questions around this topic. We will not record revenue based on how much I'm receiving in cash. We will record revenue based on how much I have earned. Kitna maine kamaya hai. So in order to find out how much I have earned, you need to ask yourself a question. What is my revenue earning activity? मैं किस चीज से पैसा कमा रहा हूँ? What is the core revenue earning activity? Now here revenue earning activity is providing those resort services to your guest, right? So in year one, when your guest will come and access that services for 7 days, then you have earned 1 out of that 25 years of revenue. So at time zero, when you receive 250, your revenue will be 0, and then you will create a liability called unearned revenue, or at times also referred to as, in CFA curriculum especially, deferred revenue. And what is this unearned revenue or deferred revenue? It is a liability. Okay. It will be how much? 250, the entire 250 you received. Now tell me what will happen at year one. Let's say your consumer came, they use that services for 7 days. They access your resort for 7 days. Now what will happen? You collected 250 rupees for 25 years. In year one, your consumer accessed that service for 1 year. Now will you have any revenue? But your customer is not paying you anything anymore. This year you have not received any cash. Will you still have revenue? Yes. How much? 10 rupees. Then your liability will be how much? 240 rupees. So you have to find out what is my revenue earning activity here offering those services. Why is this important? Because just think about it. Let's assume at the end of year 1, there was some natural calamity and all Mahindra resorts were destroyed. Just making it up, okay? Now you were a customer, you've already paid 250. You were able to use resort only for 1 year. What will you do? Yes, you would call the company, you would say, what nonsense is this? Please give me 24 years of money back, right? You would ask for 240 rupees back. Same logic here. You will earn that revenue only when you've completed revenue earning activity. What do you think will happen in year 2? What is the revenue? 10 rupees again. Okay. And what is the unearned liability now? 230 rupees. So slowly. And therefore, I really love some of these stocks. These stocks, like Mahindra Holidays now, it's very expensive. But back in the day, if you're good at accounting, right, there are some stocks which are purely accounting stocks. Just on the basis of your accounting knowledge, you can figure out what's happening. Mahindra Holiday was one of them, because you see large amount of unearned revenue. It's one of those businesses where you know what revenue I'm going to get out of this pool next year. Right? How rare is that? Because for every business, if they work hard this year, they get revenue this year. Some of these businesses, even if I don't do anything, I'm going to get this much of revenue. So I call these as balance sheet stocks. Right? And some stocks you can pick up just like that. Let me give you one more example. Yes, unearned revenue is shown as a balance sheet liability side. Now, good question. Now, please tell me, is it a short-term liability or long-term liability? It's typically a long-term liability. Some part of it would be short-term. You know, what is the definition? Any liability that is due within a year is short-term. So, every year out of that 250, 10 will be short-term, 240 will be long-term, and then that's how we'll keep on rotating. All right, example 2. Example 2, this is very interesting. How many of you have Netflix? Okay, Netflix is monthly or annual? Monthly. Which one is annual? Hotstar is annual? Okay, Prime. Okay, let's do Amazon Prime. Amazon Prime video subscription per annum is how much? 1500. Okay, I'm going to round it off to 1200. 1200 rupees per annum. Okay. Now let's say you're a customer. We'll assume US financial year, which is December. Okay. Now what you did is somewhere at the beginning of October, on 1st of October, you subscribed. The answer is Sunna. On 1st of October, you went on the Amazon website, you paid 1200 rupees, you was like, okay, I'm sorted, now let me go and watch, whatever I want to watch, right? Now, there is an Amazon accountant who's doing accounting at the end of 31st December. You've already given them 1200 rupees, Now they want to figure out what is my revenue. So again, apply the same logic. What is my revenue earning activity? What is it? Yeah, letting them watch, right? Providing content so that people will watch. So this year, you've collected total 1200 rupees. This year, your user has consumed services of how many months? October, November, December, right? So in this financial year, what do you think will be my revenue? This financial year revenue would be 300. And then on 31st of December, but I've collected 1200 in cash, no? So how about that remaining 900? That's my deferred revenue of 900. Is it making sense? The same logic we can extrapolate to whatever you want, okay? For example, let's say there's a company you're studying. Does anyone know True Fit and Hill? It's a fancy salon service. True Fit naam hai na? Or let's say any barber, right? Or any fancy beauty salon service. Have you seen they have those packages? You can buy 5 sessions for 100 rupees. Aisa kuch aata na? So let's say you go to a salon and you get 5 haircuts during the year. 5 haircuts during the year for 1,000 rupees. Okay, so you pay 1,000 rupees in advance, and now during the year, whenever you want, you can go and have 5 haircuts. Now, this is different than the previous model because previous model was time-based. This is not. Now, how will I do accounting? Imagine I received 1,000 rupees. Let's say I'm your barber, or I'm going to give you a haircut. I've received 1,000 rupees from you. How will I show it in my books? Is it a revenue or is it as a liability? It's a liability, right? Now, for the first 9 months, you did not show up at all. For the first 9 months, you did not come for a haircut. How much is my revenue out of that 1,000? 0. Because now it is not time-based, correct? Let's say that you came and suddenly you decided, you know what, I want to have a haircut for myself and let's say my friend. Let's assume that's allowed. So you have 2 haircuts. Then how much revenue will I recognize? 400. And then what would be my liability? 600. समझ गए आपको? ठीक है ना? So that's on the revenue side. Now one more last example. This applies on the construction also. Okay, long infra projects, construction projects, okay, long tenure projects. Let's assume, now there is a specific accounting standard for that, but the general logic works there also. Let's assume that you decided that I will buy a apartment or a flat, what we call in India, right, like a house, but under construction. And the builder said, okay, we'll charge you 100 rupees. Okay. Now, have you noticed typically they'll charge you based on certain slabs? Yes. That is their revenue recognition. So builder has collected 100 rupees from, like you, they've collected money from multiple people. Now, only your flat being ready is not good enough because the government will not provide sanction, right? So how a builder looks at it is, I need to complete the whole project. So let me break down my projects into 4 parts. Part 1, part 2, part 3, part 4. Let's assume they are equal size. Then once part 1 is completed, then a builder will recognize out of 100, 25 rupees of revenue. That is how real estate accounting works. Then when part 2 is completed, then builder will recognize how much? 25 plus 25, now total revenue will be 50. Now this is happening across the year. So possible that in year 1, builder was able to complete only part 1. So year 1 revenue will only be 25. Let's say in year 2, builder completed 2 parts. So this year, how much revenue will we show? 25 plus 25, 50. This is how we'll do the accounting. That's your revenue recognition. Okay. Now a little bit on expense recognition. Let's work on expense recognition. Again, this section is highly testable. I'm accepting some conceptual question around this. Okay, so get hold of the general logic, expense recognition. All right. Now, let's say I have rented a storage unit. I have rented a storage unit. Okay. Now, I was required to pay rent of the whole year in advance. Let us say 1200 rupees, right at the beginning. Now, I rented this on 1st of October. This is my 31st of December financial year end. I have paid the whole 1200. Tell me what should be my expense in the first year. So now on the expense side, how do you think? Same logic. On the revenue side, how much I have earned. On the expense side, how much we have incurred. So I paid the whole 1200, but that was for 1 year, right? 1 year means how many months? 12 months. Now in this financial year, I will be able to use how many of those 12 months? 3 months. So my true expense is how much? Only 300, even though I have paid 1200 rupees in cash. So that 900 extra that you've paid, what would that be? That will be called as a prepaid expense. So on the revenue, how much you have earned on expenses how much you have incurred. That's the logic. Okay. So this section is over. Section 4 in this reading. Section 2 and 3 was on accrual and revenue recognition. Now section 4, which is highly testable, is capitalizing versus expensing. Okay, this is a 5-star. I am 99.9% positive. I mean, if I were a grader, I am definitely putting a question on this. Okay, this is another good area for me to test core knowledge of a student's understanding of this topic. I'm going to create a question. I think there's a good chance you might see something like this on the exam. There are two companies, company A and company B. Okay. Now, what the companies do is, let's assume they are in the business of buying and distributing music. Okay, so we can give them name. Let's call them in India Saregama, listed company, and company B, Tips Music. Spotify is different. What Saregama and Tips do actually is, let's assume they'll buy some famous song from Arjit Singh, you know, famous song from Arjit, and then they will put that song on YouTube, Spotify, and then every time you and I listen, they'll get a small 5 paise, 10 paise type of revenue. Very loosely, that's how you think of them. Now, there is a small nuance in their account. There actually is, by the way, but I'm oversimplifying for this class. There's a small nuance in their accounting practice. Okay, let's assume that when they buy a song, okay, which is for 100 rupees of song, what Saregama does is, Saregama capitalizes that song. And what Tips does is, they actually don't directly like this, but I'm oversimplifying it. Let's say Tips is going to expense the song. What is the difference between capitalization versus expensing? Capitalization means, see, capex and opex, right? Look at the word. At the end of the X means expenditure. So money is going out. Now when I'm spending money for something, the question I ask myself is it I'm spending towards creating an asset or it's an expense? When I spend money to buy an iPhone, asset. But when I buy an app for a one-time use, expense. Getting hang of it? When I buy a factory, asset. But when I pay electricity bill in that factory, expense. Okay? So now this is very clear. Buying a factory is obvious, it's an asset. But some expenses at times are not clear of कि ये asset है या is it an asset or is it an expense? वो confusion होता है. So some companies will take benefit of that. Okay? So let's assume Saregama is capitalizing that money spending on asset. Tips decided कि हम उसको expense करेंगे. Have you understood? Now first tell me, what will be the impact on balance sheet? How about Saregama? Will they have an asset? Yes. So on Saregama's balance sheet, you will have an asset. For lack of better word simplifying, let's say they will have an asset. Song of Arjit Singh, purchase 100 rupees. Okay. How about on Tips balance sheet? Will they have an asset? No. No asset. Why no asset? Because they just expensed it. Then on the profit and loss account, this year, and let's see if you can get this. This year, let's say at the beginning, will there be an expense on P&L for Saregama? No expense. Because they are telling you that, hey, we've spent 100 rupees, but ye kharcha nahi hai. This is not expense. This is what? It's an asset. Whereas Tips spending the same 100 rupees, but they're saying, you know what, it is an expense. So on the Tips P&L, Arjit Singh song purchased, they will have an expense of 100 rupees. That's the difference between the two. Is that okay? Now, because of this, what do you think will be the impact on equity in the first year? Equity in the first year of Saregama, do you think equity of Saregama will be higher or lower? Because how to think of equity? Whenever you have profits, profits are added to equity. Whenever you have low profit or expenses, they deducted from equity. Okay? So think of Saregama, they do not have expenses. If they do not have expenses compared to tips, their profits will be higher. And if profits are higher, to kya higher hoga? Equity. So equity will be higher. Whereas in case of tips, they are expensing the whole thing, so equity will be lower. Kind of makes sense because if you think from balance sheet perspective, no asset and therefore obviously they have a lower equity. Here we have an asset, so we have to have a corresponding increase in equity for balance sheet to tally. And finally, P&L in the subsequent year. Okay, in the future year, how the P&L will be different. Think of Saregama. In the last year, they did not show any expense. They instead created what? Asset. So इस साल क्या होगा? Huh? That's right. This year they will have to show depreciation, and because of that depreciation, their P&L actually will be, the profit actually will be lower. But will tips have expense this year? No. So there is no depreciation. Therefore, in the subsequent year, my P&L or my profit will be relatively higher. Is that logic clear? Now, I'll tell you the way I think about it, right? So think of, this is tips or Saregama. What is a true economic reality? These guys are giving 100 rupees and this is Arjit Singh. So this is your Arjit Singh. In return, from Arjit Singh, they are getting what? A song. So true economic reality is, so 100 rupees given, song taken. Now because of accounting treatment, at the end of the day, 100 rupees is my expense. In case of Saregama, if they decide that, you know what, we can use that song for 5 years, so their expense will be expense of 20 rupees each in the form of depreciation or amortization. But in case of TIPS, they thought that, you know what, this song, I don't know if it is useful for next year. You know, I want to be conservative. So what tips will do is, entire 100 rupees expense in year 1, and then they will have no expense in the subsequent year. Over a period of 5 years, expense is same. But the way you structure it in between those 5 years, it will be different. So this is your expensing versus capitalization. Is this clear? Crystal clear? This is highly testable. Make sure you understood this. Okay. Now, one small change. Let's see if you're going to pass CFA or not. This is one of those decider question. Remember, Saregama is going to capitalize, tips is going to expense. Okay? Let's see if you can answer this. Tell me what would be the impact on CFO? Harshit, Akash, Rudra. CFO of Saregama versus TIPS. Think that that song was for 100 rupees. Okay, CFO stands for cash flow from operations, cash flow from investing, cash flow from financing. Haji? Tips minus 100 from which level? CFO? Spot on, 10 on 10. That 100 rupees for tips will be an outflow from CFO because tips is saying, hey listen, this song is an expense, right? So the entire 100 rupees is from operations. But Saregama, it's not an expense, it is what? It's an asset, we are investing into an asset. So for Saregama it will be CFI here, okay? And how about CFF? No impact, okay? So on the exam, the question that you will get is, and listen to this carefully, if you're going to capitalize as against expensing, will your CFO be higher or lower? So your CFO is higher because the other one is going to have minus 100. How about your CFI, higher or lower? Lower, because the other one is going to have 0, I'm going to have minus 100. This is another highly testable area. Comfortable here? ठीक है. You let me know when you need a break. क्या time हुआ अभी? We've just started. Can we go on for another 30 minutes? We'll be taking plenty of breaks. I'll be giving you smaller breaks in between, right? Since it's a very long session today. Okay, my fifth concept in the income statement. Online, please give me iPass if you're comfortable. Okay. What does EPS stand for? Earning per share. Now, I'm first creating a master flowchart for you to conceptualize the whole EPS business. We will be calculating two types of EPS. Basic EPS and diluted EPS. Now, within basic EPS, what kind of adjustment we will have? First, we will have a very straightforward, simple question. I'll do one example for you. Second, we will have a preference share question, okay, within which there is a sub-variety of issuing preference during the year. So, I will directly do that variety for you. That's highly testable. So, preference share issued during the year. During the year. Okay, that's second category of question that can come upon basic. Then the third category of question that you can have on the basic EPS is, how do you deal with this when you have a stock split or when you have a bonus share? So third category, which will require some technical calculations here. Then we'll go to diluted EPS, okay, which is kind of complex, right? So here we will have to first learn how to deal with convertible preference shares. Then we'll have to learn how to deal with convertible bonds. Then we will learn how to deal with ESOPs. And fourth, how to identify something which is anti-dilutive. So 1, 2, 3, 4, 5, 6, 7 varieties of different questions, 7 calculations. Again, one more time by show of hands, how many of you are here writing in Feb attempt candidates? Okay. बाद में what we'll do is after the break, I want all the Feb attempts sitting here. And rest of the crowd I want to go back. It's easier for me to focus on you guys. Warrants and ESOPs work the same way. Online. Nikita Gulgulia. So we'll see that. शुरू करें इसमें? EPS questions. Let us start. Feb easy pass GG. अच्छा. All right, here we go. First one. Your profit after tax is 500 rupees. The number of shares that you've issued during the year is 100 shares. What is your basic EPS? Basic EPS is 500 divided by 100, which is equal to 5. Easy? Second one. Now this is a real one. This is exam like. Your profit after tax is 500 rupees. On 1st of January, you had 20 shares outstanding. On 1st of March, you issued 60 shares. On 1st of July, you had 30 shares of buyback. Okay, just one crazy example. Then on 1st of October, you issued 120 fresh shares. Okay, this is an issue. This is also a fresh issue. And let's go a little nuts. On 1st of December, there's a buyback of 90 shares. 90 shares buyback. Please calculate basic EPS. This is the last item on the second reading income statement. Then after this, we'll just do a theory and then we'll be done. But we have to do 5-6 more computations after this. Please pick up some speed. 6.89. Okay, Mukund on YouTube gives me 6.45. Sneha has got 5.71. Hem Parikh has 6.25. Atharva Navre 6.45, Sarthak is 6.25. Okay, I'm getting two varieties. Let's do it together. I'll give you a technique. Follow this, you'll never get them wrong. What CFA curriculum does here is, it basically tries to calculate which shares were bought back when. So that you calculate how many shares were bought back at what time. I think that's very complicated. Do it the way we are doing it. It's extremely easy. The first thing you do is, you create a multiplier to each of these items. Okay. Now, which is a time-based weight, honestly. So, 1st January to December as the financial year. So, Jan to December, 12 months. So, this will be simply 12 by 12. So, 20 into 12 by 12 is how much? 20. Finish. Then, March, 60 shares. From 1st of March till December end, how many months? 9 months. So, into 9 by 12. So that's 45, easy. Then when you see buyback, do not worry about which 30 are bought back. Is it this out of the 1st March or 1st January? It does not matter. You follow the same rule. They were buyback done on 1st of July. 1st of July to 31st of December, how many months? 6 months. So just do 6 by 12. How much is that? 15. Now the only thing you do with buyback is make the number negative. Buyback means share repurchase. Okay, just make it negative, everything else is same. In the same way, 1st of October, 120 shares. October, November, December, 3 by 12. How much would that be? 1/4, so those 30 shares plus. And 1st of December, so December would be how many months? It will be 1 by 12. So 90 by 12, kitna aata? 7.5. Positive or negative? Negative. There you go. What is this referred to? This is called as weighted average number of common shares outstanding during the year. Weighted average number of common shares outstanding during the year. How much is that? 72.5. 72.5. Is 1st March 9 months or 10 months? देख रहा हूँ आकाश, देख रहा हूँ. This is a mistake, no? Jan, Feb, I think this should be 10 months, no? We made a mistake here. This is not 9 months, 10 months. Can you please redo the math? 60 into 10 by 12. 50. Okay. Please recalculate weighted average number of shares. Are you sure? Right. You're right. I made a mistake there. 77.5. Okay. And then once you've done this, then rest of the part is super easy, which is simply profit of 500 divided by 77.5, which is how much? 6.45. Those of you who did this right, give me a hand raise in the classroom, or wait a minute though. Hand raise in the classroom or I pass on the chat box, please. None of the Feb candidates? Shabash, mere sher. Bahut achhe. Those of you who got this right, give me I pass. If you did not, you can give me a I struggle. All right, that's variety 2. Now let's do the third one. Are you enjoying this? Can I go a notch higher? Okay. आज तारीख क्या है? 6. Okay, someone missed the month calculation. It's fairly straightforward. Just count how many number of months till the year end divided by 12. Vedang notes will be available. All right, example 3. Come on, gear up. Example 3 is technical. Example 3 is karke dikhao wala example, because I know you won't be able to do it. It's a challenge example. If you do example 3, then more or less one example covers all possible varieties, but it's tough. Do you think you can do it?
Yes.
I challenge you, you'll not be able to do it. I'm serious. Let's see if you can. Because I'm going to put in a lot of varieties in this. Here we go. First, profit after tax. Let's say 5,000. Then, common shares issuance. On 1st of January, you have 40 shares. On 1st of Feb, you have 120 shares. On 1st of July, you're buying back 90 shares. On 1st of November, you're issuing another 120 shares. Then preference shares. Preference shares. On 1st of January, you have 10 shares. Each preference share has a face value of 100 rupees and a preference dividend rate of 5%. Then on 1st of April, you did a new issue By the way, if I'm writing it in bracket, it's a buyback. So otherwise it's a fresh issue. You get that, right? This is a fresh issue, this is a buyback. You know? On 1st of April, you have issued 10 more shares. On 1st of April, you issued 10 more shares. And here is where the question becomes a lot of fun. On 1st of October, you bought back 10 preference shares. Now calculate BEPS. I told you it's a challenge question, and I don't think any of you would be able to. I would be very surprised if you solve this right. Someone has already given me answer as 24.39. ChatGPT. Meg Doshi has 24.39. Himansh Jain has 39.4. Mukund Gupta has 39.4. Atharva Navre has 39.4. Navid in my classroom here. And you can give me hand raise, please, Navid? Yeah. What is the answer? 42.8. Okay, Navid has 42.8. Anyone else? Gaurav Mehrotra has 39.4, Akash Chopra 3.39, 0.225, pata nahi what that means, 39.225, got it. So, Somil Doshi 39.4, Anirudh Upadhyay 39.4. Preference dividend rate is 5%, by the way. Abhay Kale 39.4. AKD official 39.38. अब मेक दोषी जुगाड़ कर रहा है, वो कह रहा है 29.34 my previous answer plus 15. Where do you conduct your classes? I want to join. Sure, you're welcome to join. Pune, we are in Pune, Himanshu. Jainam 15, 39.4. Shri Hari Soni 39.4. Okay. Should we do this together? Huh? I'll give you a hint, okay? See, on the common shares, you do the same thing. Weighted average number, that's easy. On the preference share, you have to, preference dividend, you need to deduct from the numerator. Okay, the basic EPS formula in the numerator is PAT minus preference dividend. I'm sure you know that. Now, how do you calculate preference dividend? So the shares you are issuing on 1st of January, obviously you have to pay preference dividend for the whole year. But the shares that you issued on 1st of April, that means beginning of the 4th month, and bought back on 1st of October, these shares were outstanding only for 6 months. So on the next 10 shares, you pay preference dividend only for 6 months. And if you do this, then you would get your answer right. Let's see. Let's do it together. 22.9. What's your name? हाँ, हाथ उठाओ. अच्छा, okay. 22.9. Anyone else in the classroom? हाँ, Jaydeep, how much? 38.9. Okay. Anyone else? 39.5. आपका नाम? Nilay. Last row, how much? 39.5. What's your name? 39.4. नाम? Aditya. हाँ, खुशी, right? हाँ. 39.4. 39.6. 39.6. Okay. Sir, आप pen spin. Okay. Fine. Let's do it together. So, help me out. 1st January, 40 shares. What should be the multiplier? 12 by 12. This is 40. 1st Feb. What's the multiplier here? If you issue in Feb to December, how many months? 11. So 11 by 12, how many? 110. Then 1st of July, how many months? 6 by 12. So this should be 45 negative. Okay, I hope you're with me on this. And finally, 1st of November, how many months? November, December, 2 months. 2 by 12, how much? 20. Let's take a total. Help me out. 125. This is your denominator. Denominator is sorted. Your denominator here is going to be 125 shares. How many of you got the denominator part right? Okay, that's almost all of you. Online, you can just give me I pass if you get this right. Now, what is the numerator? The way numerator works is, basic EPS is equal to PAT minus preference dividend divided by weighted average number of common shares outstanding during the year. The weighted average number. Now, denominator we sorted. Denominator kitna hai? 125, right? So denominator we don't have to worry. Numerator is 5,000. The only thing now I need to worry about is how much preference dividend I'm going to pay during the year. Now, there are two types of preference dividend. Just for simplicity, let's call them as preference shares A and let's call them as B and B. Okay. Now think of the ones issued on January. 10 shares. Each share you're going to pay how much? 100 into 5. How much is that? 5%. Sorry, 100 into 5%, which is 5 rupees, right? So 5 rupees for 10 shares is how much? 50. So this part is easy, right? I have to pay 50 rupees for these shares. But think of it, the ones which are issued in April, will you pay them preference dividend for the whole year? No, it's a little bit like loan, right? So why would I pay them for the whole year? You issued them on April and you bought them back in October. So these shares were outstanding for how many months? 9 months. April to October क्या 9 महीने होते हैं? You know, April, हाँ आगे, May, हाँ, June, July, August, September, October, कितना हो गया? 6 months, है ना? 6 ही हो रहा है? Because we should not, it's 1st of October, right? So just 6 months. So then, should I pay them preference dividend for the whole year? No, I should pay preference dividend only for half of the year, 6 months. So now my calculation would be 100 into 5%, 5 rupees, into 10 shares, 50 rupees, but half, 25 rupees. So for these set of preference dividend, I will pay only 25 rupees. So my preference dividend in the numerator will be 75. So 5,000 minus 75 divided by 125, that is your answer, which is how much? 39.4. This was the challenge question. How many of you got this right before me? Okay. How many FEB candidates? Can you give me hand raise one more time? Very nice. Did you enjoy this? Did you learn the trick? I think, I'll tell you what I think might happen on the exam. I think you will not have a buyback or preference dividend, preference share, that's too much. But in CFA, सुन लो यार, 2 ही मिनट मेरे को बोलने दो please. Thank you. In CFA curriculum, there is one question where the preference share is actually issued like how it is issued on 1st of April. So, if, let's say if the question were like this, okay, if this last part was not there, then what will we do? On the 1st January preference shares, we'll pay the whole dividend of 5 rupees. But the 1st April preference shares, we will pay dividend only for, bolo? 9 months. So then it would be 5 into 9 by 12 into rest of the calculation. Then it's okay. So be very careful for the trick on issuance of preference share in the middle of the year. Then your numerator needs to be scaled appropriately. Is it okay? All right. Example number, क्या number है इसमें? 4. But last 2-3 of them, 4. I mean, they're not easy, but they're fun. So let's do 4. Profit after tax, 500 rupees. Number of common shares, 10 shares. Number of 10 नहीं होगा, 100 कर देता है. Number of common shares, 100 shares. Okay. Number of convertible. Now I'll create 2 subparts here, okay. In the same question, we'll create 2 subparts. Number of convertible bonds and number of convertible preference shares. So we'll have to solve this question twice. Subpart A, subpart B. One go, दोनों हो जाएगा. How many of them? Let's assume 10. What is the face value? 100. What is the preference dividend rate? Preference dividend rate, let us say 3%. What is the interest rate? Interest rate 4%. What is the tax rate? Tax rate is 25%. Please calculate basic EPS. Now, basic EPS is fairly simple, but then please calculate diluted EPS. Okay. Now, diluted EPS you have to remember calculate twice. In fact, even basic EPS you'll have to calculate twice, once for A, once for B. Diluted EPS calculate twice, once for A, once for B. I'll give you 2-3 minutes. Shri Hari Soni, Aniruddha Upadhyay, Mukund Gupta, Sai Priya Amar, Himansh, waiting for you. Do it fast. Give me answer of basic diluted for scenario A, basic diluted for scenario B. What is in the third column? Interest rate. Face value 100, preference dividend rate 3% and interest rate 4%. Have you understood the question, right? In one case we assume that those are convertible bonds. In other case we assume those are convertible preference shares. They are not together. These are 2 different cases. Once we assume convertible bond, once we assume convertible preference shares. So scenario A, I'm expecting 2 answers. Scenario B, I'm expecting 2 answers, one for basic APS, one for diluted APS. I've started guessing answers on the chat box. Mukund says 4.7. Vansh is saying 5 for basic EPS. Himansh has 5 and 4.7, 4.8. Srihari, Akash, when you give answers, please give answer for scenario A, scenario B, BEPS and DEPS both. Correct. In the first scenario A, there is no preference share. You only have bond. Done? Vishal, can we pass on the mic with the audience here, please, for the answers? Yes, Jaideep. Scenario A, what is your basic EPS?
Basic EPS 4.7 and 5.
4.7 and 5 in scenario A and B.
And B. Diluted EPS will be 4.27, 4.8.
4.27 and 4.8. Okay. Anyone else? Same answers. Okay. Fair enough. Let's do it together. Let us solve. Let's create let's solve the scenario A first, which is for convertible bond. So this is my scenario A, convertible bonds. Let me just ensure my screen is being shared. Okay. Convertible bonds. Okay. Now, first I will start with BEPS. What is the formula for BEPS? PAT minus preference dividend divided by the weighted average number of shares. I'll just keep it number of shares. Okay. Weighted average number of common shares. Now with what's the PAT? 500. Now in scenario A, what is my preference dividend? In scenario A, what is my preference dividend? 30. 0. I am assuming that those are convertible bonds. That means there is no preference share. है ना? If there is no preference share, then I don't need to deduct any preference dividend. क्योंकि है ही नहीं तो क्या deduct करूँ मैं? Why are you making those faces? Are you with me or not? 2 महीने में exam है आपका ज्ञानेश्वर. How many days left for the exam? 28 days. What is the fees for CFA? एक बार उसको याद दिलाओ थोड़ा motivation के लिए. How much money? $1,200, $1,500, $1,300. So $1,300 has at stake. और उसको माइक दो एक बार बोलने के लिए लगाओ प्लीज. हाँ दो उसको. क्या बोल रहा है? नहीं दो सही में दो, मेरे को सुनना है क्या बोल रहा है. हाँ.
Sir, this is my third attempt.
हाँ क्या है?
This is my third attempt. So like,
हाँ.
I know like the complexity of the question is not this much. So like, I know how to solve the question, but I just need to revise once more. The complexity you given is like going bouncer on my head. So
It's actually not complex at all. Naneshwar, and it's not even a big question. I think this is fairly an exam level question. It might look big because in one question I've combined two, one for bond, one for preference share, and this is fairly basic. It's straightforward. PAT minus preference dividend divided by number of shares. Here I'm assuming I have only convertible bonds. ये पता है, इसने मेरे को एकदम वो मुन्ना भाई MBBS में नहीं आता है, वो वाला फील दे दिया. 500 minus 0 divided by weighted average number of shares 100, that is it. So your basic EPS is simply 5. How many of you got this thing right? Okay, good. Now, how would you do DEPS? Okay, now one trick I have you for diluted EPS. The trick for diluted EPS is, you always start with the formula of basic EPS. So you literally write it down as it is. Okay? And then you ask yourself, if I convert, diluted EPS means after conversion. If I convert my bonds to what? To shares, then what will happen? Okay, that's a simple if test. If I convert my bonds to shares, then what will happen? How many bonds do we have, Naneshwar? 10. If I convert them to shares, my shares will increase by how much? 10. So then, in the denominator, I will do a plus 10. Okay? Now, Naneshwar, think through, if I convert my 10 bonds, to shares, will it have any impact on my profit?
Interest will be added.
Correct. Because my bonds are converted to equity, I do not have to pay interest anymore, right? How much interest was I paying? I was paying an interest of 4 rupees per bond. Can you see this? 100 rupees into 4%. I was paying 4 rupees per bond. Now, on 10 bonds, I don't have to pay those 4 rupees per bond. So what is the total saving? 40 rupees. So will my profit increase by 40 rupees? Yes or no? No or yes? Why no? Because my profit before tax will increase by 40, but the moment my profit before tax goes up, the tax babu will come. They will say, please pay taxes on this at 25%. On 40 at 25% taxes, that means I pay taxes of 10 rupees. So my profit after tax will increase by how much? 30 rupees. Let me write down the calculation here for you. Number of convertible bonds 10 into 100 into 4% into 1 minus T, 1 minus 25%. That's how I'm getting this 30. So my diluted EPS is how much? 530 divided by 110. How much is this? 4.881. 4.81 is my diluted EPS in convertible bond scenario. Now the rule is, Naneshwar, correct me if I go wrong, diluted EPS will always be higher than basic EPS.
Wrong.
It's wrong?
Yes.
Then what's the correct sentence?
The BEPs will be always higher than.
Correct. Diluted EPS will either be lower or equal to basic EPS. That is it. Let's do scenario 2. Scenario 2, same drill. BEPS. Okay. Now here, what is the scenario? Scenario 2. We are assuming that these are convertible preference shares. Okay. If I assume them to be convertible preference shares, then 500 minus, do you think I need to deduct anything here? Yes. Now I have to pay that preference dividend. So what is the preference dividend? 10 into 100 into 3. How much is that? 30. So this will be 500 minus 30 divided by 100. How much is that? 4.7. When I do DEPS, 500 minus 30 divided by 100, ask yourself, what if I convert preference shares to equity shares? Then what will happen? Do I still need to pay this 30? No, so I don't need to pay this 30 anymore. And my number of shares will go up by 10. So 500 divided by 110, how much? 4.54. Is it less than 4.7? Yes. So we can accept the answer. We're done. How many of you got all the 4 subparts correct? How many of you got 3 out of 4 right? How many of you got 2 out of 10? 2 out of 4. And how many of you got 1 out of 4? None out of 4. Of course. One more question. I know you're getting tired, I'll give you a break, but I want to finish this before I let you go. This crash course is going to test your endurance. This is example number 5. Ready? Profit after tax 100. Okay, someone on the chat box is asking, and this is a very common question I get. People have a lot of confusion here. This question is coming from Megh Doshi. He's saying, should we not add this 30 rupees to the denominator? The answer is yes. See, what is the numerator on BEPS? 500 minus 30, how much is that? 470. This numerator in CFA curriculum is written as 470 plus 30. How much would that be? 500. I write it as 500 minus 30, but I will not deduct 30 anymore. So not deducting from 500 is same as adding 30 to 470. Okay, I feel this is a better way to visualize, because I just run a what if scenario on basic formula and I get my diluted formula. Should I repeat again? The lady there in the stripes, ma'am, did you understand? No. See, in the CFA curriculum, how it is written is, they show you basic EPS formula first. What is the numerator? 500 minus 30. How much is that? 470. Then in the diluted EPS formula, CFA curriculum shows 470 plus 30. What is that 30? The preference dividend. Okay. I show it as 500 minus 30, but I will not deduct the 30. Is the numerator same in both the case? Yes. So someone asked, why aren't we adding it back? Because we are not deducting it from PAT, so it's same as adding it back. Hopefully that makes sense. Alright, example 5. PAT 100. Number of common shares 10. Number of ESOPs to the employee, another 10. Okay. The closing market price is going to be of the shares is going to be let us say 120 rupees, and average price of the shares during the year is going to be 100 rupees. Now, exercise price, we will create 2 scenarios, so 2 questions. I'm trying to squeeze in multiple question in one. So scenario A, exercise price is going to be 60 rupees. In scenario B, exercise price is going to be 110 rupees. Please calculate diluted EPS, and please also give me the name of the method we use for calculation of diluted EPS here. So calculate diluted EPS and also the name of the method we use. Himansh, hopefully that previous query of yours was answered. All right, let's solve it together. I'm solving scenario A first. Scenario is very simple. We start with basic EPS. Basic EPS here will be 100 divided by 10, which is 10. Diluted EPS, 100 divided by 10. Remember the technique we use here? We say plus X. What is this X? It's a shortcut for you to solve diluted EPS with ESOPs. How to calculate this X? The way to calculate this X is total number of ESOPs given to the employee multiplied with the percentage discount we are giving to the employee. That's it. If you just figure out what is the percentage discount we've given, multiply with number of ESOPs, job done. Now, when I calculate percentage discount, should I use a closing market price or average market price? What do you think? Average market price. So one, this data will be redundant on the exam. Be very careful for this trap. 120 we will not use, we will use average price. Now in scenario A, we are letting our employee buy it for 60 rupees. Something that's worth 100, we are letting them buy for 60 rupees. The lady in pink here, what is the discount are we offering? 40 rupees. And in percentage term on average price? 40%. Is it a 40% discount? 40 rupees or 100 rupees, is it 40%? Okay, great. Thank you very much. So number of ESOPs 10, discount offered 40%. How many shares? 4 shares. These 4 shares we will add here in the denominator. Done. That's it. And how much would this be? 7.14. That's your answer. Now in scenario B, what's happening? In scenario B, your exercise price is at 110 rupees, but the average price in the market is how much? Average price is 100. Are you selling your employee above the average price or below? Above. Then we say my ESOPs are anti-dilutive, and therefore my BEPS will be same as my TEPS. That's it. That concludes income statement. Now let's quickly knock off some theory and I'll give you a break. We've covered all the important parts. This is your revenue recognition. They've given some steps, but if you understood the logic that I gave you today, help me revise. What was the logic for revenue recognition? Recognize revenue when it is earned. And how do you know when it is earned? Based on revenue earning activity completion. That's it. So a lot of questions could be around that. We did expense recognition as well. We did spend time on capitalization of expense versus expensing of expense. The same logic applies to interest also. Okay, there's small piece on something called as a discontinued operation. Okay, this is testable. So I'm going to put that in your notes. सुन लो बस 5 मिनट हो गया. This next 5 minutes is one probable question on your test. So please listen to it carefully. It's a easy question. Just understand what it is. See, imagine you're a large entity. Let's call yourself ITC, and let's say you have 3 businesses. Okay, A, B, and C. Now your revenue from these businesses is 100, 100, and 100. Your cost in each of the businesses is 70, 70, and 70, and therefore your profit in each of the businesses is 30, 30, and 30. Now what the management has done is, before the end of the year, they have announced that we are going to discontinue C. I have 3 business vertical A, business vertical B, business vertical C. C हम लोग बंद करने वाले हैं. How will I present that in my financial statements? आ रहा है समझ में? Now, the way to present this in financial statement is, when I prepare my sales, remember how much was my sales? 100, 100 and 100. So sales will be how much? 200. Right? That's the trick. So imagine I can set up a very elegant, tricky MCQ question. Most of you will be trapped. I'll give you business verticals and I'll tell you, see, they are planning to discontinue. Okay, they've approved that discontinuation. Maybe it will happen next year. Is saal nahi ho raha hai. I still have C. But the fact that I have decided to discontinue it, I cannot add that to my income from continuing operations. So uska sales bhi nahi aayega. So my sales in this year's profit and loss account would be 200. Okay. My cost of this year's profit and loss account will be how much? 140. Notice I am ignoring as if C doesn't exist. Okay. Then what will I have? I will have profit from continuing ops, which will be 60. And in the final stage, I will add profit from discontinued operations. I will directly add that 30 rupees here. I will not add it to my sales. I will not add it to my cost. Kind of makes sense because I don't want to confuse my investors. When I make financial statement this way, they clearly know that next year don't expect 300. Next year expect sales of 200. And therefore net profit will still be 90. But the presentation will be very, very different. This is how you do accounting for discontinued operations. Is this clear? Yeah, you can have the mic.
So in the same example, let's say if the decision is dragging on for, let's say, 2 years instead of 1, then you still have C continued.
So it's not discontinued yet.
Yeah, but you're saying it's approved in, let's say, year 1.
See, what happens in practice is, at times your business is so large, you can't discontinue them in 1 year. Even to sell, dispose of, it takes 2-3 years. So the day my board decided that we will discontinue, so board resolution is passed. After that, that business segment becomes discontinued ops, even if it takes 3 years. But if my board is contemplating whether we should do it or not, it's not discontinued yet. All right, and finally, unusual or infrequent item. Okay, now this number has a lot of historical significance. If you're new to accounting world, you wouldn't know what is the significance. I'll quickly explain to you. See, what is the meaning of unusual? Something that happens not in the normal course of business. Or infrequent. Okay. Now, unusual means let's assume that you live in Japan, okay, and you have a business, and because of tsunami you had losses. Is it unusual for you? No. But is it infrequent for you? Yes. Right? You live in India, and there was a tsunami, and because of that you had losses. Is it unusual for you? Yes. And is it also infrequent? Yes. So back in the day, there was a loophole in the accounting. Okay, the loophole was, if an item was unusual and infrequent, then the companies were allowed to treat it differently. Those items were called extraordinary items. How differently? They were exempted from showing them in the main P&L. They could show it at the bottom. So what companies will do is, if let's say I'm hiring her, I'm paying her salary. But some accountant would sit and say, you know what, paying her this year was unusual and infrequent. I mean, I generally don't pay salary, to XYZ purpose, but this year I paid. It was a very elegant way to manipulate your books. Accounting standards remove that. Okay, and that's why this becomes important from testable perspective. Unusual or infrequent, unusual and infrequent, only unusual, only infrequent, does not matter. Kuch bhi ho. What is accounting treatment? Accounting treatment is, it has to be included in continuing operations. It's okay to show it, disclose it separately. You can show that I had losses through tsunami, but you cannot show it separately in the other item. It has to be shown as an operating expense. That's it. Is this clear? Uh, and I think we're more or less done. Let me quickly check if there's anything that I'm missing. No. EPS is done. There is something called as a common statement. I'll do all of them together towards the end. I think you've earned your break now. क्या time हुआ है? 6. 20 minutes is going to be good. 20 minutes break चलेगा ना? We have time. हो जाएगा हमारा आराम से. We'll do 20 minutes. I'm putting on a timer for all of us. Start in 20 minutes.
Whatever you're writing is coming after a lag of like 15 seconds to us. It's highly.
Yeah, there's a little bit of lag. Not for today. Except the classroom lag. पर अभी कुछ नहीं कर सकते. नेक्स्ट क्लास में ट्राई करके देखेंगे. नेक्स्ट क्लास में रात में हम प्रोजेक्टर लगा के देखेंगे ना. क्या?
So there's a very big lag between what you're saying.
तुझा वीडियो जो है ना तो पूरा थोड़ा फॉरवर्ड कर. मे बी योर वीडियो इज एट लैग. इट शुड बी ए 20-second lag.
Yeah, but there's a rather large lag.
Yeah, I forgot stock split and bonus. We'll do it after the break. I forgot that.
Sir, in capitalizing you miss 1 point. Equity subsequent year.
It will always be higher.
Higher, yes.
That's why I kept it just higher.
Sir, last was best course मध्ये होता point.
क्या हो रहा है?
Actually, वॉइस और स्क्रीन आगे पीछे हो रहा है. मतलब आप जो बोल रहे हैं जो स्क्रीन पे लिखा जा रहा है वो पीछे हो रहा है. तो मैंने पूछा कि स्क्रीन लिंक रहती है तो फिर सिंक रहता है ना आपका वॉइस और गेटिंग भी.
Let's try. Let's take that risk. देखते हैं होता है क्या. So he's connecting me to projector directly now. We'll see if I'm just hoping that the resolutions do not change. Otherwise, we'll have to go and fix that. Okay, let's try. Go. Now what it has done is I've lost control of my screen. Can you please wait a minute? Okay. I don't know why is this creating a flicker. It's visible now, right? Hmm. But it's on YouTube now, it's creating a flicker that's coming through OBS, right? Now that must be coming through OBS because suddenly the resolution changed.
What if we turn off and turn on that again?
What, OBS?
No, that specific screen capture.
Okay.
हे जे फक्त होतं ना एकदा turn off करून turn on करा. Then
What turn off and turn on?
that specific screen capture.
Inside the OBS?
Yeah. That's it.
पहले डिलीट करूँ कर देगा ऐड करना ये एक
Present value 18.
प्रत्येकाला करावं लागेल ना सो व्हॉट यू डू इज हे सेकंडमध्ये डिलीट कर देन कॉपी पेस्ट दिस वन अगेन एव्हरीवेअर दोन मधली परफेक्ट आहे डिलीट कर एक मधली बिल्कुल पूछ आपकी एग्जाम कब है पूछ
यूएस गैप में इन्वेंटरी राइट डाउन पे वी कंपेयर बुक वैल्यू और कैरिंग वैल्यू टू अनडिस्काउंटेड अगर कैरिंग वैल्यू कम हुआ देन वी डू कैरिंग वैल्यू माइनस प्रेजेंट
This is
वैल्यू
not inventory write down, this is PPA write down. You're confusing the two. So in inventory write down under US GAAP, you compare, there are two options, either cost with NRV directly, like same as IFRS, or if you're using LIFO method or retail method, then you do cost with market replacement.
रिप्लेसमेंट
That replacement needs to be between NRV
In every minus
Minus
normal
profit
profit.
NRV minus NPA.
नहीं ये वाला पीपी वाला वी डू इफ सीवी इज लेस देन अनडिस्काउंटेड
Is it done? Just
Yes,
one
sir.
minute, let me just check and answer your query.
Then it's all right.
Okay, let me just cross check once. Okay, this is second, this is third, fourth, fifth. Good, very nice. Thank you.
No lag.
No lag now, right? Great. Is there a way we can stop the audio feed to YouTube? I'm guessing our audio is still feeding into YouTube. Even in the break, the audio is still feeding into YouTube. How do I do it? I have to click here and here again, right? Only. YouTube, can you please confirm if the audio video looks all right to you now? Okay. Hi Deepak, how are you doing? Good to have Altaf Raja back. क्या अल्ताफ राजा? अच्छा वो
FSA crash course.
उसमें स्टोरी है क्या अल्ताफ वाला? CFA रिजल्ट का ना? How many times have you seen? You remember everything in my crash course, huh? Nice. We tried fixing that problem that we had. Now there's no latency. Now it's real time. Sure. I hope. All right. On the income statement, I forgot to do one concept. Thanks to the audience on YouTube, they reminded me. We have to do we have to do basic EPS in case of, did we do stock split and bonus share scenario? No. So let's do that. Again, EPS calculation, stock split and bonus shares. Now I'll give you a simple trick. For both of them, you just need one item. Okay. For both of them, you just need one item, which is okay, which is a multiplier. Okay. Now I'll show you how to calculate multipliers first. In fact, here's what we'll do. First, we'll do an example, so you'll understand the use of multiplier. Then I'll show you. We'll create 4 or 5 sub-examples where no matter what scenario comes on the exam, you'd be able to do the multiplier. Okay. So here we go. Let us say profit after tax is 100. On 1st of January, we have 10 shares outstanding. Then on 1st of April, we have a new issue of let's say another 12 shares. Then on 19th of April, we have a bonus share. Okay, what is the ratio? 2 shares for every 3 shares. Two shares for every 3 shares. Then on 1st of July, let's do a buyback of 90 shares. Then on 1st of October, let's issue 120 shares. Then on 21st of October, let's do a split. 1 into 5. 1 into 5. Then on 1st of November, I'm just being stupid here, okay? Naneshwar is right. These kind of, these kind of he Daneshwar is spot on. He says ऐसे थोड़ी ना आता है exam में. That is true. I'm just like, you know, how my head working when I'm setting this example is I want to cover all possible scenarios in one question. So this scenario, that scenario. So of course one question on the exam is not going to be so big. But one scenario out of 5 or 6 scenarios I'm creating, one scenario might be tested. On 1st of November, let's continue this madness. We'll do a buyback of 180 shares. Then on 17th of November, there's no limit to madness here. 17th November, we will do a reverse split. Reverse split, 2 shares into 1. 17th November, reverse split, 2 shares into 1. And finally on 1st of December, now enough because I don't have space left on the screen, we'll do a fresh issue of 360 shares. PAT को थोड़ा बढ़ा रहता है, make PAT as 10,000. PAT as 10,000. Please calculate weighted average number of common shares outstanding during the year and then figure out EPS. It's covering almost all the scenarios that you might see on the exam. Everything. There you go. I already have one answer in my, did I just say cancer? I have one answer in my classroom here from Navid. How much? 176. 176, okay. $176. Faster than GPT, huh? Diet Coke, do you know how to do this? When are you taking the test? August. Chill karo. Are you going to mix something in your Diet Coke or no? इसे करेगा तो तेरे को थोड़ी ना बताएगा, huh? It's going negative at first buyback. Yeah, you're right. You know, first buyback, I cannot buy back so many shares, utne shares hai hi nahi. So 100 shares, please. Sorry. Doesn't change much. My apologies, I made a mistake. No, but it's logically impossible to buy back 90 when there are no 90 shares in the market, no? So let's make the first shares as 100. Correct. Shri, good observation, and thank you for catching that. Mukund Gupta, spot on.
Would we treat 19 people and first April the same way for multiplying?
I mean, that's the trick. The trick is we have 3 corporate action items here. One is your bonus share. Then we have, what else do we have? We have a split here, and we have a reverse split. For each one of them, you'll have to do a multiplier, and you'll have to use that multiplier for all the activities or items above. That means before. So which means bonus share, which is happening on 19th April, that 19th April doesn't matter. as long as what matters is that events before 19 April and after. So before we have two events, 1st January, 1st April. So the first multiplier is applied to them. Instead of 19, if that date were 20 or 22nd or 25th, doesn't matter. Same solution. Daneshwar, what is the answer? 1,30,000. वो कितना स्वैग में बोला, मैंने अटेम्प्ट 2 बार दिया. सही है. The question might go off screen just for a minute. I'm having trouble with my tablet here, trying to fix it.
weighted average 376.
All right, is it okay if I solve this with your permission, or do you need time? Diet Coke, are you somewhere with this? Have you studied FRM before? No. It's okay. Chill. क्या खा रहा है तू? अच्छा, Lays, ठीक. Lays, what's your answer? Huh? हाँ जी, खुशी +1, what's happening? We calculate before and after. Good. Huh? 23.1. Very impressed. I have one answer in the classroom. 23. 2 answer, 3 answer. 23.1. I have 3 answers. 23.1. Naneshwar. नहीं. Answer नहीं है. मतलब नहीं बोलोगे. नहीं किया. अच्छा. I see a lot of new faces here. Some of you have just come for the crash course, is it? How about you, sir? What's your name? Ronak. Is this the first time you're coming here? Second time. एक बार admission के वक्त. When are you taking the test? Exam कब है? अच्छा, then it's fine. All right, I'm solving this now. See, it's easy. I'll tell you what you need to do. You need to solve it in, अब मैं बोलूँगा, सब सुनो ध्यान से. You need to solve it in 2 steps. Step number 1, just do the usual time-based multiplier, ignoring bonus split and reverse split, okay? So here, 1st January, 12 by 12, help me out please. Then 1st April will be, come on, 1st April will be 9 by 12. Ignore 19th April. Then 1st July will be 6 by 12. 1st October, 3 by 12. Then 1st November, 2 by 12. And 1st December, 1 by 12. Okay? So 1, 2, 3, 4, 5, 6. 6 of those issuance or buybacks. Now we start with, for every bonus or split or reverse split, we have to do something called as a multiplier. Now, the way to calculate multiplier, and if you look at CFA curriculum, you'd find that technique very complex. I'm giving you a very easy way to do it. A very easy way to do it is, just ask yourself, how many shares I have after divided by how many shares I had before. Before the activity, after the activity. It's that simple, okay? So, bonus shares, you're getting 2 shares for every 3 shares. Okay? Now, listen to this carefully. 2 shares मिल रहे free, 2 shares free for every 3 shares. So, if you had 3 shares before, how many will you have after? If you had 3 shares before, how many will you have after? That's right, 3 plus 2, 5. So 5 divided by 3. 1.67, that's your multiplier 1. So we'll call it as M1, multiplier 1. Did you understand the logic of after by before? Now you can take any random number, you can say I had 300 shares before, after I will have 500 shares. The ratio will always be same. After divided by before. That's the technique. Easy? Now once I have a multiplier of 1.67, what do I do with this 1.67? Jaideep, this 1.67 I will multiply with all the events above, right? So into 1.67 into 1.67, done. M1 is taken care of. Are you following the logic here? Then let us do 21st of October. We have a split 1 share into 5. For this we need M2. Same formula. After, before. Okay? It's a split. You are going to split 1 share into 5 parts. So if you had 1 share before and they break it down into 5 parts, how many shares will you have after? 5. So 5 by 1, 5. This is your M2, multiplier 2. Now this M2 will multiply which all events? Everything that's above. Okay? So M2, should I multiply this 1st January with 5? Yes. Should I multiply 1st April with 5? Yes. Should I multiply 1st July? Yes. 1st October? Yes. Should I multiply 1st November? No. Everything that's above. Since split is happening on 21st of October, all the events which are happening above. Are you with me? And finally, reverse split, 2 shares into 1. So we'll do exactly the same logic. After divided by before. Tell me, how many shares you had before? 1. Okay, no, sorry, in fact, 2 shares. Now 2 shares, they reverse split. Reverse split means 2 को जोड़ के 1 बना दिया. है ना? Reverse split is opposite of split. So 2 shares, after they'll become how much? 1. So what's your multiplier? 0.5. This is your M3. Now this 0.5 I will multiply with what? Everything. So into 0.5, into 0.5, into 0.5, into 0.5, into 0.5, and should I multiply with the last one? No. And then we are done. So now we are ready to compute the total. So this will be, you'll have to help me with this, 100 into 12 by 12, which is 1 into 1.67 into 5 into 0.5.
416.6.
416.6. Then 12 into 9 by 12 into 1.67 into 5 into 0.5.
37.5.
30?
37.5.
0.5. Then 90 into 6 by 12, which is half into 5 into 0.5.
112.5.
Huh?
112.5.
1?
12.
112.5 negative. Then this one will be 120 into 3 by 12 into 5 into 0.5.
75.
70? 75. Okay. And this will be 180 into 2 by 12 into 0.5.
15 minus.
15 negative, that's it. And finally 360 into 1 by 12.
30.
30 positive. And now we kind of add up the numbers. So 416.6 plus 37.5 minus 112.5 plus 75 minus 15 plus 30. How much?
431.67.
431.67.
67.
Okay. And then simply your final answer is going to be, your profit number was how much? Your profit number was 10,000 divided by weighted average number of common shares 431.67. How much?
23.17.
23.17. Someone on the chat box is telling me this is 417.5. I think it could be because of that incremental decimal, right? It's not 1.67, I'm guessing it's 1.66666. So small changes is okay, right? It's fine. Answer will be in the ballpark. I think CFA exam we should be okay. How many of you would say that I have understood this? Give me a hand raise and I pass on the chat box. Okay, good. This method also seems complex. Why don't we do entry by entry? I got the same answer by doing that way. Sure, Himanshi, if that works for you, do it. Vedang, maybe you can refer to this video again. Now, I'll give you some different variations of what kind of corporate event we can have, right? So, bonus. Let's say someone says, you're getting 1 share for every 2 shares. What would be your multiplier? 1 share for every 2 shares. So before you had how much? Before you had how much? Just give me before by after. That's the only thing you need to know, right? Sorry, after divided by before. So before you had 2 shares. After you will have 2 plus 1. So 3 by 2. That's your multiplier. Let's assume 3 shares, okay, for every 10 shares. So tell me what's the multiplier now? We'll have 10 here, numerator will be 10 plus 3. So if they give you a bonus like this, it's easy, no? Straightforward. What if they tell you, and it gets very interesting. If I were writing the question, maybe I'll use something like this. I will say 70% bonus. 70% bonus shares. Okay. So how will I do it then? I will say if I have 100 shares before, they're giving me 70 shares free. So how many shares will I have? 100 plus 70, 170. So my multiplier will come out to be 1.7. Is that making sense? What if they tell you 40% bonus shares? Then 100 plus 40. Okay. Now in case of split, what if they tell you 2 shares into 5 shares? Now generally that wouldn't happen, but just for fun. 2 shares into 5 shares. So earlier, before you had how many shares? 2. After you will have how many shares? 5. Reverse split. 5 shares into 2 shares. So पहले कितने थे? 5. After 2. Just inverse. Reverse split is just inverse. Is it making sense? What if 1 into 10? So earlier you had how many? 1. Now you have how many? 10. So that will become how much? 10. That's your multiplier. So do not miss out a single question on EPS on the exam. These are bonus, right? Like no thinking whatsoever. I think this is the easiest section on the exam to score. Make sure you're comfortable with all possible variation. Should be able to do. Okay, why are we not adding 2 plus 5? Sneha, bonus works, split works differently than bonus. You might want to read up a little bit on that. In split, you're splitting the existing share, you're not giving additional shares free. Okay. All right, ready for the third reading? Reading number 3, LM3, which is understanding balance sheet. I have four major sections for us. The first section I want to cover with you is the property, plant and equipment accounting. Now, under IFRS and under US GAAP. This is LM3 is called क्या balance sheet analysis या क्या नाम है इसका? Analyzing balance sheets. It's a balance sheet reading. So we have to learn balance sheet. Now, how do you do accounting for PP? PP stands for what? Property, plant and equipment. Under US GAAP, this accounting will always work on something called as a cost model. What do you mean by a cost model? Imagine this is year 2030 and I buy a building or a flat or an office at a price of 100. Then on my balance sheet in year 2030, PP will be shown at a price of 100, that's obvious. Let's say this building has a life of 100 years. Okay, so now I've reached year 2031. Now obviously I need to depreciate this building, but the market value of the building has become 150. The market value has appreciated. So now on my balance sheet I will show this PP at a price of, you purchased a building, you purchased it for 100, the life of that building is 100 years, but next year the market value of that building has become 150 rupees. On your balance sheet you will show it at what price? You'll show it at a price of 99. 100 minus depreciation of 1 rupee. Why? 100 rupee building, 100 years of life. So every year you depreciate it by 1 rupee. You say, I don't give a F about the market value. I don't care. Why? Because I'm an accountant, I'm using historical cost method. I do not consider differences in market value. Are you with me on this? Now, year 2032, market value of your building has become 200. On your balance sheet, PP will be shown at 98. Very smart. 98. Again, we do not consider this market value of 200. With me on this? Now, this is year 2033. Market value of your asset has become 40. Something went wrong, right? And you want to show PP on your books. The PP you would show at what price? Huh? 99? 37? 97? What do you think? What should be the value of PP? Diet Coke, what? आपको क्या लगता है? नहीं? Lays. दोनों को साथ में बिठाओ. कितना? 47? 37? The PP will be shown at 97. You ignore upside, you ignore downside. However, when the market value has fallen so much, your accountant will ask you a question. Okay? So accountant will ask you a question. Is the fall in the asset price temporary or other than temporary. Accountants kind of like to use that weird word. Other than temporary. Other than temporary means permanent. But they will not use the word permanent because it has some legal ramifications. So other than temporary. If it is temporary, then my balance sheet will remain at 97. I don't give a F about market value of 40. Market value will keep on fluctuating. I am using historical cost model. My balance sheet will move in the same way. With me on this? However, if my fall in the asset price is other than temporary, which means permanent, right? So for example, I bought an office, that time I had a nice view in front of me, but by the time I reached year 2033, government ने decide किया कि वहाँ पे कचरा store करेंगे, है ना? और government, something happened, maybe your city was discarded, maybe your city became Lavasa city, है ना? So all the properties in Lavasa now are experiencing the same thing. So then what you do? Then you do something very interesting. You will still show your PPE at 97, okay? But market value is how much? 40 rupees now, right? So then you would say less impairment. And that impairment would be how much? Of 57 rupees. 57 sahi hai? And then value of the PPE after impairment will become how much? It will become 40 rupees, which is the current market value of that property. What is this impairment? Impairment is a one-time significant reduction in the value of asset when the decline in the value of asset is other than temporary, matlab permanent. Now impairment can happen on any assets. It not only on building, but it can also happen on furniture, right? It can also happen on, bolo, factory. It can happen on your machinery. It can also happen, and in fact happens very frequently, on your software. You invested into a software and suddenly technology changed. So you can impair that, right? Or, very interestingly, impairment also happens on goodwill. Right? So goodwill is one asset where we do not amortize, we do not depreciate, but goodwill we definitely have to impair. And I'll be covering that, it's in my list, it's point number 3. But this is the concept of impairment. Now the question you should ask is, fine, understood. I'm going to deduct that 57, which is like a one-time charge of sorts. What is the second effect? Because it's such a big expense, right? 57. So should I take it to my P&L and create volatility, or should I directly take it to OCI? So the second effect of this is, P&L expense. You directly show the whole 57 as expense. Think about what must be happening to companies that are doing this type of impairment. Right? You bought something, something went wrong, now you need to impair. That entire reduction in the value of the asset, you have to show expense in 1 year. Your entire profitability is going to tank in that particular year. Are you with me on this? However, is there a brighter side to this impairment? Taxes? No. See, always remember, tax accounting statement are completely different. Whatever we are doing here, Tax Babu does not even look at this. Tax Babu will prepare their own financial statements. Those are called income tax returns. This financial statement does not have direct correlation with what happens to taxes. Taxes के लिए अलग statement बनता है, अलग accounts बनता है. Those are called tax return. But there is a brighter side to this impairment. Think about it. What is it?
ROE will increase next year.
What is the brighter side of the impairment? The brighter side of this impairment is, now next year onwards, I do not have to charge depreciation on 100 rupees divided by 100 years, because now my asset remaining is how much? 40. And how many years have passed since the time I purchased it? 3 years. So how many years left next year onwards? 96 or 96 years left, right? And now the value of the asset is 40. So next year onwards, I will not charge depreciation of 1 rupee, because asset is only 40. That 40 I want to make 0 in 96 years. So next year depreciation would be what? 40 divided by 96. Until last year depreciation was how much? 1 rupee. This year depreciation will come down dramatically. So next year onwards, will my profitability improve? Yes, because what you did is multiple years of depreciation you charged in one go. So one benefit of having impairment is that subsequent year depreciation will go down, therefore subsequent year profitability will go down. Sorry, go up. One more benefit. When I charge impairment, we know that it's an expense. Now, expense will have what impact on equity? Expense will decrease your equity. So will your equity decrease dramatically? Yes. Think about what happens next year. Next year you have lower equity, but you have higher profit. So next year my return on equity will go up. So it's almost like zahar pe ke khud ko theek kar lo, right? You put yourself through extreme stress. Next year onwards everything will look nicer. Because next year onwards your profitability will be attractive, your equity base will be lower. In fact, one more. There's a ratio called asset turnover. Thank you. Who is that? Eco with Geeko on the chat box. Thank you very much. Asset turnover is what? I have asset of, imagine this company every year does sales of 200 rupees. Asset is worth 100. How many times of asset? 2 times. 2 times, right? So that's called asset turnover. Asset of 100 but sales of 200. So मैं जितना भी asset है उसके 2 गुना sales कर रहा हूँ. Whatever is the asset, 2 times the sales. Now in this year, my asset is only 40. But my sales is still 200. So what is my asset turnover? 5. So suddenly all the ratios will start looking beautiful. So you kind of take that one-time trouble, one-time pain of impairment, but subsequent years then everything will become attractive. Have you understood this? Now, how is this a manipulation technique? This question is discussed in your last reading. I'm just connecting the two. What companies will do is, especially a smart company, we know that a lot of businesses are cyclical. They have good times and they have bad times. If I'm a smart guy, what I'll do is in my good times, I will recognize a lot of impairment. Because anyways I have good times, anyways I have good profit. So let me recognize those impairment and reduce my profit a little bit. Markets will be forgiving. Next year onwards, when I have bad times, when I already have low sales, but I will have the benefit of lower depreciation, therefore my profitability will look okay. So it can be a fantastic manipulation technique where you can smoothen out your earnings over a cycle. Is that understood? So what is this model called? This is called the cost model. This is recommended under which method? US GAAP. Now under IFRS, we have 2 options. We can use the cost model or we can use a revaluation model. Now cost model is same, but revaluation model is different. Now what is the revaluation model? In revaluation model, it is okay to show your assets, at fair value. Fair value means market value. Okay. Now, on the face of it, looks nice, but slightly more difficult to execute, and see how. Imagine I have 100 rupees of beginning asset. Now, by the end of year 1, the fair value of the asset became 150. How much is my revaluation gain? 50 rupees. What accounting standard says is this 50 rupees you cannot take to P&L. Why? Because you're not truly earning it, it's just that the asset value went up. Correct? So you want to be conservative. This 50 rupees you have to take to OCI, other comprehensive income. So you please bypass your P&L, directly transfer it to OCI. This is called equity. OCI is a part of equity. Now, next year, that 150 became 120. Now you have a loss of how much? 30. So then if you have previous gain in OCI, then this loss you have to put in OCI again. Okay. Next year, 120 became, and I hope you're listening to me, it gets a little tricky here, 90. Now you have a loss of how much? 30. Okay? However, how much profit you have left in OCI? 20. So you divide this in two parts. You will say up to 20, I will transfer this to OCI. I hope everyone is understanding what's happening here. Up to 20, I will transfer this to OCI. But how about that new loss of 10? That I will take to P&L. So the logic here is loss, P&L, profit, OCI, reversal, where you originally made the adjustment. So if original profit you're reversing, then profit must be in OCI, so reverse that in OCI. If you're reversing original loss must be in P&L. When you reverse it in P&L. I'll show you the second example. Let's look at one more example here. Let us say original asset value is 100. Let's say 100 became 70. Now you have a loss of how much? 30. Where should this go? This directly goes to P&L. Conservatism. Profit in OCI, loss in P&L. Now, 70 became 90. You have a profit of 20. Now where should this profit go? This will go to P&L, not OCI. Why? Because this profit is not fresh profit. It's just a reversal of previous loss. My previous loss accumulated is how much? 30. So then 20 I am allowed to put in P&L. Had it been a fresh profit, I would have put it in OCI. Are you following the spirit here? Profit, OCI, loss, P&L. If you're reversing, reverse from the previous account first. Then apply the fresh rule. Let's say 90 became, let's say 120. Now how much is the profit? 30. Now this I will break it down into two parts. Fantastic, very nice. 10 to P&L because then P&L net becomes 0. And now I have incremental fresh profit of 20 which will go to OCI. This is your revaluation method under IFRS. आया समझ में? आसान है? This model was supposed to be a big thing. There's a big story behind this. I'll just give you a quick summary. Proponents of this model, right? The ones which were sitting on that IFRS committee, they were saying, those guys were thinking, what is that historical cost nonsense? I mean, I'm buying some building 30 years ago for 100 rupees. 1 rupee depreciation is showing at 70, but market it might be worth 700, right? So why are we using that old historical cost method where your balance sheet values have no connection with market values? Let's allow people to use fair value. On the face of it looked good. When this came, believe it or not, there was a lot of, like in the CFA circle, there was a lot of excitement. Just think about it. If every asset needs to be valued at fair value, then you need thousands of people to value the asset, no? Who are those people? You and me, right? So CFA, there's a lot of excitement. It's like, bahut badhiya, we'll have plenty of jobs, everyone will be paid very well. However, practically, adaptation of this model has been relatively poor. Okay, and for a simple reason that valuing your asset on every balance sheet date to this precision is extremely expensive to do. Now, depending on the nature of your asset, imagine you have refinery assets. Imagine you have those massive oil drills, right, or oil rigs. Now, how do you value assets like those? So, which means you'll have to spend a lot of money hiring consultants, and the whole cost of revaluation would be too high. So, even though this model is there, the adoption is relatively low. Most of the adoption in this space is typically companies which have very easily available market values of the assets. Otherwise, most of the companies even today prefer to be on cost model, right? And it's an interesting thing to know because whenever you're reading balance sheets of listed companies, the value that you see on the balance sheet is not necessarily the true market value. Why? Because we know the value on the balance sheet is calculated using, bolo, historical cost method. Is this clear? Now there are some finer expenses that we'll deal about in a bit. Let me just take that now itself. Just give me a minute. Okay, I think it's done. Now let's pick up second item, which is R&D expenses. R&D expenses. Research and development expenses. There's a beautiful flow chart in your juice notes. Very relevant for a theory question. Should be visible on my screen now. Now, what is this? There are two types of expenses, right? Research and development. Prima facie, what does it mean? Think of, let's say, pharmaceuticals. I'm doing research on some molecule that I feel will be able to solve for, or let's say I'm building some diagnostic method where I can look at the blood and figure out if there is a cancer cell in it. Some people are actually doing it. Pune-based company. Met them last month. A lot of different diagnosis techniques on cancer. Now, step one would be research, where you try this method, that method, right? And you keep on spending money for years. Once your research is successful, that means you find something. After that also, it's a very long method for you to develop that into a medical product, right? Whether it's a medical device or it's a drug, there is a process of FDA approval. It's a 3-step process, step clinical trial, step 1, step 2, step 3. So the cost that I incur for development. Now, would you agree that if I find a cure for cancer today, do you think I would be worth in maybe trillions of dollars? Yes? You know? If I find something, that means that IP that I'm finding, is it valuable? So then, will it be earning me money for years and years to come? Patent typically makes you money for 20 years. So I can make crazy amount of money for 20 years, right? The question is, can I show it as an asset on my books? Because if I can make money for 20 years, then can I create an asset? Asset means, can I capitalize it? That's the question. What do you think? The answer is depends. Depends on what? Depends on whether you're following IFRS or you're following US GAAP. Very interestingly, under IFRS, they have a very logical note. They say if it's a research cost, please expense. If it's a research cost, directly expense. If it's a development cost, then it's okay for you to capitalize, and kind of makes sense because research can be non-directional. I've seen a lot of instances where people will do some research, they will invent something, and then they will find out, and typically that's how scientists' brains work, they will invent something, then they will find out where can I apply this in real world scenario. I'm just working on one case right now. There's one particular professor, I shouldn't tell you much, but he built something, a molecule with certain property, and then he figured that, okay, maybe can I use it for, I don't know what to use it for, so now can I use it for certain type of test for children, kuch kar raha hai wo. So research, expense, development phase, you can directly capitalize. If the following conditions are met, technical feasibility is met, and intention to complete and use or sell the asset. That means I have an intention to complete the entire development phase, then I am allowed to capitalize it. Now, under US GAAP, it's very interesting. The US GAAP says research cost is all expense. Development cost under US GAAP is also to be expensed. So under US GAAP, you expense out both research and development, except something called as something for software development cost. Okay. Now for software, we have two scenarios. Are you building the software for sale? That means are you Microsoft? Or are you building software for internal use? Maybe you're a manufacturing company. If you're building software for sale, you can capitalize it after the tech feasibility is proven, similar to development. If you're building software for internal use, capitalize after you feel the project completion is probable. You need to know these specifics. Now I'll give you a scenario. Imagine at FinTree we decide to design a new software, an AI-based software to track, like one of the real problem that we want to solve at FinTree, I was discussing with my team in the afternoon is, we want to be able to intervene in the first week in which one of our candidate is not studying. Because we were discussing on how do we improve, net take rates, improve retention rate and all of those. The problem, मैंने उनको बोला कि जड़ पे solve करते हैं, because there's no point solving a problem 1 month before the exam. So can we build some tech where we figure out, intervene right in the first week in which you people do not study, right? And for whatever reason. Because I think if there's an intervention there, then it's easier to bring people on track. Let's assume we decide to invest into the software, build onto the software. Now, am I allowed to capitalize and create an asset out of it in US GAAP? The answer is yes. If we are confident that we'll be completing the project. That means converting that into an asset, right? Now, let's assume that I'm building that software that I can go and sell that to other education companies. Okay? Am I allowed to capitalize? Yes. After when? The feasibility of doing something like this is proven. And for all practical purpose, of course, yes. Otherwise, why would I spend money if it's not proven? Right? So, for all practical purpose, money that you spend on software development will be capitalized. Okay, so that's a small note on R&D. The third section. Are you with me on this? Okay. I'll cover some more theory points a little later. I'm just doing big picture on this. The third one is very interesting. Third one is goodwill. Okay. I have two companies, A and B. Both of them are, let us say, in the business of fast food, okay, QSR, quick service restaurant. Okay, so let's say both of them are selling bolo kuch QSR wala product. Let's say they have, both of them are selling healthy sandwiches. If that thing exists, so healthy sandwiches. Okay. Now, over a period of time, both of them are equal size companies. ध्यान से सुनना. And I'll be very impressed if you get the answer right. But I don't think आप में से किसी को आएगा, but देखते हैं. Both of them are equal size, equal revenue, equal cost. The difference being, company A has a very poor customer service. If someone buys something and they don't like the food or they never replace or whatever, customer service is very bad. Company B has an excellent customer service. Alright. Now, based on this information, my question to you is, which company do you think will have higher goodwill? Company B.
No one. No one.
Huh?
No one. Nothing.
No company.
Both will same.
Both will be same.
No goodwill.
B has it, but they both will not
Which one, my question is, which one will have higher goodwill on the balance sheet? A or B? Generated goodwill is not shown on the balance sheet. Is not recorded on balance sheet. So even though in reality maybe B has a higher goodwill, but on the balance sheet it will not have any goodwill at all. Did you get the concept? Which means you look at the best brands in the world, which have probably excellent customer service, high quality products, right? Everything that you consider creates goodwill. Their own goodwill on their own books is zero because they are not allowed to record it. Is this clear? Now, so in what case do you record the goodwill? Goodwill is recorded only when we have some sort of a acquisition. Okay, goodwill is recorded only at the time of acquisition, which means one company acquiring another company. How do you calculate goodwill? Let me show you an example. Again, a trick question. This one probably will not come on the exam. Some smaller difficulty will come, but if you can do this, you can do the easier one always. Let us say this is a company I want to acquire. So this is an acquiree company. Okay? And this is acquirer. Acquirer is a large company. Let's keep simple balance sheet for acquirer. 10,000 equity and 10,000 cash. Acquirer is going to acquire 100% of acquiree. पूरा 100% shares हम लोग ले लेंगे. Now, the property, the asset on the acquiree books is they have a goodwill of 100 rupees. They have a PP of 500. They have cash of 400. They have accounts receivable of 1500. And they have inventory, sorry, I messed up the sequence on this one. They have inventory of another 1000. So this is 600, 1000, 1500, 2500. They have equity of 10,000. Sorry, equity of 1500, and they have taken loan of 1000. Okay, so balance sheet tallying at 2500. Now, the market value of the assets, okay, or fair value of the assets, goodwill is not given. PP is 1000, cash obviously will be same. Interestingly, accounts receivable is worth only 200. Inventory is worth only 800. 24. And this is 1000. To acquire 100%, the amount that we are going to pay is 4,000. Okay, your job is to figure out to calculate the goodwill that will come out of this transaction. If you do this, I'll be super impressed. I can tell you most of the people on YouTube chat box are wrong at the moment. Almost everyone seems like is making a mistake. Okay? 1400. Okay, give me hand raise, tell me what's your answer.
2600.
2600. Okay, I have one answer as 2600 from Jayavardhan. Sorry, Jayavardhan. आपका पीछे आंसर कितना? 1400. Okay. Anyone else? 2500. Shabash. Okay. Anyone else? 1500. Okay. 1600. Okay. Anyone else? Last row, TV के नीचे, how much? 1400. Okay. All right, let's see. Generally, goodwill is equal to excess amount paid, okay, over, look at the language, fair value of net identifiable asset. So we have to learn few concepts here. This thing is really important, this term that I'm showing you now. So first you want to ask yourself, net means what? Net matlab kya hai? asset minus liability, है ना? Fair value means market value. Very interestingly, what do you mean by identifiable? Can anyone tell me in this class, we've 30-40 people here, about 150 on YouTube at the moment, can at least one person tell me what identifiable means? Okay, can we pass on the mic? Give me an answer on the mic. Yes. Is it on? Okay.
If I can sell that goodwill and still run my business, then it is identifiable. If I sell it and then I cannot run my business, then it is unidentifiable.
Do you agree with him? Yes. Any asset that can be separately sold from my business, any asset that I can sell and still retain the business is identifiable. But ऐसा asset जो मैं अलग से नहीं बेच सकता, that is non-identifiable. Think about it. Can you sell goodwill of your business and still have the business? No, right? Imagine you had some emergency. Can you sell your furniture and still have the business? Can you sell your building, still have the business? But you cannot sell your goodwill and still have the business. Therefore, goodwill is a non-identifiable asset. Okay? So, which means what? Which means, first we calculate their net identifiable asset. Remember, I have to use the market values when I do that. Okay? So, here we go. I have to add up all these assets and leave out goodwill. So 1000 plus 400, 1400, 1600, kitna ye? This is 2400. But remember, we have the word net. So here we have to take this debt. How much? 1000. So what is the net value of the assets? 1400. But for 1400, we are paying how much? 4000. How much extra did we pay? We paid 4000 minus 1400. So extra that we paid was 2600. This is called Hem Parekh. If yes, then please mention my name. Can you tell me that this live lecture are recording, because I have to go? Sure, Hem Parekh. Why would cash be considered? Because it's an identifiable asset. Anirudh. So even cash would be considered. This is the value of goodwill. Has everyone understood this? Okay, good. So this is goodwill. Now, once I record goodwill on my books, can I amortize it every year? Huh? No? I cannot amortize goodwill? No, I cannot. I can depreciate it though? No. Goodwill I can neither amortize nor depreciate. Tell me why. Goodwill I can neither amortize nor depreciate. Tell me why. Huh? You don't know the exact value of goodwill, but I have recorded now, no? 2600. What is not known? Useful life is not known. So does it have infinite useful life? It has indefinite useful life, which means I don't know whether goodwill will remain for 5 years, 10 years, 20 years, 2000 years. Therefore, we do not depreciate goodwill, we do not amortize goodwill, but we test goodwill for impairment, which is one-time significant reduction in the value of asset. Okay, very nice. Good. So, goodwill is out of the way. Now, we just have to do one last piece and then this reading is done for us. Section 4. Which is accounting for financial investments. Okay, so I'll give you a larger picture now. I'm going to create a big flowchart. It's not there in your juice notes, but it will come in very handy. This is for something called as intercorporate investments. Okay, what do you mean by intercorporate investment? One company investing into other company. Investing into other company. So we'll take an example of, kiska example le bolo? Okay, LIC is an insurance company, it would work differently. Let us say Reliance Industry. Okay, Reliance Industry buying shares of different companies. Now Reliance Industry buying shares of whom? Let's say Eternal. in fact, fun example, Reliance Industry buying shares of L&T. Do you know the story? Dhirubhai Ambani, back in the day, forcefully tried to acquire L&T. They wanted to acquire L&T. They were not successful because of Birlas. So Birlas came in as something called as white knight. Otherwise, L&T would have been a part of Reliance Industry. But let's assume that's the case here. Now, how much does Reliance Industry own in L&T? Do they own less than 20%, or between 20 to 50%, or 50% and above? Okay, so we have three categories: less than 20, 20 to 50, 50% and above. If the ownership is less than 20%, then it's purely a financial investment. Now this part at level 1 we have to do in depth. This will come on the exam. If the ownership is between 20 to 50%, then you have to use something called as an equity method of accounting for this. Equity method of accounting. This part we will learn in level 2. Just know the name. This is also called investment in associates. Investment in associates. At level 1 you are responsible only for knowing this name. Investment in associates or equity method. If the ownership is in 50% or more, then we have to do something called as a consolidation, because it becomes your subsidiary. Now there is a concept called true test. The true test here is significant influence, and the true, everything okay, Vishal? And the true test here is control. In one case, I am able to, Reliance Industry can exert influence on L&T. In one case, Reliance Industry can control L&T. आ रहा है समझ में? Now, both of these just know this name: significant influence, control, consolidation, investment in associates, done. This is the area we want to focus the most on. This is, by the way, a 7-star concept. Very, 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 very likely that you do something around this on the exam. That's my guess. Here, any financial investment we typically classify into 3 buckets: HTM, AFS, or trading. Also called as amortized cost, FVOCI, FVTPL. This is IFRS name, this is US GAAP name. Saurav Singh, you're right. HTM, AFS and trading. Okay. Now, HTM stands for held to maturity. AFS, available for sale. Trading. FVOCI, fair value through other comprehensive income. FVTPL, fair value through profit and loss account. Okay. Now, how do you do accounting for them? Generally, I'll give you a big picture. There are some nuances to it. Generally, if you are investing into bonds of other company, you're allowed to use HTM or amortized cost. So the first category is only accounting for bonds. You cannot have equity in this category. Okay, why can you not have equity in this category? Because it does not have a maturity, held to maturity. Equities do not have maturity. The second and the third category are generally for equities, though rarely you can have bonds here. Okay, but for all practical purpose, this is equity. So available for sale as well as trading. How to do accounting for them? On balance sheet, amortized cost or HTM will be shown at amortized cost. Okay, or purchase price plus some amortization. AFS will be shown at fair value. Trading will be shown at fair value. वो नाम में ही है, fair value through P&L, fair value through OCI. On income statement, under HTM, we will show realized gains. AFS, realized gains. Trading, realized gain as well as unrealized gains. Okay? And under OCI, amortized cost, we will have nothing. Here we will have unrealized gain. Extremely important flow chart, very, very testable. I'll create 3 or 4 examples for you. You'll understand what kind of questions will come on the exam. Ready? Have you written this? Okay, let's do an example. Example 1. Naneshwar will answer this for us. Can we pass on the mic to Naneshwar? Exam sarke bano to. He was complaining the questions are too big, so I'm shortening them. So Naneshwar, you're buying 100 shares of L&T. 100 shares of L&T at a price of rupees 10 per share. Okay. By the end of the year, the price of the share have become 17 per share. Plus, you have received dividend of how much? Rupees 1 per share at the end of the year. The method that you've chosen is AFS or FVOCI. Okay. I'm creating a starting balance sheet for you. Equity of 100 into 10, 1000, and AFS investment 1000. Now this is balance sheet of time 0. Let's create balance sheet of time 1 and let's create profit and loss account of time 1. Help me out. This investment at time 1, Naneshwar, we should show at what price? That's a mic. His mic is not working. See, how is this 1000 calculated? It is 100 into 10. 100 into 10. Now you're using AFS method.
Hello.
Yes.
At year 1, 1000, sir.
Sorry?
At year 1, we'll show at 1000.
At year 1, available for sale securities at 1000 or FVOCI securities at 1000. What is the flowchart saying? You can show these securities at what price?
Fair value.
You can show them at fair value. So what do you think we should do? Fair value means 17 per share. So we should show them at what price? We should show them at 1700. Okay. That means from 10 rupees to 17 rupees, what is my unrealized gain? 7 rupees. 7 rupees into 100 is how much?
7%.
700. That gain will go where? OCI. Should I take it to profit and loss account? No. So I will create an OCI gain of 700. See, is the balance sheet tallying here? 1700, 1700. Tallied, right? Now, how about dividend? Dividend, obviously, one effect would be cash. I will receive cash of 1 rupees into 100 is how much? 100. How about second effect? How about second effect of dividend? That's correct. Second effect would be realized gain, which is dividend of how much? 100. Right? And this 100 eventually will be transferred where? It will be transferred to retained earnings of 100. And then you take the total, balance sheet will tally. So dividend is realized gain, goes to P&L, but increase in share value is unrealized gain, goes to OCI. Balance sheet we show fair value. Now the same item, if it were to be treated as FVTPL, okay, Then how would we account for it? This is my balance sheet, equity 1000, trading.
Hello, hello.
Sorry, how am I supposed to correct this? अच्छा क्लिप ला लाओ मैग्नेट याला चिटको बाकी Okay. All right. Can you still hear me? Good. So where were we? If it's a FVTPL, what would be the value of investment here? It would be 1700. How about the second effect? That gain of 700, where do you think I should record it? It should be in P&L. So I will say unrealized gain of 700. Remember, eventually every gain gets transferred to equity, 700. Balance sheet will tally. How about dividend? Dividend would be cash of 100. Second effect, realized gain of 100. Remember, every gain transfers to equity. So I'll have another 100. Balance sheet will tally. That's the difference in the two methods. What do you think? Do you know what OCI is? So see, all that I've done is, I'm repeating this one more time. My 1000 rupee shares by the end of the year are becoming 1700. Yes? Plus I'm receiving dividend of 100. I'm breaking this down as original investment of 1000, 700 rupees of unrealized gain, 100 rupees of realized gain. Now, I can treat my assets either as FVOCI or I can treat my assets as FVTPL. At year 1 in balance sheet, I will show both of them at 1700. Why is that? Fair value. So दोनों जो है वो fair value में ही दिखाए. Fair value means current market value. Then on income statement, we will show how much? Under FVOCI, only realized gain, which is 100. And how about FVTPL? 700 plus 100. And what will be shown in OCI? 700, 0. So see, this is your total gain. Your total gain is 800. But the way we are dividing is under FVOCI, only realized is an income statement, remaining is directly in OCI, whereas under FVTPL, entire amount is going into income statement. That's it. Is that making sense? Comfortable here? Good. So we are more or less done. Let me just do some final theory. Come on, I'll give you another break, a smaller one, but please focus here. Okay, this part we've already discussed. This is discussed. Goodwill is discussed. Financial instrument is discussed. Okay. Uh, the bond liability and DTL will be doing in the taxes reading. And common statements I'll keep on hold. So we are done with this reading. How is it going so far? How many readings have we done? 3? क्या time हुआ? 7. How is it going with you? Oh, it's almost 8, huh? Good. Are you absorbing or not? अब थोड़ा जोश कम हो गया है। थोड़ा कम तो दिख रहा है मेरे को शक्ल पे आपके, हाँ? What is amortized cost? It is all practical purpose, it's the usual cost. It just includes amortization of premium and discount, but I think if you just think of it as cost, you'd be okay, Harshad. Break चाहिए? नहीं? हाँ नहीं. The session might get extended a little bit. Is that going to be okay? Okay. घर जाने की इच्छा नहीं है? Okay. Let's do a break first. Smaller one. कितना देर चाहिए? 15 minutes? नीचे जाओगे आओगे? हाय हाँ जाओ. जाके आओ. Come back in 15 minutes. Then we'll start with cash flow statement 1 and 2. Vishal sir, my camera is working. Though the frame is moved a little bit. ठीक. So. हाँ जी सब. I can understand Feb candidates must be very motivated. But August, May probably you should be motivated now, just a few months. हाँ, we are motivated इसलिए आया अच्छा. अब देखते हैं कब तक टिकता है आपका मोटिवेशन. हाँ? क्यों? निकलने के लिए? Online, are you ready? Should we start? But it took a lot of time to finish because that EPS takes generally a lot of time. After this, we don't have a lot of complicated stuff. We should be able to finish faster. My guess is another 3 hours. By 11, we should be done. Those of you who want to leave early, it's okay to leave early, right? Depending on, I don't know how are you guys going back? Are you going to be riding public transportation, buses? Pune में तो है ही नहीं buses, क्या ही लेंगे? How have you come? Uber. Okay. Should we start? All right. Now we're starting with the next two readings. Come on, guys. Chalo. Settle down, please.
Don't bucket me into that. Not just yet. Then we can work it out.
By the way, I wanted to ask, since you're studying finance now, are people from your friends and family calling you and asking you for financial advice? How many of you are now giving advices to people? Give me a hand raise, I'm curious. उठाओ उठाओ. अच्छा. And how many of you feel no matter हम कितना पढ़ ले घर वाले नहीं सुनेंगे? मतलब घर में औकात ही नहीं है. हाँ? पास होने के बाद सुनेंगे ऐसे लगता है आपको? वो भी शायद. Because those people know you. Most of them don't even know and understand what I'm doing. Abhay Kale. August while you're chilling. Giving advice to people who have never invested is easy. Because they can't cross question you.
No, there's like anything beyond a fixed deposit.
Anything beyond FD is easy. Yeah. क्या half knowledge क्या?
मैंने ज़्यादा जिंदगी जी
पापा क्या बोलते हैं?
मैंने तेरे से ज़्यादा देखा है.
मेरे से ज़्यादा देखा है. हाँ, of course. I also agree with your papa. So how many of you are either buying silver, gold, or recommending buying silver and gold to people?
Not silver.
Not silver anymore? What are you recommending? Gold? Gold, silver, both? And copper. You are the one You made all good money, huh? एकदम सीना चौड़ा करके है ना अभी तो. In my city, people don't understand what CFA exists. Crude, gold. I am managing portfolio of 80 lakhs family. भाई पब्लिक में अमाउंट मत लिखा करो. इको विथ केको. हम तो क्रूड में रख रहे हैं विश्वास. I've been buying loads of copper. How are you buying copper, Himansh? I have that question again. Where do you guys? Hindustan Copper, right? Have you seen how expensive that stock is? Just on the face of it, I mean, I remember to someone in my team, I gave that task. I said, find out a way to execute copper. We have only one mining company, right? And I don't know much about this company, to be honest, but Hindustan Copper, it's somewhat 100 P ratio and okay, so if I just put this on some sort of a chart, right? Forget P ratio because it's a commodity company, but look at market cap to sales. You're buying a commodity company at 25 times of sales. I mean, I don't get the logic of, what is the sanity in this valuation? Looks insanely expensive to me. 100 times. I mean, generally, to a tech company, you want to give 10 times of sales. Then someone who has something extremely proprietary and is going to grow exponentially, I'll do 15 times of sales. So looks very, very expensive. And probably they'll do okay. You can use a mic. You can use a mic.
But I don't want to say that on camera.
Oh, why? Say it on camera. We'll hide you. It's
Well, I mean, someone very close to me is in the same industry. Originally, a lot of import was coming from Vietnam after China. So the government is now forcing you to buy at a certain rate from companies like Hind Copper. So that's why the stock prices are going higher. And air conditioners are going to get really expensive. And fridges and a lot more.
Yeah, it's
Yeah.
already air conditioning is already crazy expensive.
Yeah.
The copper cabling in air conditioning is going to be as expensive as the whole unit. We experience it here
is. Yeah.
because you need copper to be able to transfer that.
And that quality is only available with very few people. The type of copper that they want.
The one that Hindustan Copper has.
Yes.
Okay. I don't know if am I betting on the company or on the copper? Yeah, because if I were to bet on the copper, I'll probably simply go to the US and buy copper ETFs.
Yeah.
But then this it's Hindustan Copper, somehow I don't understand. Maybe if anyone has studied the company, sure, enlighten me. Vedant says he's using material non-public. How do you know he's using material non-public? ये बस कुछ अपना ethics पढ़ लिया तो ज्ञान चिपका हो सब जगह पे. The other guy says no mosaic theory. Okay, Gaurav, you're right. Oh, उसको mic दे दो. खुशी +1, हाँ.
How do you determine the, you said,
No, use the mic. Use the mic. Why not? How?
Sir, how do you determine if you, like you said, you give 15 times to sales to this company? So how do you usually value that?
How do I know what times of sales? These are you study 200-300 businesses, you would also know. It's just something that you observe. It's basically what we've been seeing for years and years. IT services typically 5-6 times of sales.
No, but for beginners like us, how do we begin?
You begin by studying the businesses and see where the valuations are, right? It's simple. It's like, okay, let me show you. The question that I've been asked is, how do I know what price to sales is expensive or cheaper? So you take some industry, give me something. Let's take footwear. Okay, so let's take Relaxo. Go to peers and look at what is the market cap to sales in the footwear space. Forget Metro, it's a lot of hype maybe, but look at Bata, Relaxo, Campus, Red Tape, Street Leathers, Liberty. It's about 3 to 4, right? So footwear companies at about 3 to 4. You take Trent, Trent. Trent is a retail company. So you look at what is price to sales, about 7. Lenskart is 11, so clearly looks expensive. Vedant is your, do you know what Vedant is? Manyavar. Manyavar nahi hai brand, Shadi wala. So that's 6, 7 times the sales. So it gives you a general idea if you just start looking at other businesses. If you take IT services, maybe Infosys,
So it's on the median score that you compare
look at this, about 4 to 5. If you take IT products, right, let's take Intellect Design. Let's look at peers. Now, in fact, Intellect Design, right now, look at this, 34 times of sales. No, is it 34? No, 5 times of sales. So now it's actually cheap, right? So how do you know what's a good valuation? When you see a lot of businesses over a period of time, you automatically start getting a sense of what's a good price to sales metric for a business like this. If it's a trading company, let's look at, I'm invested into this one. I mean, it's not going to work, but if it's a trading company, you would have price to sales less than 1 for a lot of these guys. Look at this, price to sales of 0.20. Why? Because the margins are very small. So when you study a lot of businesses, look at their valuation, you understand.
So it should be as low as possible, according to you.
Yeah, I mean, lower the better, but assuming everything else is okay.
Thank you, sir.
All right, ready for cash flows? Anirudh, yes, you have to compare within the same market cap. This question coming on YouTube, but should we not compare stocks within the same market cap? More or less, yes. Now some will look for air conditioning stocks. Actually, air conditioning is not a bad idea. I'll tell you why right now. Though we are digressing, we should not because we have a long session. Most of the retail air conditioning consumer facing businesses also do air purifier business. But there's no proprietary tech there, so that doesn't excite me much. I mean, I spent half a day trying to figure out how to make a air purifier. You and I, we can like within a couple of months, we can set up our own air purifier brand. It's not that difficult. There are HEPA filters you get, boxes, daba do, kar do, ho gaya. It's no big deal. But why air conditioning is, last year we had only half season for, because the barish onset was earlier. So a lot of earnings that you see today are compressed, right? So which means on this year's earnings, next year jump would be better. So if you can find some air conditioning at good valuation, maybe it's a good bet. If you want to play the whole theme of pollution, I think the best stock in the country right now is Thermax. But it's expensive. Should we start? Also, before giving gyan here, investment advisor clear kar lo guys. Okay. But sir, air conditioning subject to several ESG factors because of emission and global warming. That is true, Himansh. Cash flow statement, which is about cash. There are 2 parts to it. Cash flow statement 1, cash flow statement 2. I'm going to cover both of them together. I have to cover only 4 or 5 points here. We should be rather fast. So first, just the basics. Your entire cash flow is broken down into 3 parts. Cash flow from operations, cash flow from investing, cash flow from financing. I'll give you an example. You tell me where. Where should I put this in? CFO, CFI, CFF. Okay. Let us say that you decided to buy a piece of land and in return, you gave shares of your company. So you bought land, but in return, you give shares of your company. CFO, CFI, CFF. Just give me answer directly. Nowhere. Why? Cash is not involved, right? There's no cash involved. Okay. You paid salary to your employees. CFO, cash flow from operations. You purchased a new car. For a general business, it's a CFI. You purchased a new building. CFI, cash flow from investing. You took a fresh bank loan. CFF. You raised money through equity. CFF. You paid dividends. CFF again. You received dividends. Normal cases depends, but generally, logically, it should be CFI. Though we'll see US GAAP and IFRS differences today. Let us say now, this is interesting, and I'm pretty sure most of you are going to get this wrong. You charged impairment on your assets. Impairment on your fixed asset. Impairment on your fixed assets. Nowhere. Why is that? It's a non-cash expense. You know? Remember my Mahindra Holidays example, where you collected 250 rupees in advance. Now, that 250 rupees in advance that you've collected, let's say this year, you've booked revenue of 10 rupees out of that. Where will I record it? I give you an example that, let's say guys like Mahindra Holidays who'd sell you 25 years of holiday subscription in advance. So let's say you paid 250 few years ago. Okay, we are accounting for Mahindra Holidays. Then I told you every year we'll recognize 10 rupees as revenue. Let's say assume we are in the 5th year. We recognize revenue of 10 rupees. CFO, CFI, CFF. CFO, CFI, CFF. Nowhere. Because am I receiving cash today? I cash 250 I received back in the day. I am just recording revenue out of that 250 today. But आज तो कुछ cash नहीं आया ना. If I am not receiving any cash today, nowhere. Are you okay with this? This is a general framework for this. Okay, now what kind of questions will you get? So you know that within CFO we can use either a direct method or we can use a indirect method. Okay. Now direct method simply means, hey listen, I am calculating so cash received from customers. Okay, so that's my plus. Cash paid to suppliers, that's my minus, and then we typically take the net. That's going to be my direct method. Right? Of course, it will have some other items. In indirect method, we start typically with net profit, or let's start with profit after taxes. Then we will say what? We will have two types of item. First category of item will be plus, minus, bolo kya? Non-cash items. So non-cash expense will be plus, non-cash income will be minus. Then one more plus minus item will be non-CFO item. Something that's added to profit but does not belong to CFO. So we make total 4 types of adjustment. Then we get what? Cash flow from operations before working capital adjustments. Then below this again we will make 4 types of items, plus plus, minus minus. The first plus is increase in current liability. Second plus is decrease in current assets. One minus is current liability decreasing or current asset increasing. Is there a memory trick for this? Yes. For asset, it's a inverse relationship. For liabilities, it's a positive relationship. Means what? Which means when current asset is going up, inverse relationship minus. If current asset going down, plus. For liability, if current liability is going up, plus. Direct relationship, current liability going down, it's going to be minus. That's how you prepare cash flow statement using indirect method. Now, the way I see it, the most probable question to you on the exam is going to be based on that inverted Y flowchart technique we've learned. Okay. Now, if you've learned this, great. If not, I'll show you how it works. We'll do 2 or 3 examples. I'll show you different varieties. The first one is on inventory. Let's assume we have opening inventory of 100. Then we have closing inventory of 250. We have purchases during the year of 100. No, the logic will not fit in. We have to have purchases of 400. Opening accounts receivable 200. Do you want an easy one or tough one? Closing accounts receivable 100. नहीं होगा आपसे tough one. I don't think you'd be able to do it, but okay, fine. Gross profit margin 75%. Opening accounts payable 2000. Sorry, not 2, that's too much. 200. Closing accounts payable 400. Now I've given you enough data. Based on this, just find out what is the cash received from customers and find out cash paid to suppliers. I'm not expecting you to solve this, but I'll be impressed if you can. It's a notch higher than what exams really expect from you, but if you can do this, great. Inverted Y flow chart, you have to create 3 of them. One for inventory, one for accounts receivable, and one for accounts payable. Inventory and accounts payable will be linked to each other. हो गया आपका? अच्छा जी. Let me just do the math. Let me see if I can figure out. No shit. Just tell me the net cash flow from operations. Net cash flow from operations, total of these two. I don't think so. Total of these two? No. So ये हो गया 1200, 1100, 1100 और ये 50. So this is 1100 on this side and you have 50 on this side.
Cash paid 200, cash received 433.
433. I don't think we are on the same page. I'll tell you what my answer is. I might be making a mistake. I'm trying to do this orally, but I think the total is going to be 1050. 1100 will be plus and 50 will be minus. So sorry, 1050, not 1150. 1050 is what I'm getting. But I might be wrong. No, actually, no, you're right, I am wrong. So that's cash received is going to be 1100. Cash paid would be 50. 400 नहीं. Cash paid is 200, I guess. Yeah, cash paid is 200. क्या? Okay, चलो साथ में करें. I'll give you a trick. With this trick, you'd always get the answers right on this. The trick is called inverted Y flowcharts, which works this way. Let's call them Y here. Okay. You create 3 inverted Ys here. That's what you need. The first one is opening inventory. Now in these flowcharts, it always increases by something here in the center. Okay, so opening inventory plus purchase gives you a Y. Keep quiet please now when I'm doing this. And then why will your inventory decrease? So you'll have COGS and you'll have closing inventory. Okay, so the bottom fork tells you what will reduce the item. The top line tells you what will increase the item. In the same way, opening accounts payable. Accounts payable means I need to pay these folks. Will increase because of what? Purchases, right? So plus purchases will give you Y. What happens next? I either pay them cash, so cash paid, or closing. Same with accounts receivable. Opening accounts receivable will increase by what? Sales. How will I reduce it? Cash received or closing. So you have 3 inverted Y flowchart. First skill for you is to learn how to build this flowchart. Okay. So look at this. Beginning is always with opening. What you have here on that vertical line is what increases that item. Inventory is increased by purchase. Accounts payable is also increased by purchase. Accounts receivable increased by sales. And the bottom forks are what reduces the item. Look at this. This will always be closing on this side. And what else will reduce? What will reduce inventory? If I sell them. Accounts payable, if I pay them cash. Accounts receivable, if they pay me cash. Alright? Now just start doing fill in the blanks. Opening inventory is 100, 100. Closing inventory 250, 250. Purchase 400, 400. Fantastic. So now this is done. Now based on this, can I figure out what is Y? The way to reach to the Y is either from the top or from the bottom here. Okay, that's the trick. So 100 plus 400, tell me what's the Y? 500. Out of 500, closing inventory is 250. So what should be the COGS? 250. So I've got the first item here. I have a COGS of 250. How many of you got this part right? Okay, that's about half of you. Nice. Now, what do you do next? Opening accounts payable. Opening accounts payable 200. Purchase same 400. Closing accounts payable 400. Can you help me find out why? 600. Right? So then what should be the cash paid? 200. Because then I have to reach this total of 600 from top and bottom both. So this is the second item I have found. Cash paid to supplier 200. Cash paid to supplier 200. Now, opening accounts receivable 200. Closing accounts receivable 100. The problem is I don't have sales. But what I do have is gross profit margin of 75%. Okay. So think about it. Sales less COGS is going to be my gross profit. If sales is 100, COGS will be 25. That's how gross profit will be 75. Now in this question, what we know is, we know that COGS is how much? 250. If COGS is 250 and I want to make my gross profit margin as 75%, what should be sales? 1,000, and this should be how much? 750. Is that making sense? Now how would I calculate that on the exam? I will say 250. If GP margin is 75, then cost to sales ratio is 25. Yes or no? If my gross profit is 75%, then what is my cost to sales ratio? 25%. So then 250 divided by 25 should be equal to my sales, which is 1,000. That's how you do it quickly on the exam. Okay. So once I have this 1,000, then I know sales is 1,000. Once I know sales is 1,000, Y should be how much? 1,200. So cash received should be how much? 1,100. So cash received from customer is 1,100, and therefore cash flow from operations is the net of two items, which is how much? 900. What do you think? Do you want me to, which part should I repeat? Give me a hand raise. How many of you feel you've understood this? Okay. Online, can you give me an iPass, please?
वो मेरा हैंड वो लिखते लिखते हो जाता है 1100 और 200
Gaurav, don't do the CFA curriculum. Do it this way. Harshit, in the absence of information, you can assume all purchases are credit purchases. Okay, you know what? I'll give you one more example to practice. Let's see if you can do this one. Example 2. Anyways, this is the core of your cash flow, so I want you to take this easily. Opening inventory is 100, COGS 300, closing inventory 150, opening AP 100, closing AP 50, opening AR 200, sales 1000, closing AR 400. Please find out cash received from customers and find out cash paid to suppliers. Please create those inverted Ys. It's much more easier to do it that way. Do not memorize those formulas. Curriculum has some really, really weird formulas in those. It's much more logical if you just do it through the inverted Y structure we built. Assume all sales to be credit sales, all purchases to be credit purchases. Come on, let's see who can do it fast.
400.
400 is the net item? Positive, negative? Positive. 400 paid, 800 received. Alright, the fastest on the chat box was, fastest and correct on the chat box was Ritesh Man 27. Vedang were almost there. Bharat is also there. Sneha. Can you repeat 3Y? Okay. I'm going to build those flowcharts now. Those of you who could not do it last time, at least this time look at the screen carefully and learn how it's being done. Again, I'm building 3 inverted Ys here. Opening inventory plus, बोलो plus क्या? Purchases. How will it reduce? COGS and closing. Opening accounts payable plus purchases. Now technically accounts payable should go up only by credit purchases, right? But in this flow chart, you can assume all purchases are credit purchases. Because anyways say whatever is not credit purchase is cash purchase. Anyways cash is going to go out. So if you just assume the whole purchase here, automatically it flows a higher cash. So the flowchart takes care of it. Then cash paid and closing accounts payable. Opening accounts receivable plus sales, cash received, closing accounts receivable. Alright, so let's do it together. Fill in the blanks. Opening inventory is 100, purchases is not available. Closing is 150, COGS is 300. Y should be how much? 450. 300 plus 150, 450. What do you think should be the purchases? It should be 350. Take this 350, put it in this flow chart. Opening accounts payable how much? 100. How much should be Y? How much should be Y here? 450. आपको बहुत नींद आ रहा है? हाँ नहीं? आपका नाम क्या है? नहीं बताओगी? महक. Okay, महक. 450 महक. How about closing accounts payable? 50. Cash paid 400. So cash paid is 400 here. Let's do this one. Opening accounts receivable 200. Opening accounts receivable 200. Sales 1000. Y 1200. Closing accounts receivable 400. Cash received 800. There you go. That's your shortcut. Net of these two, cash paid, cash received, net of these two is plus 400. What do you think? Will you be able to handle this? Now the same thing you should be able to apply in different situation because curriculum has some fancy things. Okay, now I'll give you some variations on the same question. Listen to me. This I think will come on the exam. What the curriculum does is, in a lot of questions, it doesn't give you opening or closing inventory. It just says closing inventory is 50 higher than opening inventory. It does not give you an amount of opening and closing. It says closing inventory is 50 rupees higher than opening inventory. If you see this, you can assume any random amount for opening, but make sure the closing is 50 higher. You'd notice you get the same answer. Do you want to try? Try this, right? What you do is you make opening as 200, okay, and make closing as 250. Now let's find out. In this question we found out purchases, right? Let's see if the purchases work. 300 plus 250, how much? 550. If opening is 200, what should be the purchases? 350. Kuch bhi rakh lo. It's not the amount that matters, it's the relationship between opening and closing that matters. Are you with me? So almost every question in the CFA curriculum, it doesn't give you opening and closing. It just tells you inventory increased by 50. So assume random number for opening, increase that by 50 in the closing. Same logic for accounts payable. The curriculum question will say accounts payable decrease by 50. It will not give you opening or closing. You take any amount, the calculation will still be same. Okay, just for fun, let's take opening to be 1000. Let's go crazy, 1000. Closing should be how much? 950. Okay. Now purchases is still 350. So 1000 plus 350, how much? 1350. If this is 950, how much should be cash paid? 400. Alright, answer. So curriculum will give you distance between opening and closing, but you should still be able to handle it easily. That's the magic trick. Understood? Now, on the exam, maybe instead of giving you inventory, they might ask you to do a slightly different flowchart. I mean, of course, flowchart is asked, but slightly different question. I'm going to create 3 of them here. Okay? Let's say opening outstanding salary 500. Salary expense during the year 1000. Closing outstanding salary 700. Find out salary paid in cash.
800.
Opening taxes payable 500. Tax expense during the year 1000. Closing taxes payable 700. Find out taxes paid during the year. Opening interest payable 500. Interest expense during the year 1000. Closing interest payable 700. Find out interest paid during the year. Now, these 3 questions on the face will look same. On the face of it, they will look same. And when you start solving it, you realize they're actually same. The same question, just applied in different contexts. So you should be able to take that skill from one place and apply it another place. For all of them, we have the same flow chart. Okay? So I'm going to say opening salary slash tax slash interest payable plus salary expense, tax expense, interest expense will give you that Y or X. Then here cash paid, and this will be closing, fill in the blanks. But you have to have the skill to be able to design the flowchart yourself. Opening amount 500, expense 1000. Can I find out why? How much? 1500. Closing 700. How much is the cash paid? 800. Is everyone okay here? Will you be able to handle this? Okay. Second section in the cash flow statement. We have to build a table. This is a 3-star. It's some memory-based question, but can show up on the exam. Dividend paid, dividend received, interest paid, interest received, then taxes under IFRS, under US GAAP. Chat box pe anyone still thinking to book for CFA level 1 want to connect and start prepare? कुछ लोग पढ़ने आते हैं, कुछ लोग डेट्स ढूंढने आते हैं ना. What kind of question can we expect on the exam on this? Exactly the same I showed you. They'll give you this information and ask you what salary paid or taxes paid. Okay. So how to do this? There's a little trick here. I'll show you. For US GAAP, you need to remember, see, these are just 5-6 items here, right? This is not a comprehensive list. Only for these items we need to, otherwise the other logic we know. operating is operating. But in the US GAAP, dividend paid is an exception that's allowed to be showed as a CFF. Okay? For some reason, everything else in US GAAP is CFO, which is kind of stupid, to be honest. Because why would you keep dividend received as CFO? Makes no sense whatsoever, but US GAAP does that. Interest paid, CFO, interest received, CFO, no matter what taxes, they're CFO. Everything in US GAAP is CFO. Okay? IFRS, luckily, is CFO or what's logical. So surprisingly, for dividend paid, IFRS allows you to show it in CFO. So it is CFO/CFF. I've copied this table, it's in my notes, I'm just replicating it. CFO/CFF, you need to memorize this. Now, dividend received is logical, CFO or CFI. Interest paid, CFO or CFF. Interest received, CFO/CFI. Taxes, CFO, CFI, CFF, respective taxes in respective sections. You need to memorize it. So quickly look at the screen, memorize it. I'm going to ask you, Mahek. Please memorize which item will go where. Bank overdraft, I think CFO or CFF, right? In US GAAP. Have you memorized it? Should I ask? Why should we put everything in CFO? That's so stupid. Right? Think about it. If I am receiving dividend, why am I receiving dividend? Because I invested. So it should be in investing. It's in IFRS you have a choice to put it in CFO. In US GAAP there's no choice, you have to put it in CFO. Yeah, it makes no sense. That's true, but there are a lot of things in US GAAP that don't make sense. And even in IFRS, there are a lot of things that you can debate on, but a lot of things are just nonsensical. And a lot of people have spoken about it. In fact, Warren Buffett has some, in his letters, have written multiple times on issues he has with accounting. Okay. Let's see if we can memorize this together. Close your books and look at me. Tell me. Interest received, IFRS. Interest received, IFRS. CFO or CFI. So in IFRS, everything is CFO in this list, or what's logical? Now, why am I receiving interest? Because I made a deposit somewhere, so investing. So CFO, CFI. Dividend paid, US GAAP. Dividend paid, US GAAP. CFF. Dividend paid, IFRS, Jaideep.
Dividend paid?
IFRS.
CFO or CFI?
CFO or?
CFI.
Dividend paid.
CFI.
CFO or?
CFF.
अभी ना माइक उठाओ, सिर्फ आप आंसर दो. हाँ, डिविडेंड पेड यूएस गैप. माइक चालू है क्या इनका? डिविडेंड पेड यूएस गैप.
CFO. CFF.
की एग्जाम है हर 20 दिन में. इसका प्रॉब्लम है ज्यादा पढ़ लिया है इसने. CFF डिविडेंड पेड यूएस गैप. ओके. डिविडेंड पेड IFRS.
CFF or CFO?
CFF
or CFO.
or CFO. Is it right?
Yes.
Yes. Okay. Let's go to Mehak now. Can we pass on the mic to her? Mehak, can you raise your hand, please, so that you're visible on the camera? अरे उठाओ, हाथ तो उठाओ. नहीं दिख रहा है कैमरा में इधर. और थोड़ा ऊपर करो. हाँ, okay, good. Now we can see you. Okay. Interest received, IFRS.
CFO and CFI.
CFO or?
CFI.
Is she right? Interest received, US GAAP.
CFO.
Okay, challenge question for you. Salary paid, IFRS.
CFO and CFF. No, sorry.
CFO or CFF?
CFO. CFO.
Salary paid, IFRS.
CFO.
Salary paid, US GAAP.
CFO.
CFO. Dividend received, IFRS. एक मिनट यार, उसको बोलने दो. Only she will answer. हाँ. Dividend received, IFRS.
CFO.
CFO. IFRS.
IFRS is CFO.
Dividend received, IFRS.
CF.
बस CF बोल के रुक जाती हो अब आगे.
CFO and CFI.
CFO or CFI. Dividend received. ठीक है. Taxes paid for financing activities under US GAAP.
CFO.
Taxes paid for financing activities under US GAAP. CFO. Taxes paid for financing activities under IFRS.
CFF. All three.
So under IFRS is actually respective. For financing in CFF, for operating in CFO, for investing in CFI. Okay, now try and remember this. This is testable. Make sure know this. Taxes, IFRS is respective. Operating, investing and so on. Okay. Cash flow 1 is done. Cash flow 2. We have to do some formulas now. We are in cash flow statement 2. We have to learn the concept of FCFF. Memorize the formula. It stands for Now, I'm going to write down the formula and ask any one of you randomly. I'll start making you stand now. थोड़ा excitement के लिए, मेरे excitement के लिए. Free cash flow to the firm. It's called FCFF. There are 4 formulas for FCFF. One that starts with net income, one that starts with EBIT, one that starts with EBITDA, one that starts with CFO. For net income, first thing we add is non-cash charges or depreciation. Then we do either a plus or minus working capital investment. Then we will say plus after tax interest. NCC means non-cash charges. And finally we will say minus,
Fixed capital.
I think I should do plus or minus fixed capital investment.
Interest net of taxes.
Interest net of taxes. This is the item. This is your first definition of FCFF. 3-star item, repeated twice in your syllabus, once here, once in equity. So you should be comfortable. Equity syllabus, you have to use this formula for valuation purposes. Then EBIT multiplied with 1 minus T plus NCC / depreciation plus minus working capital investment plus minus fixed capital investment. Then we'll go to EBITDA multiplied with 1 minus T plus depreciation into T plus minus working capital investment plus minus fixed capital investments. Then finally we'll do CFO plus interest into 1 minus T plus minus fixed capital investment. Now, fortunately, unfortunately, you're required to know all the 4 formulas. There could be very direct question on giving you ABIT and depreciation and asking you to compute free cash flow. Plenty of questions on learning ecosystem like this. Now, I'm going to give you a memory trick. Do you want a memory trick? These 3 items, net income plus non-cash charges plus minus working capital, is nothing but, if I go a little back in our notes, look at this. Net income plus or minus non-cash plus or minus working capital is nothing but what? CFO. This is non-cash and this is your working capital. So these 3 items in the FCFF formula are basically a shorthand for getting cash flow from operations. So this is same. So technically, if you learn to compare this, you'd realize that the first formula and the 4th formula is actually the same thing. Net income plus non-cash item, which is primarily depreciation, plus minus working capital changes, is nothing but CFO. And then to the CFO, I'm just adjusting 2 items. One is interest, one is capex. Fixed capital investment means capex. Are you with me on this? Second memory trick. This number plus this number is actually nothing but this number. This number in our industry is referred to as NOPAT. EBIT into 1 minus T, NOPAT. NOPAT का full form होता है?
Net operating profit.
Net operating profit after taxes. So, if you do net income plus interest into 1 minus T, it actually gives you EBIT. So, if you just think like that, the second formula is also ready for you. So, you just need to memorize the first one. Automatically second one is done, automatically third one is done. Think about it. First one has 5 pieces. The first 3 pieces are going to make CFO. Net income, non-cash, plus minus working capital, which is nothing but indirect format of that cash flow statement we saw. Once I have CFO, I have to make 2 adjustments, one for interest, one for capex. So once I make interest and capex, first formula is ready. 4th formula is also ready because I know in my first formula, the 3 terms are nothing but CFO. How do I get the second formula? So in my first formula, if I take net income and if I take plus interest, that number is same as EBIT into 1 minus T. So the second formula is also ready. Are you with me? Now how do I get the 1 minus T means removing the taxes. Why are we removing the taxes? Because you'd learn this in equity class, but I'll give you a quick answer. When are you writing the exams? Okay. Have you studied equity? CI? Okay. So I'll just give you the answer since you asked. Free cash flow we generally discount with WACC, WACC. WACC is weighted average cost of equity and debt. When I take cost of debt there, I take after-tax cost of debt. So I've already taken the benefit of taxes there. So I don't want to double count the benefit of taxes here. So therefore here, when I add back only 1 minus T interest. Yes. Okay, now let me explain the third formula first, then you ask your question. How do you memorize the third formula? There's a memory trick for third one also. What is the trick? If I look at the second formula and I take the first two terms, in my second formula are actually the first two terms in the third formula. Okay, so EBITDA into 1 minus T plus depreciation into T is actually same as EBIT into 1 minus T plus depreciation. Now someone is asking me, why are we adding back depreciation here? That's because when I'm removing depreciation here, I'm removing too much. When I'm removing taxes here, I'm removing taxes directly at EBITDA level, whereas I should have removed the taxes at EBIT level. So because I've already removed taxes on the depreciation level, I'm just adding it back to bring it at par with this one. Do you want to try an example on this? You'd realize all the four are actually the same thing. Let me show you. It's very easy. Let's create an income statement. Sales of 1,000. Operating cost of 400. Let's say EBITDA, cash operating cost 400, EBITDA of 600, depreciation of 100, EBITDA of 400, interest of 100, EBT of 300, tax 40% 120, EAT or PAT or net income is 180. Sorry, क्या 500 है? अच्छा, I made a mistake. Hold on a minute. This is 500. So then this becomes 400. Then this becomes 160. And this should give you 240. Okay. Capex of 50 this year. Capex means money spent towards buying machinery. Working capital investment of another 50. Capex of 50, working capital investment of 50. Now, what I want you to do is take these numbers and just plug them into each of the four formulas. Okay, I'm going to do that along with, I'll give you a little time to do it, then we'll do it together. But you try first. If you want the formula, you can take a screenshot or a picture now. If you don't have the formulas with you. And use these numbers to calculate FCFF and FCFE. Start. Saurabh, you're spot on. Come on, are we making any progress? 500? 300? 500. Anyone else? Naneshwar, how much? You were trying to memorize the formulas. Uh, Saurabh, that's not net new capex, that's total capex. So actually your capex is lower than your depreciation in this example. All right. I'm solving this now. Observe. Shh. Let's observe. Dekho, let's do net income first. Net income of 240. Depreciation kitna hai? Depreciation is 100. Working capital minus 50. Interest kitna tha?
160.
Interest was 100, but your tax is 40, right? So this will be 60. And fixed capital is minus 50. ये माइनस क्यों है? क्योंकि पैसा जा रहा है. If I am investing, growing my business, I have to put in money in working capital, put in money in fixed capital. So let's figure out what's my FCFF here. 340, 240, 300.
300.
So this number is coming out to be 300. Some people have gotten 500. How is that? Achha, they've assumed this to be positive. Dekho, remember, capex means money spent to buy assets. When you spend money, it has to be negative. Working capital can be positive, can be negative. When is it positive? When this year you have less working capital than last year. So we say you're releasing working capital cash. But if you're a growing firm, this number will always be negative, right? So I assume these to be negative. If you keep them to be negative, it turns out to be this. Is everyone okay with this concept now? Iska matlab kya hai? What does that 300 mean? What is the amount of cash available with the
Shareholders and
entire firm?
both.
A free cash with which they can do whatever they want to do. Okay? Is this the cash available for equity shareholders? No. It's cash available for
Bond plus
equity plus bond, both of them. In order to find cash available for equity shareholders, we need to pay bondholders first. Okay? Now, let's look at this one. Let's see if this works. EBIT is how much? 500. 500 into 60%, how much? 300. So this is 300. Depreciation, 100. Working capital, minus 50. Fixed capital, minus 50. What's the total? 300. Look at EBITDA. EBITDA was how much? 600. 600 into 60%. 360. So this is 360. Depreciation 100 into 40%. No, tax rate is 40%. So 100 into 40% is how much? 40. What I told you, total of these two will be same as total of these two. You know, if you think of it this way, it becomes easier for you to memorize the formula, because then you just need to reproduce the remaining items. Minus 50, minus 50, 300. CFO is nothing but total of these three items. So that's how much? 340, 290? 290, right? This is 60 minus 50. How much? 300. All of them will give you the same number, just different ways of reaching there. Do you think you will be able to remember the formula? Let's try one more time, it's easy. First, look at me. Let's see if you can memorize this. Net income, bolo plus depreciation or NCC, plus minus working capital. Immediately we know these three is what? CFO. So चौथा formula भी हो गया. Up, once I have reached CFO, just two adjustment. Which two?
interest,
I need to add back interest
net of taxes.
and adjust for capex. So if I do the same here, My two formulas are ready. Okay. What is the trick for third formula? This item and this item together is nothing but EBIT into 1 minus T. This item and this item together is EBIT into 1 minus T. Then I just reproduce rest of them, third formula is ready. What do you mean by reproducing rest of them? वैसे ही छाप दो बस, just copy paste. Plus depreciation, plus working capital, and plus minus fixed capital. That's it. Then EBIT formula is ready. Then I know that these two items, which two? These two. EBIT into 1 minus T plus depreciation is same as EBITDA into 1 minus T plus इस बार 1 minus T नहीं है, depreciation into T directly है. These two are same. Once I know these two are same, then my last formula is also ready because I just need to add these two remaining items. Working capital investment plus minus fixed capital investment, I'm done. One more time. आएगा. Okay. One more time. Shh, 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 shh. Help me out. Tell me, where do I start? Plus. Plus. Okay. Now, when will it be plus? When will it be minus? Simple logic. If I am investing more, Vishal, I need help with the mic here. If I am investing more, then minus. Money is going out. If I am releasing the, can you increase the speaker volume here? If I am releasing the money from working capital, it will be plus. So, for example, on the exam, they'll tell you inventory is higher. Inventory has become higher. So what? Asun Vadu. If inventory has become higher, that means you've invested more in inventory. So it's outflow or inflow? Outflow. आ रहा है समझ में? If accounts receivable are higher, means you are investing more in working capital, it's outflow. But if accounts receivable this year is lower than last year, so you're releasing your working capital, then it's a inflow. Are you getting hang of it? Asun Vadu thoda. So these three items together is what? CFO. Then two adjustments below this. One is interest. And finally, capex. Now, when will this be positive or negative? So, if I'm buying more and more machinery, outflow, negative. If I'm selling my machinery, inflow, positive. That's it. वही logic है. So, पैसा जा रहा है तो negative, पैसा आ रहा है तो positive. Now, once I know this, fourth formula is ready. How will I create EBIT formula? Give me the trick. These two item is what? बस बाकी item छाप दो, है ना? And then here I will have this plus depreciation. These two are same as EBITDA into 1 minus T plus depreciation into T. फिर बाकी वाले छाप दो, हो गया? याद रहेगा? Okay, let's ask Mehak. Can we pass on the mic to Mehak, please? Mehak, are you ready? Ready? Okay. Dividend paid IFRS. Dividend paid IFRS.
CFO and CFF.
CFO or
CFF.
Dividend paid US GAAP.
CFF.
CF,
F.
F. Then FCFF formula from EBITDA.
FC.
FF from EBITDA.
EBITDA. So EBITDA into 1 minus T
EBITDA
plus
into 1 minus T
depreciation into T
plus depreciation into T.
plus minus working capital
There you go. Very nice. And
plus minus fixed
fixed capital. Plus minus working plus minus fix. Will you be able to remember all this? Okay. Very nice. I'll check in 30 minutes. How do you get FCFE? Last point, then cash flow is done. How do you get FCFE from FCFF? So, how to visualize this? These two folks are partners, equity shareholder, bondholder. Okay. When we have a pool of money, so think of this as a pool of money on which both of them have collective right. This pool of money becomes FCFF. Right? Now what I do is, if I take some part of that money and give it to the bondholder, that boss, whatever that belongs to you, take it. Okay? So then whatever left is there is only for equity shareholder, which means logically, if I have, okay, sorry, I should have shared my screen, which is now. Yeah. So I was trying to say, if this is a pot of money, this belongs to both equity as well as bondholder. If bondholder, I pay whatever is owed to them, and then whatever money is left, that should be belonging to equity shareholder. That's what makes FCFE, free cash flow to the firm, free cash flow to the equity. So logically, FCFF minus whatever some amount that I pay to my bondholders, okay, and job done should give me FCFA. That's your structure or concept around this formula. कि उसको दे दो फिर बचा हुआ सब मेरा है. Now what will I pay to the bondholder? Bondholder we pay two items, no? One is interest, one is principal. But remember, when we added back interest, we added back after tax. Interest into 1 minus T kiya na? So here when I deduct it, I will also do interest into 1 minus T. So which means my formula is FCFF plus, sorry, not plus, minus interest. But because when I was calculating FCFF, see how I added 1 minus T element to it? So now when I'm deducting it, I will also do 1 minus T. Okay? And then what do I need to do? I need to repay principal. So repayment of principal will come in here. Okay? But once in a while, it also happens that instead of you giving to the bondholder, bondholder gives you, no? What is that? New borrowing. So if you do new borrowings, then it becomes a plus. Okay? And job done, this will give you FCFE. मजा आ रहा है? LM5 is over. Now we have to do inventories. Break चाहिए? Some of you might want to leave. You have a question? Can we pass on the mic to him? Yes. What's the weird question?
Yeah, I don't know. Maybe I'm too tired to understand things, but we are tax adjusting the interest, EBITDA and EBIT, but not the principal amount or new borrowings. So how do I sort of build a concept around what should be tax adjusted, what shouldn't be?
Only interest is tax adjusted.
That's it. Okay.
That's it. And only interest is tax adjusted because that it's like we are adjusting that interest cost somewhere else. So I don't want to double count the benefit. Therefore, we do 1 minus T here. So when you learn the computation of WACC, I think in day after tomorrow's class when we do CI, So you'll understand there we take the benefit of, see, logic is very simple. When I'm paying interest, income tax department is giving me a discount. Why is that? Because when I pay interest, my profits reduce. When my profits reduce, I pay less taxes. That's called the tax shield benefit of interest. When I calculate some cost, weighted average cost, I take the benefit of that lower taxes there in WSAC. वहाँ पे जब मैं discounting करूँगा ना, so I'll reduce the discount rate because I'll know that taxes will help me save little bit. So I don't want to take the same benefit of taxes one more time here. That's why we're doing 1 minus T. So in the whole formula, the only place where you do tax adjustment is at interest. But in EBITDA, we're doing it at depreciation also. But that's because I deducted taxes at EBITDA level. So I did not take benefit of depreciation on taxes, so I'm just adding it back there. Yeah, it's a little complex to begin with, but you'll have to spend some time. But initially, just memorize the formula. Okay, FRA is a big subject. It will test your endurance. This crash course is not easy. Last time I remember I did this, it took me, I think, about 10 to 12 hours. There were some American students, I started India morning time, right? So those guys, it was night time. वो सो के उठे फिर भी हम YouTube पे लगे हुए थे. And looks like same might happen today. I need another 2-3 hours. Inventory will take another 40 minutes. Taxes will take another 30-40 minutes. इसके long term liabilities भी बाकी है. So what I'll recommend is those of you for whom commute is not easy, I think it's okay to leave now because it's already what time? 9:30, right? So go home, attend online or YouTube. Go home. You know? And some of you who can afford to at least kuch to ruk jana please. 3-4, you know? So otherwise then I'll be talking to myself. Some of you stay back and then we'll enjoy the subject as long as we can. What do you say? Will that work? So let's take a break. We'll do 20 minutes and then we'll resume the session. हाँ जी. 20 minutes break. We'll resume the session at 9:50 India time. I'll tell you how much time. I'm thinking 2.5 to 3 hours, I guess. 2.5 minimum. If you want to do it slow, which we should. So go home and attend. Otherwise, watch YouTube tomorrow morning. वही करोगे है ना? Yes, of course. I distinctly remember well last time. So when I started this, when I started the session, there were about 250 odd people. By the time I used to finish the day on YouTube, 30 log reh jate the. Today, when we started the session, live YouTube, we had about 200. Abhi bache 120. I think by the time we finish, we'll see how many of them survive. हाँ इधर का 20 ऐड होएगा. I doubt if ऐड होएगा. Okay, ठीक है, देखते हैं. All right, 20 minutes break.
बच्चे लगा के सो जाएंगे.
Nice. I can imagine.
मला थांबायला आवडलं असतं. मला खूप उशीर होईल घरी.
हा 1 तास अजून घरी बसायला का अर्धा तास? नाही नाही घरी जायला 1 तास लागतो. ऑगस्टमध्ये आमचं बरोबर बसायचं ना आपण.
मी सर्वांना ओळखतो.
Crazy, crazy.
आपण 5 जण तर फिक्स बसतो 1 2 3 4 आणि
तू खूप लेट
मी लेट आलो. अरे पण बाकी त्यांचं अटेंड झालं ना.
तुला माहित नव्हतं इथं काय राहायचं.
अरे तो
Reserve
ऑफिसर
राहायचा
नाही
आपला.
म्हणतो. अरे मला माहिती आहे ना मी मागे बसायचो. त्यानंतर ते
नाही तू आदित्यचं
हा तर ते आदित्य निघालं मग तू पण निघालं मग मी पुढे आलो आणि मग आता माझी परमनंट सीट झाली आहे. आता मी लेट आलो आज.
थांबायला आवडलं असतं माहितीये का? नाही शकत मी थांबले असते खूप उशीर होईल.
मला पण होणार आहे 12 वाजता.
बरोबर आहे रे.
हा तसं हा.
हा ठीक आहे.
तू दत्तवाडीला राहतो ना तू?
तेच रफली
पण मग आता ब्रेक का दिली?
2 तास.
म्हात्रे ब्रिज
रस्ते द्यायचे तुम्हाला ब्रेक.
डिपी रोड कडे.
नाही मी म्हणतो तेच म्हणतोय आता ब्रेक का दिली? आता जे कंटिन्यू केलं असतं
सरांनी पूर्ण सिलेबस संपत गुड मॉर्निंग इथेच होईल उद्या.
मी ऑफिस करणंच जाईल का?
हा तेच सर 1 साल बैठे सर क्रॅश कोर्स के लिए.
नाही ते पण मला हे आता ब्रेक
मागच्या वर्षी क्रॅश कोर्स सुरू केलेला आहे यावर्षी
आता ब्रेक दिलीच नाही पाहिजे.
हे घबरे तू काहीतरी सांगू
सरांचं शेड्यूल ऑलरेडी पॅक आहे. तुला माहित नाही सरांना मी मागे जेव्हा विचारलं होतं फर्स्ट टाइम सर म्हटले बघू जेव्हा दुसऱ्यांदा बघू तिसऱ्यांदा हो जानेवारीमध्ये करू म्हणजे सरांनी 3 महिने आधी शेड्यूल फिक्स केलं होतं. आम्हाला वेदांशने पण तेव्हा तेच सांगितलं. आहे कोण इथं नाव येईल.
हे तुझी जागा रिकामी झाली रे.
मी येतो
तुझी जागा रिकामी गेली.
कुठे जाईल?
ही बसली पुढे.
अच्छा ही पण चालली.
Yeah, I would have loved to stay, but then it will get me too long to reach.
अच्छा
It's already
ठीक आहे
9:30.
आता ते मागे बसले ना मी मागे बसले.
बघ ना FS पण यार.
इकडे कर, बस पुढे, मजा कर.
जायचं का? जायचं का?
कुठे जायचं? चल रे मी घरी गेलो अभ्यास होणार
So
नाही.
when are you staying? Till 10:30.
हा म्हणजे सेकंड ब्रेक मध्ये जाणार ते अजून एक नेक्स्ट ब्रेक मध्ये जाणार
या मला चालेल actually.
नेक्स्ट ब्रेक 11 नंतर येईल. इन्व्हेंटरीजला 1 तास लागेल.
नाही असं नाही होईल 10:30 पर्यंत होईल जाईल ना सर 40 मिनिट सांगितलं आता 20 मिनिटची
सरांनी मगाशी सांगितलं ज्यांना जायचं त्यांनी आता जा नंतर जा.
असं काही नाही सांगितलं.
असं काही नाही सांगितलं
सोडणार नाही ते
आता
lock
बघ,
करणार.
आता
तिकडे ते
10 वाजता 10:45
10:45
10:45 होणार नेक्स्ट ब्रेक
असं कर आपण मागे जाऊन
आपण म्हणजे जेवण तू म्हणतो नक्की मांडतो.
तुझं जेवण राहिलं असेल
नाही आम्ही खाल्लं काय काय लोकांनी डबे
तू
आणून
उधर
खाल्ले.
बैठे थे ना सिमरन. इधर कैसे आ गई?
वो डेंजर स्पॉट है.
मैंने दोपहर को थोड़ा सा खाया था.
चल आपण मागे जाऊन भेटू.
तुझ्याकडे माहित नाही आला मजा नाही आला तुला
हा ना
माहिती
माहिती
पाठवलं
पाहिजे
अरे मी पुढे बसलो पाठवतो. अरे मी ते एफसी सरांना असं करणार होतो पण म्हटलं लोक माझ्यावर उलटलं प्रॉब्लेम होईल.
Stare at it for 30 seconds and then पाठवतो. I was trying.
ये खुन्नस में दिखते
हो आज झोपेला गेले.
असं आता असं म्हणजे
मागे बसू चल मागे तू काय जात नाही अजून
हे जेवण तू मागे का चाललं?
ती जात पण नाहीये
तो खतरनाक
थांबत पण नाहीये.
अरे तो खतरनाक आहे तो व्हिडिओ मध्ये तू एक व्हिडिओ बघेल नाही फिक्स इनकमचा
नाही रे बाबा मी सहज बघितलं.
असं असं वाटतं खुन्नस में क्या देख रहे
What are you thinking? I'll stay if you stay till 10:30.
किती फरक आहे. म्हणजे तिला जायचं पण नाहीये आणि जायचं पण आहे.
खूप उशीर होईल.
थोडासा कंपनी आहे का तिकडे?
नाहीये ना.
तुझ्या कंडिशन मध्ये आहे ना तो टेबल आहे बघ तुझा फेवरेट.
ए बाबा तू काय पण कर, या टेबल हात लावू नको रे.
तो टेबल आहे बघ तुझा. AFS, FTOCI.
तुझ्या
तुझ्या कंडिशन मध्ये आहे ना ती कंडिशन सेकंड कॅटेगरी देखते अवेलेबल फॉर सेल.
ते ऐक ना, माझं FSC झालं नाही, फर्स्ट टाइम
डायरेक्ट क्रॅश कोर्सला आलाय.
हा थोडं थोडं कळतंय, थोडं थोडं.
What are you going to do, Sir?
इसलिए
टॉस कर.
How will you go home?
ए हा माईक टॉस कर.
हा तू पण गाडी
This
इथे
is better.
गाडी आहे ना.
अरे परवा यायचं ना परत.
अरे मला गाड़ी लागते ना. अपने बेटे को स्कूल से घर वापस लाना होता है. You have no responsibilities. I have a lot of.
नाही मतलब 2-3 गाडी घेऊन. अरे तसं नाही म्हणजे तुमची एक
नाही रे. हस्बंड घेऊन जातो ना.
ये तुम दोनों में से किसी को तो ओला उबर करने वाला है. अगर इसका
Should
सुना
we
तो
stay till 10:30? उधर साइड में बैठते हैं. 10:30 को करते
Yes. In finance we manage exits.
अरे वो ऐसे पास
पण ते मध्येच इन्व्हेंटरी अर्धवट इन्व्हेंटरी चालू असतं सोडून
पेमेंट
द्यायला.
का अर्ध सोडून बरोबर.
ते सरांना
नाही
बरोबर
नाही ते काय करेल मध्ये नाही सोडून जाईल, फोनवरती लावून कानात टाकून जाईल.
नाही पण
झोप लागेल ते.
सरांसमोर तरी जाणार ना, ते बरोबर नाही वाटणार. त्यांनी आता एवढं सांगितलं ब्रेक आहे दिलाय त्याच्यात जायचं.
आणि सर हे पण सांगितलं 2-4 दिन तरी त्यांना वाटलं तर सगळेच चालले.
नाही 2 जण तर थांबले.
हम दोनों तो रुकने
हे
वाले
तिन्ही
हैं.
पण थांबले ना.
हो झाले 5
अंगुड
झाले.
पण आहे.
Good morning
आपण
येते का
आपण
तुम्ही?
3 हे 3 6 जण.
10:30 उधर साइड में बैठते हैं. नहीं मैं ऐसे नहीं बैठती.
ही एकदम असं सामने सुटकी तरी जाईल.
ते तोंडावर उठून गेल्यावर का होतं ते.
मग सर म्हणतील जायच्या आधी आन्सर देऊन जाय.
हा तू तुला काय हवंय दाखव नको.
मी काय सांगणार.
तू मला
हॅलो.
मी काय करणार.
नो कल्याणी नगर तो बिल्कुल भी रहती है.
ये बहुत दूसरे दुनिया में है. ये बड़ी दूर से आए. शांत
कन्स्ट्रक्शन चालू आहे.
शांत कुछ है नहीं वहाँ पे.
चंद्रावरती आता आजकाल तिकडे पण डेव्हलपमेंट चालू आहे.
खाली 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 उधर जाओ पानी चौक खाली बीज उगाते रहते हैं.
Honestly, especially I have decided because FSF
You decided to continue.
म्हणजे अभ्यास
पण तुझं एकदा झालंय ना.
करून न केलाय.
तुझं एकदा झालंय ना.
करून न केलाय. पण ते नावाला झालं. ती सेकंड टाइम व्यवस्थित काय नाही.
आता मीचा आधी परत होईल ना एकदा.
हो तेव्हा व्यवस्थित काय नाही. ट्राय करून तेव्हा तिने फीस पे नव्हती केली.
त्यामुळे किती दिवस आली ट्रायल क्लास? किती दिवस आली नाही मी पण सॅटर्डे संडे आलो मग मला फीस भरली. अरे बापरे.
मी पण तेच केलं. फी भरली ना अशी कुठली तरी जागा होती आणि सरांना दिसलं आणि त्यांच्यासमोर सर माहिती सांगायला ते विचार एवढ्या फ्लो मध्ये शिकवतात तुम्ही तोंडावर
हे पण सर
आपण पण ह्याचं काय अर्थ एवढं?
अरे आपण बघ ना, आपण 14 बसायचं फक्त PM मध्ये आपण 14 होतं फक्त. आठवत जे पण नव्हते त्यावेळेस मी लेट आलो होतो. मी लेट आलो होतो. मी होतो मी लेट आलो. नाही हा फिक्स आणि ते ना रेकॉर्ड झालं एलएमएस.
अरे मी नॉर्मली बघितलं तसं वाटतं माझी चूक नाही
त्याला झोप येते ना असं होतं.
सेकंड पार्ट मी झोपलो बिपलो तर उठवा जाय पुढे बस माझी
आणि त्या दिवशी मी गेला.
गाडी पटकन चिकट पटकन चिकट झालं सरांनी यॉर्निंगला
त्याच्याकडे इन्फॉर्मेशन दिसलं ना.
सरांनी यॉर्निंगसाठी नाही सांगितलं हे बघ मी झोपलो ॲटमॉस्फिअर करावं
तुला
लागेल
काय केलं का? बॅग ना बाहेर ठेव. असं आधी वॉशरूम आहे. सर वॉशरूमला गेली तिकडनं बॅग घेऊन जा.
आम्ही सरांना तिथे जातो
त्यावेळेस सर विचारतात ना, इथे गेलो वॉशरूम. ऑलरेडी 4 जण रेडी.
ते पण विचारलं होतं एबीसी गेम केले
और जा.
रिटेन्शन किती राहतं ते लोक ब्रेक
झालं तर झालं.
ब्रेक झालं हा इकडे खरंच नाही
अरे अभ्यास करायला ना.
आणि मी पण ऑफिस पण तिकडनं पण दिसणार हे बघ तू गेलीस हे बघ दोन तुझे इकडे ओळखीचे मित्र हे बघ दोन मित्र म्हणशील अशी लोक आहेत इकडे आपण तू गेलीस की आम्ही तुला बाय तर नक्कीच करणार बाय गुड नाईट बाय बाय गुड नाईट बाय बाय गुड नाईट तरी तू जाणार स्टेजवर जोडणार बाय बाय गुड नाईट आम्ही म्हटलं आम्ही सरांना पण झालं म्हणाल तर
तू पण म्हण. तू पण म्हण गुड नाईट सर. आणि त्याच्यानंतर आणि त्याच्यात 12 वाजता त्याच्यानंतर आपण
सर बसली
अजून 12:30 वाजले.
सर बसली की मी सोडतो मी सोडतो चल
तू कुठे राहिला?
आपण ताफा काढू ताफा काढू ताफा तुला तिघी जण मी तुला सोडायला ताफा म्हणजे कॉन्वॉय काफी
आहे माझ्याकडे
हिंदी
बुलेट पण आहे.
हा तू त्या हंटरला बुलेट म्हणतोय
बुलेट असते.
ते रॉयल बुलेट असते
आहे
विदाउट एफएससी क्रॅश कोर्स लागतोय तो नॉर्मल जिंदगी नाही
मेंटल जिंदगी आहे.
मेंटॉस मेंटॉस मेलोडी
मेलोडी क्लास
तू जर गेला तर काय करते
अरे तो जाणार आहे. हा तिथे वाजता आली ना 7 तारखेला बरोबर 1 महिना आहे. उद्या मी ऑफिस मध्ये झोपणार आहे.
सेशन कधी देणार एक्झाम सेशन दुपारचं तो बोलला ना आदित्य काहीतरी आदित्यचा नंबर
ऐक ना तिच्याकडे पण एक बुलेट आहे.
तू डबल केलं रे तू एवढं सिरियस सहज बोल आहे बोल सहज गमतीत बोल खरंच गमतीत बोल सहज सांगतो
ते नाही त्याच्याकडे खरंच बुलेट आहे. हे व्हिडिओ
फोन नाही झाले कॅन्सल करते आपण बता की म्हणजे वर्ल्ड क्लास मध्ये बता की जेव्हा काय
प्रेस्टिज में आपको होता
पण बता की जेव्हा काय असतं सीधा पीछे से
ऑफिस मध्ये मी झोपणार उद्या जाऊन ये ऑलरेडी फैक्टरिंग करके रखा है बंद होता है ना प्रोवाइडेड सर कंटिन्यू करते सेशन तक ब्रेक राइट सर स्टॉप के ला अच्छा सर नहीं बस सर नहीं बस आज पर मेरे एग्जाम बैठे हो ऊपर से डिमांड है जाना है तुझे भगाने की तैयारी कर रही है यस तुम खड़े हो तो फेक हो रहे
Actually, सिद्धेश एक और काम कर, वो वाली बॉटल में पानी भर के ला. I love juniors. काम कर.
वो स्नीकर का
I love juniors. चलो, juniors काम पे लगाओ. Downstairs. You want a Red Bull?
I don't want it right now. I'll give it for future.
Oh, you get one like downstairs. There's a shop and then there's one across also. इसमें पानी भर.
मेडिकल वाला टिकट
तुम्हारा
फर्स्ट टाइम है ना
क्या?
एफएसए
हाँ.
सब देखा हम सब पहली
How
बार
are you preparing if for May exam? You should give me some tips.
अरे मेरे से मत पूछो, मैं इंजीनियर हूँ. लास्ट मोमेंट पढ़ाई मेरा कर्तव्य है लाइफ का.
भाई सीएफ एफएसए सीएफ एग्जाम
भाई तुम तो थोड़े तो tips share
हाँ.
करो ना.
10 मिनट से
नहीं, एग्जैक्टली दैट्स व्हाई आई केम हियर. अभी मैं नेक्स्ट टॉपिक मेरा एफएसए ही है घर पे करने का, तो इसलिए.
अरे मई को टाइम है.
हाँ
May में है ना तुम्हारा.
इतना भी लास्ट मिनट में.
हाँ, इतना लास्ट मिनट में.
आपका कभी
मेरा नवंबर.
व्हाट
ये सर के सामने डिस्कशन है.
दो पूरा सिलेबस तुम्हारा
के सामने
1.5 टाइम हो जाएगा ना
नो, मैंने पता क्या, एक
मेरा
महीना
अगस्त
फिक्स्ड
है, मेरे
इनकम
3
एफएसए के लिए अलग से
subjects
रखा है.
मेरा
जस्ट आई एम डन विद फिक्स्ड इनकम मेजर टॉपिक. और मैं क्वांट का ही लिखता हूँ, मुझे क्वांट आता है.
सिग्नल फर्म के
नहीं
मेरा पीएम हो गया है, इक्विटी अभी खत्म कर दूंगा.
ये तो थ्योरी है
Exactly. So then major thing that I'm scared of, which is why I came here, इसके beyond I'll just do FSA.
Sure. How about you? Where do you have the idea? How will you go? Why don't you go now and attend the class?
Good job.
So I'm not comfortable you being here. How will you go it?
No, sir, it's okay. If I go home, I won't be able to.
That's everyone.
सर बोलो जी
Siddhi, how will you go?
I will go 2 years.
Sorry?
I will leave at 10 to 2.
Ambitious. Pretty ambitious.
आई फील कि हमको
Yeah, yeah, go for it.
आई फील हमको अगर कोई बैठा नहीं है तो इधर कोई बैठा है इधर
क्या हो गया शिफ्ट?
हाँ मैं वही बोल रहा हूँ कि भाई
ठीक तो है अभी, क्या है, कितना घुस जाएगा स्क्रीन.
हाँ भाई
तेरे को कैमरा में
खाली फुकट स्क्रीन टाइम मिलेगा
Exactly.
स्क्रीन टाइम नहीं चाहिए शुड भूल गए इट्स ऑलवेज अबाउट स्क्रीन टाइम मेरा
विशाल सरांना झोप आली आहे. Many people do not know Vishal sir is a big fan of Shah Rukh Khan. Am I audible now? Yeah, I'm audible here. Just testing there. Yeah, and he does very good poses of Shah Rukh Khan. Maybe he can show us one. Go on, Vishal sir, you're on the camera now. शाहरुख खान पे आप कुछ बोल दो. विशाल सर इज रेडी टू फाइट. ज्यादा मत बोलो, किरण किरण शुरू हो जाएगा. हाँ, एक्सेस बंद हो जाएगा. LM what? 7? 6. Okay, inventories. Shuru? Online, is everyone ready? Give me a large, loud I pass. I'm proud of you, those 100 people who've stayed back. 105 by the way now. 100 people who've stayed back. Give me a I pass. Let's start. Okay. Inventory. Let me give you a crux of what we have in inventory. First, the inventory valuation model. So, under IFRS and under US GAAP, we will compare cost versus NRV, whichever is lower. Cost versus NRV, whichever is lower. How do you calculate NRV? Selling price minus selling cost. Okay, now I'll give you a practical example. You'll understand how this thing works. Imagine you buy, you're running some retail store, let's say sneakers, you're selling sneakers in your shop. Now you buy a set of fancy Nike sneakers for 100 rupees, thinking that you would sell them for 400 rupees. But suddenly those sneakers are out of fashion, right? And now in the market you can sell them for at a heavy discount price of 70 rupees. But even to sell them at 70 rupees, you'll have to pay brokerage, commission, whatever, right? Selling cost will be 10 rupees. So your net realizable value is how much? 60. So you take the one which is lower. And then on your balance sheet, when you show inventory, you will say 100 minus write down. Okay, write down of 40, and net inventory will be shown at 60. Cost or NRV, whichever is lower. What if NRV was 150? Then show it at 100. Conservatism, है ना? तो कम है उसको दिखाएंगे. Is that okay? Now you are going to do a write down of 40. What is the second effect? Because remember, in case of asset, when I did write down of impairment, second effect was P&L. But in case of inventory, when I write down, what is the second effect? P&L again. Okay, but which part of P&L? COGS. So when you do inventory write down, your COGS as an expense goes up, inventory cost goes up. That's kind of logical. Profit reduces. Value of inventory on your books is lower. That's it. Is that making sense? Now, how about US GAAP? Good news for you, it's same. Cost versus NRV, whichever is lower. Exactly same. Okay? Except in US GAAP, there is one exception. In US GAAP, you're allowed to use a method called LIFO. Last in, first out. In US GAAP, there is also a different type of inventory method that's not discussed in the CFA curriculum, but that's called retail method. Now, this method is generally useful for those companies which have too many varieties of smaller cost items which are constantly moving. So if you want ease of inventory valuation, those companies opt in for retail method. Okay, you just need to know the name. If you use LIFO or retail, then the accounting changes a little bit. Okay, so under this situation, you need to do cost versus not NRV anymore, but replacement. In the juice notes, you will see this flowchart, cost versus replacement. Replacement at times is also called market. Now, what is the replacement cost? So imagine I'm running a mobile phone. I have this mobile phone in my inventory. Now, this mobile phone is a used mobile phone. It has 10 scratches. If I have to replace this phone with something which is exactly similar, it should also be scratched, right? Replace as it is. Then how much would that cost? That is referred to as replacement value, which honestly is nothing but the market value of my product. Are you getting it? But how is it different than NRV? In NRV, I generally try to sell it at some profit. Generally, right? In this case, not, but generally I try to sell it some profit. Now, what US GAAP does, and you'd have this feeling again and again and again with US GAAP, that it's very illogical and unnecessarily complicated. US GAAP does not trust the number that the companies will give for replacement. So US GAAP puts one more logical check on this. It says, okay, you're giving me some replacement value, but it needs to be within a certain price band. What is that certain price band? On the lower side, on the higher side, that price band again is NRV, which IFRS concept comes in here. On the lower side, it should be NRV minus normal profit margin. NRV minus normal profit margin. I'll give you an example. Let us say same Nike shoes, you bought it for 100. Okay. Now you feel I can replace this maybe at a cost to cost basis. Replacement for this product today is 50. Then immediately the auditor will ask, okay, you're giving me market as 50. Is this a logical number? The answer is no. Is this 50 a logical number? Please tell me what's your NRV. Remember our NRV was 60. Generally, how much profit you make? You'd say, hey, listen, this Nike shoe, I'm not making profit, I'm making losses. The question is not how much profit on this shoe. The question is on how much profit do you generally make. I make about 30 rupees of profit. So then NRV minus normal profit margin of 30, this number becomes 30. Then you ask yourself, is my market value fitting between 30 and 60? If yes, I can use it. Then 100 versus 50. Then what is my write down? 50. Because I'm going to bring down the inventory to the level of 50. That means write it down by 50. Now, what if your NRV minus normal profit margin were happened to be, let us say this number was 55. Okay. Now, is 50 fitting between 55 and 60? क्या 50, 55 और 60 के अंदर है? No. If 50 is not between the two range, then you use the closest boundary. So then 55 becomes your replacement value. समझो मैं क्या बोल रहा हूँ? This is like a range. NRV and NRV minus normal profit margin. If this number were to be 55, then we will not use that 50. Then we will be forced to use 55. Okay? With me on this? Have you understood the logic? Very unlikely you're required to do all of this on the exam, but in case if you do, then you should know. Cost versus market. Market needs to be within a range. What is that range? NRV and NRV minus normal profit margin. What is the definition of NRV? Selling price minus selling cost. Okay, good. Now, under IFRS, and this is generally true at most of the places, okay. I think I'll write it down as a separate point, but generally in IFRS, reversal is allowed. Write down reversal is allowed. Under US GAAP I told you is not trusting on the companies. Okay, in fact, if you go to the depth of it, you'd realize whenever you build accounting standards, right, you have some fundamental logic. So, US GAAP is a rule-based accounting standard, whereas IFRS is a more objective-based accounting standard, principle-based accounting standard, which means IFRS, you want companies to show fair value. The regulators are very trusting, they'll give you flexibility. They'll not impose too many rules. But in US GAAP, it's extremely rule-based. So under US GAAP, reversal of written down inventory is not allowed. And as far as your CFA level 1 exams are concerned, generally the rule you can operate in this framework. There are some rare exceptions, but generally you should know this, that in US GAAP will be very, very hesitant to allow you to take the value of asset up. US GAAP बोलेगा आप बेच के दो, बेचने के ज़्यादा पैसा आएगा तब रिकॉर्ड करो. US GAAP will not allow you to take the value of asset up. IFRS in lot of cases will be okay. Remember revaluation model? It was in IFRS. I can take the value of asset upward. And even if you write down the value, under IFRS it is allowed to reverse it. Same was true for impairment. I missed that point there. In IFRS, the impairment reversal is allowed. In US GAAP, impairment reversal is not allowed. US GAAP is extremely strict. It will not let you take the value of asset upwards. Once you've taken it down, it remains down. Okay? Then, next concept. Concept number 2. We know inventory valuation methods. We have 4 of them. We have FIFO, we have LIFO, we have specific identification, and we have, I think I missed the sequence, weighted average, and we have specific identification. Okay, so we have these 4 methods. Now, FIFO means first in, first out. LIFO means last in, first out. I'm going to assume you know the basics here. Now, what you need to know for the exams is US GAAP, is FIFO allowed under US GAAP? Is LIFO allowed under US GAAP? Weighted average, specific identification, yes. IFRS, is FIFO allowed? Yes. Is LIFO allowed? No. Weighted average, specific, yes. So the only contention is with respect to LIFO. LIFO में दिक्कत है. Now, LIFO versus FIFO, very important. If you are in an inflationary environment, okay, a lot of questions around this. This is a 5-star. Very high probability of showing up. If you are in an inflationary environment, what do you think will happen to your COGS under LIFO? Think about it. Last in, first out. So whatever I am purchasing the latest, I am selling it in an accounting way. So what do you think my COGS will be higher or lower if the prices are rising up? This will be higher. These are the questions you're looking at on the exam. If COGS is higher, what will be the impact on my closing inventory? Because all the expensive item that I'm buying Think about it, right? Let's assume you're selling tomatoes. Okay? The first tomato that you buy it for 10 rupees. The next tomato that you buy it for 20 rupees. If you're using LIFO, which one is going into COGS? 20. And then this one is remaining in my closing inventory. If I were to use FIFO, then what will happen? The 10 rupee one will go to COGS, 20 rupee one will remain in my closing inventory. Weighted average will be beach mein. Yes? So, closing inventory here will be lower compared to FIFO. How about my gross profit? Gross profit. Higher or lower? Lower. Why is that? Because COGS was higher. Okay, now answer this. How about my current assets? Higher or lower? Why lower? Because inventory is lower, so current assets will be lower. How about my current ratio? Current ratio is calculated as current asset divided by current liability. It will be lower again. With me on this? Then, this is the exam level question, 3-star. Let's see if you can answer this. I'll be super impressed. How about my inventory turnover ratio? Inventory turnover ratio. Higher or lower? How do you calculate inventory turnover ratio? COGS divided by average inventory. So what do you think will happen to inventory turnover ratio? Higher or lower? It will be higher. Why is that? Because COGS is higher, closing inventory is lower. These are the type of questions you're looking at on the exam. Will you be able to handle them? Okay, let's go a little weird. Let's say debt to equity ratio. Debt to equity ratio. How many of you think higher? Why? Because my COGS is higher, so my profit is lower. If profit is lower, equity is lower. If equity is lower, no impact on debt. Equity is lower, debt to equity ratio will be higher. Are you getting feel of it? बस इन्वेंट्री में इतना ही है. Let's look at the juice notes. Remind me to do common size statements with you. We'll do it in the last reading. I'll show you a practical example for common size. Okay, this part we've done, this part is done. This is done. This is done. Okay, good. We're through. Next reading. LIFO reserve, LIFO to FIFO conversion, I think वो आखिरी में इसमें से निकल गया. It's not in the inventory reading anymore. निकल गया ना पूरा. हाँ, LIFO reserve, I think they've moved to level 2 now, so we don't have to worry. There's no LIFO liquidation, nothing. Change from LIFO to FIFO is also not there. LM7. Analysis of long-term liabilities. Assets. I think liability next wala. Okay, first concept, goodwill repeats again. Tell me, what was the formula we used for goodwill? Purchase price paid minus fair value of net identifiable. Identifiable means separately sellable, which means not goodwill for all practical purpose assets. When I say net, it means asset minus liability. How about uh, internally generated goodwill? How do I show that on the books? I do not show it on the books. Someone on the chat box was asking why. Why not? This is no way to find out. Like if I'm spending money on customer service, how much of that is actually building goodwill? There's no way to find out, right? Therefore, we don't capitalize it. We just expense everything. Can I amortize goodwill? Goodwill is not amortized. Not amortized. Can I impair goodwill? Yes, it is tested for impairment. How to impair, we'll learn that in level 2. Okay, it's a little technical under US GAAP IFRS, level 2. What we learn here, though, is impairment of assets. ये थोड़ा टेक्निकल है, इस पर टाइम लेंगे, आराम से पढ़ेंगे. How do I impair assets? Typically assets means PPE. How do I know? So the accounting treatment differs under US GAAP and IFRS. Let's do IFRS first. This has a good chance of showing up. Under IFRS, we compare carrying value versus something called as a recoverable amount. Recoverable amount is further calculated as higher of NRV or value in use. Value in use. Value in use is present value of future cash flows. Let me show you what that means. Now first, how is carrying value calculated? Gross block minus accumulated depreciation. Gross block means the price at which I bought the asset. So imagine some asset 10 years ago you bought it for 100 rupees. Now every year you charge depreciation of 2 rupees. So 2 rupees depreciation per annum for 10 years. Kitna ho gaya total depreciation? 20. So then in your books that asset is worth how much? 80. This is called carrying value. Carrying value means jo balance sheet pe dikhta hai. It's also called net block. Gross block minus accumulated depreciation. ठीक है ना? So the number that you see on the balance sheet, is it gross block or net block? No, the one that you see on balance sheet. It's net block because it's after all the depreciation. Recoverable amount means NRV, selling price minus selling cost again. So if I decide to sell it, maybe I will get 90 rupees, but broker I'll have to pay commission of 10 rupees, so my NRV is 80 rupees. But then I have an option of not selling it and keep on using it. Imagine it's a car. I can give it on rent. It will generate me some cash flows. I can discount those cash flows backward. Present value of future cash flows. When I do that, it will turn out to be 75 rupees. Now, which one is higher of the two? 80 or 75? 80. 80 becomes your recoverable. अच्छा 80 तो नहीं होना चाहिए था है ना? इसको 78 कर देता हूँ. Let me make this as 12. So this is 78, this is 75. Now, 78 is higher, so 78 is recoverable amount. Is it lower than 80? Yes. So then, I will have to charge impairment loss of how much? 2 rupees. First effect, balance sheet asset value will reduce. Second effect, P&L loss, P&L debit, P&L expense. That's it. That's how you do accounting for IFRS. How about reversal of this impairment under IFRS? Under IFRS, allowed. I told you IFRS is liberal. Okay, if you charge higher impairment last year, you feel like you want to reverse it, okay, within certain rules, we'll let you reverse it. To the extent of previous write-down, we can reverse. Can we reverse impairment under US GAAP? No, US GAAP is strict. Once you've taken it down, it remains down. Let's see how to do US GAAP. Now, US GAAP is kind of interesting. I told you US GAAP gets complicated everywhere. Here, I think US GAAP to me makes a little more sense. What US GAAP says is, US GAAP says, before you decide to find out how much impairment to charge, पहले decide तो कर लो कि करना है या नहीं करना है ना? So US GAAP will have two steps. Step number 1 is called recoverability test. It's some sort of an exam to decide if impairment is to be charged, where we will compare carrying value with the total of undiscounted cash flows that we can generate from that asset. Carrying value with total of undiscounted cash flows. Means what? Means it's a car. I bought the car for 100 rupees. I can give it on rent. I can give it on rent for next 7 years. Every year it will generate me some, let's say 20 rupees. So 7 year into 20 rupees, kitna aega total? 140. If total of undiscounted cash flows is higher, step 2 jao hai mat, don't go to step 2 because impairment is not necessary. Impairment is necessary only if the total of undiscounted cash flows are lower. So under US GAAP, you need to first decide whether I need to calculate impairment or not. Let's assume for this example, let's make it 90. Okay, that total of undiscounted cash flows is 90. Then the answer will be yes, I need to go to step number 2. So let's go to step 2. Now in step 2, what you need to do is you need to compare carrying value, and this carrying value now will be compared with the fair value of the asset. If fair value is not available, then we'd use value in use. So there is a hierarchy in US GAAP. Carrying value versus fair value. Fair value means market value of the asset. Okay. So let's assume carrying value is 100 and the market value of the asset happens to be, I'm making up something random, let us say 70 rupees. It's a different example. 70 rupees. Then I will charge impairment of how much? Impairment of 30 rupees. But you know what might happen on the exam, and the question in the CFA curriculum someone was referring to. CFA curriculum has a question where they play a trick with you. They give you the fair value, but they will give you this number to be equal to 105. So if that number is equal to 1045, you don't even need to go to step 2. In step 1 itself khatam ho gaya, your impairment loss is 0. Right? So in IFRS, in US GAAP, it has to happen in 2 steps. Step number 1 bolo kya hai? Step number 1 is to decide if impairment is required. How will we do it? Carrying value versus total of undiscounted. Undiscounted means without using time value of money, as it is. If carrying value is lower, then only we go to step 2. And in step 2, we compare carrying value with fair value. Whatever is the difference, that becomes my impairment. Is that okay? Can I reverse my impairment losses in US GAAP? I cannot. Can I do it in IFRS? Yes, I can. If fair value is not available, then we use value in use, which is present value of future cash flows. Generally, present value of future cash flows should be closer to fair value. Okay. Now suddenly our speed has picked up quite a bit. This reading is also done. Yeah, there's one point okay, this is a good one. I think there's, okay, there are two smaller things we need to compare. There's one concept called asset held for sale. Okay. Now, what do you mean by asset held for sale? Imagine I buy a building for 100 rupees. I'm using US GAAP. Under US GAAP, am I allowed to use historical cost model? No. Under US GAAP, am I allowed to use cost model? Of course, that's the only model I'm allowed to use. US GAAP does not have fair value model. मैं देख रहा था कितनी नींद आ रही है. So I can use cost model. Now 100 rupees became 99, 98, 97, 95. Once it reached 95, then Ritesh will see that exception now. Once I reached 95, then my board of directors decided that listen, ये building को use नहीं करेंगे, इसको बेच देंगे. We are going to sell this building. Then I'm allowed to reclassify that PP as PP held for sale. पहले मेरा पुराना building था, which was classified as PP. Now I can reclassify on my balance sheet as PP held for sale. The moment I reclassify, now I'm allowed to show it at fair value. Whether it's US GAAP or it's IFRS, doesn't matter now. Okay? So, reclassified from PP to held for sale when two condition, sell is highly probable, asset is ready for sale. Then what do you do now? The moment you reclassify as held to sale, look at this, you are not going to depreciate that asset anymore. Okay? Then you are going to show this asset at what price? You are going to show that asset simply at fair value. So my building was 95 in my books, but in the market it was at 150. Now I can show it at 150. My building was 95 in the market, as it is at 60 rupees. I will book 35 as impairment loss. One-time adjustment to bring it back to the fair value level. Under this section is the only section in level 1 syllabus where it is okay to reverse that impairment under US GAAP. So this is the only exception. Someone pointed out, Ritesh, right? That can I, under US GAAP, we know once I take down the asset, I cannot take it up. यहाँ पे मैं कर सकता हूँ. This is the only place where I am allowed to do it. Is this clear? हाँ जी. P&L. P&L. Everything is in P&L, second effect. Profit also, loss also. Okay, I forgot one last item for you. Sneha, the answer to your question is yes. One last piece here, something called as an investment PP. Now what is this? So imagine you buy a building. सुन लो, 2 ही मिनट ये रीडिंग खत्म हो गया. आपने एक बिल्डिंग खरीदा. Now your intention is that this building I'm not going to use myself. I'm buying it only for investment purposes. Okay? So then you're allowed to show that as an investment PP. Under what? Under IFRS. Investment PP as a concept is not allowed in US GAAP. ये सिर्फ और सिर्फ only in IFRS. Now what is the benefit of using investment PP? The benefit of using investment PP is accounting for investment PP will be same as your revaluation model. What was your revaluation model? Show it at fair value. If there is an increase in the value of asset, that means if there is a profit, वो profit कहाँ पे दिखा रहे थे हम लोग? OCI. If there is a loss, P&L. If there was a loss first, P&L, and then loss reversal, P&L. मतलब जहाँ पे loss, wherever the loss was, you reverse at the same place. This is same as revaluation model, except everything now goes to P&L. Everything in P&L. which means profit also P&L, loss also P&L. Okay, but what is the condition? That you have purchased the asset with an intention to invest. That means a rent generating asset typically. There are questions in the CFA curriculum, 2-3 of them on this concept. Which asset is allowed to classify as investment PPE? The one that you've purchased with an intention to use or intention to invest? Invest. Is it allowed under US GAAP? No. And then can I show it at fair value? Yes. Gains? P&L. Losses? P&L. Reversal of losses? P&L. Reversal of gains? P&L. Done. Khatam. LM8. Do you like the speed? नहीं 11 नहीं होगा क्योंकि भी आखिरी में डुपॉन्ट निकलेगा. It will take some time. बहुत है अभी तो, दिल्ली दूर है. This is now long-term liabilities. Accounting for long-term liabilities. Now, this is going to take some time. This I want to do properly, should take about 30 minutes, just one concept. करना है अच्छे से, बड़े tough है. I cannot visualize a CFA level 1 FRA paper which will not have question on this. I just cannot, because this is kind of the most important thing in the syllabus, extremely important thing in practice, this whole long-term liability business. What do you have in this? You have two parts that we need to focus on. We have to focus on leases. That's my section number 1. And we have to focus on pension. Section number 2. Both of them are complicated. Within leases, we have two subparts. We have to learn accounting for in the books of lessee, accounting in the books of lessor. Lessee means the one who is taking the asset, है ना? मतलब कैसे उसको हिंदी में क्या लिखते हैं? वाह वाह शाबाश, asset लेने वाला, किराएदार, है ना? कि कौन सा है, पहला है दूसरा? ऐसे होता है? नहीं, लेफ्ट वाला. किराएदार. किराए ये ऐसे होगा? किराएदार. And lessor means what? मालिक. Okay. Now, accounting for leasee, सुन लो. Within this again, we will have operating lease and we will have finance lease. Again, operating lease, finance lease. Within this again, IFRS, US GAAP. IFRS, US GAAP. Aa raha hai maza? IFRS, but luckily many of them are same, so I'll summarize it for you. We'll create one table, everything will consolidate. Then pension, we have two types of pension, defined contribution, defined benefit. Now defined benefit, we have to learn treatment on balance sheet, we have to learn treatment on income statement. Income statement, again we have to learn IFRS, we have to learn US GAAP. This is roughly schematics of this reading. These are the areas we need to kind of attack on. I'm starting here. Same, that's correct. So let's start with accounting for leases first. Now, even though accounting in the books of lessee, I told you, is different in IFRS and US GAAP, different for operating and finance lease, there have been some major changes in the accounting standard. So, for all practical purpose, accounting treatment is same for everyone. Operating lease, finance lease, IFRS, US GAAP. There is one small change which I'll show you towards the end. अभी ये देख लो क्या है first. ये आसान है. Let's assume there is a, what is this? No, this is a construction equipment. Yeah. This is a construction equipment. Remind me, I'll show you. I found a very interesting company. I was searching for stocks, I think, 10, 15 days ago. People make business out of literally anything. I found a company which basically buys old construction equipment in India. ये जो JCB, VCB नहीं होते, repairs them, because in India the cost of repairs is very, very low, and exports them to Brazil, right? And they've built a 400 crore business out of it. I'll show you that business. It's very interesting. But anyways, it's a construction equipment. Now, this is the individual for whom we are going to do accounting. This is Lazy. No, it's not called AS. It's अभी मत देखो stock, अभी ये देख लो please. मैं दिखाऊंगा stock बाद में. Now, what we've done is we've done a 5-year lease. Okay, we are going to lease this construction equipment for 5 years. Every year, we are going to pay 100 rupees. For 5 years, we'll get to use that asset. Okay. Now, technically, this is nothing but rent, right? I'm just renting the asset. But accounting standards don't like to look at this like rent. Accounting standards say that, hey, you're renting the asset, but you have to treat it as if you have purchased the asset by taking a loan. This is the whole accounting for lesser concept, right? It changed quite significantly a few years ago. So even though you're renting it, treat it as if you have purchased the asset by taking a loan. Then you would say, how is that possible? I'm paying this 100 as rent every year. Then the accounting body will say that 100 is not rent anymore. It is the EMI that you're paying on your loan. So even though you think you're paying rent, you're not paying rent, you're paying what? EMI. Remember, every EMI or every installment is made of two parts: interest and principal. You know? Some part of it is interest, some part of it is principal. So we have to do the whole accounting like that. हमको एसेट तो 5 साल के लिए मिल रहा है ना, उसके बाद की उसकी प्रॉब्लम. Now, there's a reason for that. I'll explain the reason also a little later. But right now, I want to focus more on the exams of why we're doing this. Now, the first thing we have to do is we need some sort of a discount rate for this. Let's say 10%. Okay. Step number one, we will take present value of these lease payments. I'm going to pay 100, 100, 100 for 5 years. Let's take a present value at 10%. Karo saath mein. Present value of lease payment. 100 payment, 10 IY, 5N, compute present value. How much? 3? 379.07. Now, for simplicity, I'm just going to make it as 380. Okay. So, present value of lease payment is 80. This 380, which is a valuation at time 0, we are going to create an equal amount of liability, equal amount of asset. When I do accounting, I'm going to treat it as a liability and asset. इस liability का नाम होगा lease liability. And the asset would be called ROU. नहीं. ROU asset. ROU stands for right of use. So we'll create an equal amount of ROU asset, equal amount of lease liability. Okay. Now, in order to completely be able to solve this, I'll have to do some background work. So we are going to do step 2. Okay. I'm going to prepare something called as an amortization table. This table will come in handy when we have to prepare financial statements. What is an amortization table? So, देखो यहाँ पे opening value of loan, okay? Interest expense, or in fact, let's say installment paid. Some part of the installment is always interest. Some part of the installment is principal. and then closing value of loan. Now I'll use that 379 here. So opening value of loan, इसमें कोई column put गया मैंने, ठीक है. This is year 1, year 2, year 3. I hope all of you are with me here. Year 4 and year 5. We'll have to do 5-year calculation. Opening value of loan was 379. Every year, what installment are we paying? 100. So I pay 100, 100, 100 for 5 years. My loan is over. Agree? Huh? Now, how much of that seems okay? How much of that 100 is interest in the first year? So think about it. Your interest rate is 10%. Your loan value is 379. How much should be interest? 37.9. So let's round it off to 38. 10% of 379. Okay. So if 38 is interest, but I'm paying 100, then why am I paying that 62 extra? It's a principal repayment. Principal repayment. So if I repaid principal of 62, how much loan is left? 317. This is called amortization table. With this logic, by the end of 5th year, loan should be how much? 0. It just shows you a path of how the loan reduces. Next year opening, 317. Are you with me on this? Next year principal will be 32 approximately. How much is the principal repaid? 68. How much is the loan left? Can you do 317 minus 68? 249. This is 249. This is 25. This is 75. How much now? 174. 174. This will be 17 and a half. So this will be 82.5. 174 minus 82.5. 91.5. This is 91.5. So my interest would be about 9.15. So approximately 91.5. This is 0. क्या 82.4? कहाँ पे? 82.5 लिखा है ना मैंने?
Year 5 principal repayment. 100 minus 9.15.
कोई बात नहीं, होता है. So this is amort table. Now this amort table you can prepare directly on your taxes. You know how to do it? It's there directly on your taxes table. I'll show you how to do it. Do this with me. Second clear TVM. 100 payment, 5N, 10 IY, compute present value. 379. Now press second and amort. There's an amort button. 100 payment, 10 IY, 5N, compute present value. Minus 379 है. Press second and amort. Amort button किसके ऊपर है भाई? PV के ऊपर. So second and amort. Now it will show you P1 on the screen. Keep that number as 1. It's already 1 by default. Downward arrow. P2, keep it as 1. Downward arrow, it will show you balance. Should be closer to 317. After first installment, balance left is 317. Downward arrow one more time, it will show you principal, kitna? 62. Downward arrow one more time, interest, 38, 37.9. Now downward arrow, go to P1 again. Make that as 2. 2 enter. Go to P2, make that as 2 enter again. Dhire dhire karna. The logic in this calculator is P2 should be equal to or higher than P1. P1 is starting, P2 is ending. Starting period, ending period. Okay. So keep P2 as 2, P1 as 2. Kya apne? Now look at balance. 248. Look at principal. 68. Look at interest. 32. Are you samajh mein? Then what is the use of P1 and P2? Just experiment. Go to P1 again. Keep that number as 2. Okay. Go to P2. Make it as 4. Now go to balance. It will show you 91.5 or aise kuch. Then go to principal. 2 to 6. What is 2 to 6? The principal paid between installment 2 and 4. It gives you a cumulative number. So if you don't want cumulative, keep P2, P1 and P2 as 2, 2. If you want cumulative, then create a delta between the two. Interest will be cumulative. So it will give you interest of total of these items. ठीक है ना? It's working. Now, for all practical purpose, you don't need to do this on the exam. Just keep P1 and P2 as the same number. Where will you get an error? Let me show you an error. Go make your P1 as 3 and make your P2 as 2. हाँ. So P1 को 3 बनाओ और P2 को 2 बना दो. It will show you an error. Your P2 cannot be lower than P1 because it's an ending period. So P2 can either be same as P1 or higher than P1. Is that okay? Okay, let's come back to the main topic now. Now, how do I do accounting for this? First, what's happening on balance sheet? Okay, balance sheet time 0, time 1, time 2, time 3, time 4, time 5. Everyone please be with me on this. On balance sheet, we will have one asset which is called ROU. ROU asset, थोड़ा 2 minute ध्यान से देख लो, ये tough है. Get hold of it. ROU asset was your present value of this. Let me just stick to 379. Okay. Now what do you need to do? Every year on this 379, you need to charge a depreciation. It's a right of use asset. Right of use will expire in 5 years. So every year we charge depreciation. How much? 379 divided by 5. कितना आता है? 379 divided by 5. 75.8. So let's say about 76. Then next year it will be 379 minus accumulated depreciation 76 twice. Are you getting what I'm trying to say? So can you tell me what's the value for the first year? 379 minus 76? 303. The next year 303 minus 76. 227. 227 minus 76. 151. 151 minus 76. About 76. 76 minus 76, 0. What is this? This is called depreciation. On right of use asset, you're charging a depreciation or amortization. Okay? Then how about your lease liability, which is also going to be on balance sheet? First year lease liability will be 379. Now every year my lease liability will reduce based on the amort table. So second year lease liability will become 317. Third year it will become 249. Then 174. अच्छा मैंने गलत किया ये. सही है क्या? हाँ सही है. 174, 91.5, and finally it will become 0. So notice at the beginning they are same, at the end they are same, but in between they'll not necessarily be same. What do you think? Is that making sense? So balance sheet treatment is over. What kind of questions can you have? Let's say one easy question will be, they'll give you this lease structure. They'll ask you what will be the value of ROU asset created. Second question, they'll give you ROU asset at the beginning and they'll tell you lease is of 5 years. You're charging straight line depreciation. What would be the closing value of ROU in the third year? So whatever we did in the table, you should be able to do it. Everything, that's it. Easy so far? That's balance sheet. Then, how about income statement? On income statement, you will have two expenses. One is called depreciation. One, interest expense. Now, remember depreciation is a what type of expense? Non-cash. But depreciation is operating or non-operating? It's an operating expense. Whereas interest is a non-operating expense. Non-operating expense. That means one is above EBIT, other one is below EBIT. Depreciation we know every year is 76. So every year 76, 76, 76, 76, 76. Interest expense, first year, based on the amount table, 38, 32, 38, 32, 25, 17.5 and 9.15. That's it, done. Income statement is also done. Are we okay? Last thing, how will you treat this in cash flow statement? Now, two types of cash is going out. One, cash is going out towards interest payment. Second, cash is going out towards principal repayment. Principal repayment. Now, principal repayment is nothing but minus CFF. Interest payment minus CFO or CFF again, depending on whether it's US GAAP or IFRS. You know? But we'll assume CFO, interest payment. Now, interest payment, we already know the amount, which is 38 negative, 32 negative, 25 negative, 17.5 negative, 9.15 negative. How about CFF?
62.
So principal repayment in the first year, correct. So please help me out. 62 then?
68.
Okay.
75.
Okay.
82.5.
Okay.
91.5.
Done. That's it. That's your accounting for in the books of Leasy. Can I scroll down? Sure. मजा आ रहा है? Let's summarize. Let's visualize the whole thing in our head. What is happening? Let's not lose the big picture. We are renting an asset. We are paying 100 rupees every year for 5 years. But accounting standard is not allowing us to treat it like a rent transaction. Accounting standard is forcing it to treat it like a purchase with loan transaction. So step number 1, take present value of the 100 for 5 years. Give us 379. Create equal amount of asset, equal amount of liability. Asset is called ROU, liability is called lease liability. So this part is done. Now, what happens on balance sheet? Let's visualize it. What happens to balance sheet has two items, ROU and lease liability. What's happening to ROU? 379. Every year I'll depreciate, make it 0. Depreciate how? Straight line method. 379 divided by 5 is my depreciation. So asset to khatam ho gaya. Then we came to liability, lease liability. Now lease liability, every year I'm repaying some part of the liability through that amount table. So I can go to the amount table, look at closing value of liability. Right? So first year it was 379, then 317, eventually it became 0. So lease liability is coming from amount table based on principal repayment. So 2 ho gaya, balance sheet is over. Income statement, I have only 2 items. One is interest, one is depreciation. Depreciation I know, the same amount. Interest is in amount table. So khatam ho gaya. Then we go to cash flow statement. Cash flow statement I have 2 outflows. One for interest, one for principal. Interest is typically CFO. Principal repaid is typically CFF. Interest I will get on amount table. Principal I will get on amount table. Khatam. That's the most complex part in level 1 FRM. Okay? There's a reason for it. When you'll watch main video, you'll understand. See, let's take a classic example in India. I'm sure you're aware of Avenue Supermart, DMart. Now, one of the things DMart does very differently than other, at least in the past, not anymore. DMart used to purchase every property. Okay? Whereas someone else is renting the property. If I want to compare them, business model is same, but one of them will have rent as an expense, other one will have depreciation and interest as an expense because might have taken a loan. So it makes them comparable. A lot of companies historically, and in fact even today, they don't prefer buying an asset. For example, Indigo is a classic case. Now Indigo has that massive order with Airbus, right? But Indigo is not buying those assets. Indigo is leasing them. But if I'm leasing an aircraft has a life of, by the way, aircrafts have crazy life. I didn't know that earlier. It's slightly off track, but just for fun. Sometime back I was traveling, so I got an opportunity to fly a smaller aircraft. So I took a small course. On first day when I went to fly that aircraft, my instructor gave me some basic chota mota exam padhai karke. And then he told me it was some 1970s aircraft. मैं कहा कि भाई इसमें बिठा रहा. Then he told me this is actually the best one he had. He also had, it was a Cessna, some aircraft. So aircraft apparently have very, very long life. Like you can use them for hundreds of years if you maintain them well. So, but a lot of these companies will always rent. But they'll rent so long that they're almost consuming the useful life. Think about it, no? And it's such a smart thing. If I don't want to bring an asset on the books, for example, this office. Now we bought it, but if I wanted to keep FinTree's balance sheet lean, what we could have done is we could have done a 99-year lease. You know? So accounting standard says no. Treat it as if you're buying the asset by taking a loan. Okay. Now, I told you there are 4 scenarios for accounting for leasing. Operating lease, finance lease, IFRS US GAAP, IFRS US GAAP. Good news for you.
Except one thing.
रुक जाओ. Under IFRS, operating lease and finance lease is same. So which means as far as IFRS is concerned, I don't even have to worry about operating or finance lease. It's the same. Under US GAAP, the accounting treatment that we've learned of finance lease is going to be exactly same, which means 3 out of 4 sections, we follow exactly the same method. Which ones? IFRS both, US GAAP, finance lease. In US GAAP operating lease, if you just remember these 2 small changes, then you don't need to do the whole table. Just 2 changes. What? On income statement, we had 2 items. Which 2? Depreciation and interest. On income statement, you take a total of them combined and just show them as rent, lease expense. Otherwise, everything else is same. Balance sheet is same. The accounting logic is same, but for presentation purposes, combine depreciation plus interest, show it as rent. Okay? On the cash flow statement, we made 2 payments. Which 2? Interest and principal. So you take interest plus principal, and in the cash flow statement, again show it as rent as an outflow from CFO. So if you remember just these 2 changes, then all the 4 subsections are done. Accounting for leases is over. Kanji. Yes, the amounts are not changing, no, just the classification changed. Question that someone asked me is, will the balance sheet match? Yes.
But the difference between the value of asset and the value of lease liability is different.
Oh, you mean here? You mean here it will be different?
Yes.
ये यहाँ पे ROU और lease liability is not same इसलिए, but वो बाकी effect जा रहा है ना सब जगह पे. This is just the partial impact, no? We have other items also. We have depreciation, interest expense. So balance sheet will of course tally. See, every item balance sheet tallying is very logical. Once you create an asset or liability balance sheet tallied, Now I'm reducing the ROU. So I'm reducing my debit here. But on this side, I'm showing expense. Expense will reduce equity. Balance sheet tallied. Think of lease liability. Now lease liability is reducing because I'm paying principal. So liability reduced, but on the cash side, that amount I paid, done. So balance sheet always tallies. कोई problem ही नहीं है. Am I missing on something? Depreciation expense is equal to principal repayment. That's correct. Who is saying that? Ritesh. That's correct. Ritesh and Sneha. You're right. Okay. Now, let us do accounting for leisure. Let me just double check on the juice notes if I have covered everything for you. What is a finance lease? What is an operating lease? You can look through it. It's fairly straightforward. Okay, I think we're done. Let's go to leisure now. How would you do accounting for leisure? Okay, here we go. Ready? The accounting will differ a little bit for finance lease versus operating lease. Okay. How would you do accounting for finance lease? First, you will de-recognize the leased asset. Why is that? Because even in finance lease, you're thinking that I have not leased my asset, I have sold the asset. So when I said to बेच दिया, the moment I sell the asset, then I don't need to keep it on my books. So on balance sheet, let's assume I had a PP of 100. I decided to lease it. Present value of the lease payment is, let's say 105. So step number 1, I will say PP sold. PP sold minus 100. This is 0. Okay. Second, I will create a new asset which will be called lease receivable. Of how much? 105. But then obviously I'm reducing 100 but adding 105. So 5 रुपया कहाँ पे add होगा? So in the P&L, my asset was 100 but I sold it at 105. So I will create a profit of 5. Profit of 5 will go to equity. So balance sheet will tally. Make sense? So step number 1, de-recognize the leased asset. Record any gains or losses. Lease receivable is nothing but present value of lease payment, which 287 or whatever number we got. क्या number आया था हमारा? 379. Now, on the income statement, what income will you have? You will have interest income. On the cash flow statement, whatever money you receive, operating inflow. Now, this actually is not correct. I was having conversation with my team today, but that's what CFA curriculum says. We also check the errata. The actual accounting standard says something else, so we'll stick to this, what the curriculum says. So this will be operating inflow. Then, how about operating lease? Under operating lease, balance sheet asset will remain. Because in operating lease, you're thinking now from the lesser perspective कि asset मैंने बेचा ही नहीं है. Income statement, that lease income is my straight line income. You know? Plus, I will have depreciation expense and cash flow, the whole thing will be operating inflow. Let's see if we can recall. I'll give you an easy way to think about it. When we are accounting in the books of leisure, we have to think whether it's a finance lease or it's an operating lease. The accounting treatment is same in US GAAP and IFRS, or almost same. If it's a finance lease, you have to think that I have sold asset on credit. That's your thinking. If you think like this, entire accounting will make sense. In operating lease, you have to think that I own the asset. I own the asset. I have just given it on rent. I've given it on rent. Okay. Now, if I've sold the asset, what will happen? Step number 1, I have a PPE of 100. I sold it, so I don't need to keep it at books anymore. But because I sold it on credit, I will create a lease receivable. Lease receivable, in our example, we kept it at 105. This is my balance sheet treatment. What will happen on income statement? So, income statement, initially I will have a profit of 5 rupees, okay? But income statement of year 1, subsequent year, what will be my income? Interest income. I'll have whatever interest income I get as per the amortization table. Will I have depreciation? No. Why is that? Why will I not have depreciation? Because you are selling the asset, तो आपके पास क्यों आएगा ना depreciation? So I will not have any depreciation. In the cash flow statement, every month I will receive what? I will receive installment. No. You will receive that 100, no? Every month you will receive 100. That entire installment we have to show where? Inflow in CFO. So this is your treatment on income statement, balance sheet and cash flow statement. Have you understood this? Should I repeat again? चलो आप बताओ. If we are accounting in the books of ledger, it's a finance lease. Step number 1, what will we do with PPE? Make it zero. Make it zero. Any other asset will create? What? Lease receivable. Difference between PPE value and lease receivable, what will that be? That would be my profit. And whatever that profit is, profit will go to P&L, eventually it will go to equity. Then on a ongoing basis, after that subsequently, every year on my income statement, will I have any impact? Yes, what? Interest income. So 100 में से कुछ part जो interest income होगा, some part of that 100 will be interest income, that's in my P&L profit. How about cash flow statement? It would be the whole 100 rupees that I receive will directly go to CFO. That's it. Done. That's your accounting for finance lease under both the books. Easy? Now, finally we go to operating lease. Operating lease, I have to think that I still own the asset, but I've given it on rent. Okay? So step number 1. How about PP? Will it remain on my balance sheet? So PP will remain on balance sheet. Then step number 2, tell me. If I have PP on balance sheet, every year on income statement, what do I need to do?
Depreciation.
I have to charge depreciation. But every year I am also going to receive 100. What is that? Rent income. I'm renting the asset, right? So every year I'll receive rent income of 100. Then cash flow statement, every year I'm receiving 100 as rent, that would be CFO, which is rent received of 100. That's it. That's your accounting in the books of ledger. So let's go back again here. Okay, these are the different situations we saw. Now, if you remember, under IFRS, operating lease plus finance lease is same. Under US GAAP, finance lease is same. So these three technically are the same methods. And then under US GAAP, the operating lease is little bit different. Okay, let's think of these three scenario. These three scenario. First, what happens on balance sheet? Time 0. We are in the books of leasing now. Equal amount of ROU, equal amount of lease liability. ROU और lease liability कहाँ से आया? ना present value से आ गया ना? Present value of future payment will give you ROU lease liability. Let's think of what's happening on ROU over a period of time on balance sheet. Depreciate. What will happen to lease liability? Amort बोल से उसको through amount table we will reduce it over a period of time. So balance sheet is over. What's happening on income statement? Depreciation and interest expense, right? So we'll have depreciation on straight line, interest expense as per amount table. What's happening on the cash flow statement? Huh? Principal payment and interest payment. Principal in CFF, interest in CFO. You know, both of them will get from the amount table. Now, operating lease under US GAAP is almost same, except the whole expense on your P&L is a rent expense, and the whole cash flow on your P&L is rent cash flow. So everything in CFO, everything is a rent expense. Otherwise, everything else becomes same. Then accounting in the books of ledger. Now, either it's operating lease or it's finance lease. If it's finance lease, for both US GAAP and IFRS, step number 1, de-recognize PP, gain or loss in P&L. Step number 2, create lease receivable as an asset. Okay. Then on income statement, 2 items. Which 2?
Profit and interest.
Every year I will receive interest. Profit तो हो गया ना? Profit is one time. उसके बाद every year I'll receive interest. Second, on income statement, what am I missing?
Depreciation is not there.
So every year I receive interest. That's the only item. Third, now we go to cash flow statement. Every year I receive 2 items. No, what 2?
The
Principal and interest. But both of them we combine into CFO. So पूरा के पूरा 100 रुपए का जो inflow आएगा, that will go to CFO. And if it's a operating lease, then asset will remain on my books. I will charge depreciation. 100 रुपए का rent आएगा, which will be my income, rental income. It will be cash flow from operations. Done. अब कल सुबह कितना याद रहेगा तो भगवान को ही पता है ना. ठीक है. Now let's go and do pensions. Ready for pensions? सिर्फ 11 ही बजे अभी तो यार. But I'm proud of you. There are 94 people still online. It's iPass. Should we do iPass? Okay. Can you please online? Can you please type on iPass? आपको दिख रहा है वहाँ पे? Yeah, iPass or iStruggle. Let's see where are we. iPass or iStruggle online. है एक तो है. एक I got 1 iPass. Let's see if we get more. Okay, 2 है 3 4 5 है. People are still listening. There's one guy with iStruggle. I pass out. I struggle. There's someone with I struggle spelled as ISTRUGGAL. मेरा जोश तो ठीक ही है अभी यार.
नहीं, actually he's struggling.
I tired. है active तो है. It is there are at least 30-40 people are active. Nice. Deepak from Sonipat still here. Sure. Deepak ensured I notice his name. Pension. There are 2 types of plans. A DC plan and a DB plan. DC stands for defined contribution. ये रितेश हाउस द जोश हाय सर खुद ही बोल रहा है. अच्छा यार ब्रेक अभी इसके बाद देता हूँ ये खत्म करके. हाँ इसके बाद ब्रेक नहीं जाने दो. आफ्टर दिस वी हैव टू डू टैक्सेस. पूरा के पूरा अकाउंटिंग फॉर टैक्सेस बाकी है. एंड देन वी हैव टू डू दोस फाइनल 2 रीडिंग्स. 3 LMs.
टैक्स का 2 ही है ना. अच्छा, अरे बाप.
चलो ये तो खत्म करते हैं, बाद में डिबेट करेंगे. Let's finish this. We're very close to this. Everyone focus. It's fun. बता रहा हूँ भाई मैं. शुरू करता है. DC stands for defined contribution. This stands for defined benefit. Defined benefit. Defined contribution, defined benefit. Now, both of these are pension plans. The way these pension plans work is, my guess is on the exam you're looking at some question on this side. Okay, on the DB side. What is DC plan? I am an employer. Okay, this is employee. What I'll say is, every month I'm giving you salary of 100 rupees. Along with that, I'll make a contribution of 5 rupees. Every month I give you salary of 100, I'll give you 5 more. This 5 you put into a pension fund. Okay? You decide where you want to invest. Whether you want to do equity, debt, that's your concern. My responsibility is only to the extent of giving you those 5 rupees. I'll make the contribution. After that, everything else is your lookout. If that money grows sufficient for you to take care of your retirement, I'm glad. If it doesn't, it's your problem. That's your defined contribution plan. Defined benefit plan, on the other hand, is extremely complicated. I am an employer. This is employee. I will tell my employee that, listen, I will pay you salary of 100. On behalf of you, I will put 5 rupees into a pension asset. I will take the responsibility to ensure that the money grows. And I promise you that once you retire, then every month I will pay you some X amount based on some pre-calculated formula. Till when? Till the time you are alive. Right? So if you are alive for 30 years, I have to pay more. If you are alive for 5 years, I have to pay less. That risk is on me. That is referred to as a defined benefit plan. So you tell me, which plan do you like? Benefit or contribution?
Contribution. As an employer or employee?
I generally ask this just to check what's your mindset. Because people who say contribution are generally our employer mindset. But people who say benefit generally say employee mindset. As a benefit, as an employee, I love the benefit plan. It's fantastic, right? Because then they're going to take care of me as long as I'm alive. Typically, in a lot of those pension plans, your pension benefit comes out to be almost 50% of your last salary. So imagine you retire as a CEO, your last salary was, let's say, 5 crores per annum. Your annual pension will become 2.5 crores per annum till your death, which is a nice pension to have. Now, how do you do accounting for this? Contribution accounting is very simple. There is no asset, there is no liability, there is only expense. Of how much towards pension? 5 rupees. Finish. End of the story. Kuch jhanjat nahi hai. That's your defined contribution accounting. How do you do accounting for defined benefit? It's probably one of the most complicated, insanely complicated accounting topic. You create a plan asset. Plan asset means that 5 rupees that you are investing. Generally, most of the companies will hire a fund manager. That fund manager will keep on investing that money. You also create a liability. That liability is referred to as PBO. PBO stands for Present Benefit Obligation. Now, this PBO is calculated using some very complex mathematical structure. A lot of times, actuaries are doing it. Okay, they specialize people in calculating this liability. But in level 2, we will learn how that PBO works. Okay, but PBO, very loosely, the way to think about is you make a ton of assumptions. Okay, that my employee will work for 30 years, then he will live for 40 years. Then how much pension will he take? You take present value of all those payments. That's your PBO. Now, an example is solo. Under both IFRS and US GAAP, balance sheet treatment is same. balance sheet treatment is you show only the net of the two amounts. Net of the two amounts. Done. Under both IFRS and US GAAP, you show only the net of the two amounts. Net of the two means what? Imagine aapki asset thi, imagine your asset was 100 and your liability was, let's assume, 80. Then on balance sheet, what will you show? You will show pension asset worth 20. If your asset was 100 and if your liability was 130, on balance sheet, what will you show? A liability of 30. So as far as balance sheet is concerned, it's an easy accounting as long as you know what PBO amount is. Okay? Then where does the complication come in? It comes on income statement. Now, how to do accounting on income statement? So there are 5 or 6 different components of cost. There is something called as service cost. Then there is something called as past service cost. Then there is an interest expense. Then there is interest or investment income or interest income for simplicity. Interest income or investment income. Then there is difference between actual income versus expected income. And then there is
Gains and losses or
assumption changes, so which we typically call as actuarial changes in assumptions. So ये 6 items हैं. Okay. Now, under IFRS, yeah, this thing is called remeasurement, the whole thing. So, under IFRS, current service cost goes to income statement, past service cost goes to income statement, income statement, income statement. This thing goes to OCI. Under US GAAP, service cost, income statement, past service cost, OCI, income statement, OCI. I think if you, so from an exam perspective, if you know this, that on balance sheet we show the net amount, you're okay. If you're highly motivated individual and you feel that I want to do the income statement as well, maybe you can spend some time on this chart. What is service cost, what is past service cost is kind of complicated. I don't think it's worth time in the crash course. For that, we'll have to kind of redesign the whole pension calculations. From memorization perspective, if you need a trick, the biggest difference is actually just here. If you think about it, in IFRS, everything is going to income statement except these 2 items. These 2 items are typically referred to as remeasurement. Okay? Which 2 items? Actuarial changes, difference between actual versus expected income. Whereas US GAAP, the second item is in OCI, otherwise everything else is exactly the same. That's it, that's your pension. अब और एक छोटा सा चीज भी बाकी है, वो भी कर ही लेता हूँ. How do you do accounting for ESOPs? How do you do accounting for share grants? Just 2 concepts. ESOPs means what? Employee stock option plan. Okay, so imagine you hire a nice new employee. Okay, this employee, you give them 100 shares, 100 ESOPs of your company. ESOPs means your employee can buy shares, but you tell them a condition hai. You can buy my shares at 10 rupees. Okay, now my shares would be worth a lot more, but आपको मैं 10 रुपए में दे दूँगा. But condition is, you start working today and you work for me at least for 3 years. Okay, this is referred to as a vesting period. If you don't work for me for 3 years, you are not eligible to receive those ESOPs. Now, how to do accounting for this? Very simple. Accounting standard says that you take these ESOPs, okay, and you apply some fancy, ESOP is nothing but an option. And we've learned in derivative class that I can use some model like Black-Scholes or binomial model and I can value the options. So I will take these options, I will value them, and let's assume valuation came out to be 600 rupees. Okay? Then I simply need to amortize this ESOP cost. Please listen to this, it's very simple. On a straight line basis, every year my expense is going to be 200, 200 and 200. That's it. Let me repeat one more time. You gave 100 ESOPs to your employee. You told them your vesting period is going to be of 3 years. Vesting period मतलब 3 साल काम नहीं करेंगे तो ESOP नहीं मिलेगा. Only after 3 years you've truly vested, those ESOPs are vested to you. Till then I've given you but you can't use them. Now, how to value these ESOPs? You use some option valuation model, figure out a fair value. Once you figure out a fair value, simply amortize that fair value of options over the vesting period of 3 years. So you show an expense of 200, 200, 200, done. That's it. Is that okay? But what if employee does not exercise the option? Or what if employee does not have an intent to exercise the option? Does not matter. What if the share price goes up after that quite a bit? Does not matter. Okay. What matters is what was the fair value of what? Options. On which date? On the date of granting. Grant date. So I just calculate the fair value, simply amortize that. That's it. Now, how will you do with share grants? Almost same. Okay. That I will give you, instead of ESOPs, I'll give you 100 shares of my company. But for that, you will have to work for me for 3 years. Fair enough. What is the value of my shares? Let's assume one share is worth 100. So total value is 10,000. Every year expense of 3333. Done. So calculate fair value, amortize over vesting period. आसान है? Okay. हो गया.
Analysis of income taxes.
परसों क्या है शेड्यूल में हमारे?
Corporate issues plus equity.
And equity, yeah. Okay. I think what we'll do is on 8th of Jan, we'll start a little early. Will you be able to come early? I'll have to anyways do an extra session. I don't think I can fit it in one day. Okay. How about tomorrow online for remaining 3 topics, 7 to 10 p.m.
Offline both?
Would you come offline?
Yes.
ठीक है. So tomorrow here's the revised schedule now. So we'll have, this is exactly what I feared when my team and I discussed this. So tomorrow, which is 7th Jan, 7 to, तो थोड़ा जल्दी आ जाओ फिर एक काम करो अगर ऑफलाइन आना है तो. So we'll do 6 because then it's convenient for everyone. So 6 to 9 p.m. This will be FRA part 2 now. ठीक है? Then we'll take our time with taxes and the DuPont formula towards the end. Then on 7th, sorry, on 8th, instead of starting at 4, we will start at 2 p.m. Because now I'm thinking I underestimated the time. So we'll start at 2 and then we'll finish jab tak chale tab tak. Okay, done. Thank you very much. I'm proud of you for staying back. I know it's not easy, right? Being able to absorb so much of content in such less amount of time. So proud of each one of you. Let's have a round of applause for all of you. Okay. Thank you. I'll see you tomorrow, 6 p.m. मिस्ट्री रहने दे या मिस्ट्री नेक्स्ट क्लास करते हैं याद दिलाओ करता हूँ हाँ स्टॉक वाला Ritesh, under OCI, under US GAAP, yes. Under IFRS, no. Thank you, Nile. You know what, let's keep that stock on hold. We'll discuss that on tomorrow's class. Thank you guys, bye-bye. Naitik, no. This video is already uploaded, it's there on the YouTube, you can watch it whenever you want, Himansh. On the system, it will take a few days for editing. Bye-bye. Thank you, Abhimanyu. Good night, good night. Good night, bye. Good night.
Bye, sir. Good night. Good night, sir.
Good night. Good night.